situated here. What up, you guys? Good morning. All here to give us a D and send the markets down. Yeah. Yo, what's up, guys? Good morning. Double checking. It's just me. DD table looks like it needs to be restarted. We're working on the process to automate it so that it at 5:45 it actually doesn't it updates overnight, but we actually are automating it to update at 5:45. So it looks like it didn't populate anything, so the process is down. I'm gonna have it restarted in just a little bit. So before market opens, we should have our bands. Is that just me or is that everybody? It's just a question. You guys have the same thing on your platform? What's up, friends? Good morning. Welcome to the live show. I'm so excited. I am now 116K up with my Tradeify accounts. Killer like performance. I'm doing all the good stuff I've been wanting to do here. Hopefully go live this month. That's what I want to go. That's my goal. Going live, moving forward. Going live, moving forward. I'm gonna get live with every major prop from out there. That's my goal. Super excited to do that. So thanks for tuning in for the journey. Good morning, Ransom, Patty, Felipe, Jason, ASL, Simon, Pata, Christopher. Hold on, maybe I can't see. Mike, Icewild, Lee, Kevin, Boulder Bullish, Future, Hydra, Moss, Saba, TSO. I was gonna call you Saba. Todd, Little Options. What's up, Options Agent? What's up, Dan? What's up, Morris? What's up, everybody? Frank, Chad, Market Buying Tech, Elaine. Good morning. Good morning, Peter D, Kiter, Chris, Linda, and Justin. What's up? Good morning, everybody. Good morning, good morning. Through Malesh. Sorry, good morning, you too. Becoming crazy famous, to be honest. He is the best and humble, helps other traders. Brother, I appreciate you, man. And come from you means a lot. Newer face to the stream, and you've already won 2 of our contests. That's kind of like really nice. You walk into a stream like, start watching, and then you win twice. It's kind of nice to see that. All right, love you guys too, man. Y'all make my day awesome. Y'all make work fun. This is why I love doing this. Okay. All right, let's get ready to get going. Question: is the DD table down for you guys as well, or is it just me? Just me, right? Or is that all of y'all? You didn't publish last night. Okay. Yep. All right, I'll have him restart the process. Hold on. Let me send my message. Hold on 1 second. He's working on it right now. And we're having it. This is the project we're working on between now and when we got our overnight dynamic model done. Okay. Quick question. I know this is going to sound really funny. Does somebody know what the DD numbers are for S&P for NASDAQ? Can you tell me what they are? Because I don't know them off the top of my head. You remember them or you track them elsewhere? Can somebody spit the numbers out for me? That way I can draw automatically. Or if you give me the actual DD numbers or the risk interval itself. Somebody doesn't mind from the group. We should get that. I'm going to put the announcement. How much is our setup? It's 159 a month, but it's 99 first month to try it out. And you get our own version of TradingView here. ES up is 60.5. 217. That's right. That sounds about right. Thank you, man. Oh, Biotech, dude. You're awesome, man. I mean, Ransom, you guys are awesome. All right. ES is 554. I'm typing it for the group. 5675. Can you do the NASDAQ for me real quick, bud? I love you guys. This is what's awesome about it. I'm typing in the announcements for everybody. Thank you. Jod should fix everything in a little bit. 19639. Okay. Thank you. All right, let's get ready to get going here. Okay, Fed day today. Got a lot to talk about. Let's draw them real quick. Okay. All right, so S&P down is 5554. So how about that news we had yesterday, right? Where the market just kind of went straight up, and in Discord, I was calling it bullshit news. Now, let me tell you something how I knew that. The market's basically almost back to where we started without it. I mean, it's still up a little tiny bit, but 56.75. Yep. Cool. And then we're going to do stack. Man, I appreciate you giving me those numbers, by the way. You guys are always on point with this. 20,0064. 20,000, sorry. Then we got 19,639. Perfect. Okay. This is the pre-market setup. I do this every day, getting my pivots ready to go. We're in the process of building a prototype to automate. First of all, these green lines are automated. Just for today, it seems to be down. Well, the process is down, so we're updating something, and by the next day or two, it should be automated. And then we get a prototype for the automated overnight dynamic. And that's going to be automated on the page as well, so I don't have to do this anymore, which I'm excited about. Okay, so MHP is 725. And so what we did was the market, right? We kind of like at the open bounced them really hard on this news that China and US are finally going to meet, right? So think about what all this means, right? Let's talk about the history of the market. Let's go back in time a little bit, if you may. So everybody get your charts out. We're going to go on a little bit of a journey. I'm going to show you what's going on. And welcome to the stream, everybody, all the friends, all the new faces. I have a quick question. How many people here, this is your first week to the stream? By the way, first day here. So give me 1 second. I'm looking at. Okay, I got a surprise for you guys. It's your first time here. Where these guys go? What am I doing here? Hold up. I'm getting my numbers right before I give you guys the announcement. Hold on. Okay. Okay. All right. So, new poll and new giveaway. Let me double check this really quick. Wait, is it? Which credit? How does this work? Oh, okay. Let me see how this works. Credits. Oh, you get cash credits. Okay, well, we'll figure. We'll do this later. Okay, is a credit like a gift card? They can spend on whatever they want. So, as you guys know, we're kind of like going around town talking to all the prop firms, and we got special arrangements with a lot of our awesome partners out there. We only work with the best of the best prop firm, and every prop firm now wants to work with us. We're getting so big. And so let me tell you something neat about it. I've got prop firms messaging me all day, asking me to do this and do that and do this and do that. And instead, I'm in the boat of I'm going out and talking to them and saying, hey, my name's Matt. And they're like, oh, Matt, we love your show. Of course. Yeah, we'd love to work with you guys. You guys are the giveaway stream, right? I'm like, yeah, they're like, we love doing it. Well, let's jump in and get in there with you. So, you know, lately I've been trying to look for the best of the best prop firms and seeing who is out there and studying what they're doing. But we got 19629 Biotech. Okay, thank you. Let's get this going on here. So with that being said, we do giveaways every single day on this stream, and we do more giveaways on this stream than any other 2 streams probably combined now. 19629. Thank you. All right. You just saved us. So introducing the futures desk is offered to give us $1,200 worth of credits to give away. So it's basically like a gift card. So I'm gonna give them away, and I'm sorry, hold on. Yeah. So I'm gonna give them away in $400 chunks. So we're gonna do 2 giveaways. Essentially, you can buy like 2 accounts or something with that. So we're gonna do a giveaway with these guys today. And maybe throw in a Tradeify if we get big enough. You know, so every time we get 500 plus viewers, we always do like a Tradeify or something bigger. But we have right now 60 accounts that we give away every single month, not to mention the extra ones I buy. And I go out there and buy you guys a Tradeify straight to funded pretty much every day that we get past 500 viewers. So we've been crushing and getting like the 650, 800 is our, 650, 680 last time. So we're getting bigger and bigger and bigger every day. So let's talk about what we're going on in the morning. And yeah, we're going to do a Funded Desk giveaway, 2 $200 credits. So we're going to give away $400 today for you guys. Plus, you know, maybe like $300 for Tradeify. So welcome to the stream, you guys. My name is Matt, full-time day trader, CEO of the Rock Scooter trading platform, which you see on the screen. And right now, I'm doing funded trading challenge with Tradeify. With Tradeify, I am sharing you guys. Remember, I'm fully transparent here. You guys see all my broker statements, all my results, everything. These are the stats on my Tradeify account. I'll show you guys every single day. I have made current balance is $104,000 in this account. 76% win rate. This goes all the way back to March. So all through the Trump craziness and the bear market, I still maintain 76% win rate. That's why people watch me, because I have a very cool edge and a very cool gimmick, and it works, as you see, 75% of the time. There's $12,000 in payouts that I've received from accounts that have gone bust. So every time you see this number, add $12,000 to it. So the total is $116,000. Roughly when I get $80,000 of payouts, that's when I cap out with them and they push me to live. So my goal is with Tradeify, because I've already gone live with Elite Trader Funding. Now my next goal is to go live with Tradeify. Then after that, I'm going to try to get on the big board with Top Step, get in their first place slot. I'm going to try to become Tradeify's #1 trader on their big leaderboard. I'm going to try to be #1 across the board. And you guys will see me push it till I get there. So yeah, so this is the new goal. So Tradeify, once I get to $80,000 of payouts, they'll take whatever's left and roll me in the live. So hopefully I can get 5 $15,000 accounts with them, because that's the max they do. So wish me luck. I'm super excited to do that. And welcome all the new faces. So I mistyped the poll. My bad. That's a cool name, though. Oh, wait, hold on. Not 200, not 200K account anyways. That was wrong. 2 $200 credits. I'll answer your question in just a minute, Zach. All right. DESK. All right, guys, chilling. So while we're waiting, just letting you guys know, pop in a quick set of ads for our prop firm partners. You guys know the more you use our code, the more accounts to give away with us. We've gotten so many prop firms to give us accounts to give away because you guys are doing so much business with them. So the more you guys spend over there, the more we get to give away. And then, of course, I go out there and buy you guys funded accounts to Tradeify, and I give away a funded account almost every single day that we get 500 viewers. So that costs me like $300. I take my affiliate money that comes in and I turn around and I spend it on you guys. I don't need it to buy me a Lambo. Use code Rocket Scooter everywhere in the world. And code ROCKET for FundIndex. FundIndex is the one oddball of the group for codes. And so you have to use Rocket for those guys. All right, back to it. Okay, DD bands. DD band is a trick that is one risk interval lower and higher from yesterday's Globex futures close. And all it is a level that shows where market structure is in futures. And that market structure is based on where futures can deviate from the underlying. It's a whole thing in the CME group's protocol called SPAN. What SPAN is something that calculates futures margin requirements for clearing firms. And so margin requirements allow you to know how far up and how far down futures can deviate from the stocks until structure is broken. Think of it like a string or a spring that connects futures to the underlying equities. That makes sense. So outside of the band, this is what it does. I'm going to give you a little cheat sheet to follow along. This is a part of my strategy. And on this little cheat sheet here, inside of these bands is where futures are going to be trading. 88% of days will close at the Globex close, which is at 5 p.m. 88% of days. So it's very rare that you break through these bands. The bands are calculated every single day. 4% of days will break above, 8% of days will break below. And that's what we look for. Inside of the bands, it's a nice, clean, easy day. I can long off of the band and short off of the band under these conditions. And I'll tell you when we get there. I can, outside of the band, there's no shorting on both sides. I buy dips down here. I jump in on highs up here. So this is the rule, and I follow this rule religiously. All right, so let me show you a cool example. Today, right? We had this bogus news event yesterday, and I tweeted this, which I was absolutely right about. I go, that's not a 10% move. You know, everybody was, we watched futures market open and then fly straight up on the news that China and the US are finally going to meet. You guys remember that Trump said he wanted to meet with China and work things out. I said, we're going to work things out with China. We're going to pause tariffs with everybody else for 90 days. And we are going to work out trade deals with everybody that wants to work out a trade deal with us. You guys remember that? Okay. So, but in the meantime, China's like, we haven't talked to these guys yet. And Trump's like, yeah, they haven't talked to us yet. We just want to. They want to work it out. We want to work it out. That's all it means. Now, the trade war last time around was the same thing. They want to work it out, but they really don't. And then that's kind of where we were, and the market stalled. And then we finally had news that said China's now going to meet. That's not real news, because what's going to happen, and they did this before, is the Wall Street's all hyped when that news comes out. Oh, they're going to meet and work out a deal. What happens is they get together, they argue and beat their chest. They run away from the meeting screaming like little kids, and then they go on social media and they blast each other. And this is kind of what's going to happen for a month or two, probably again, unless there's some magical fairy that's hypnotized both of them to go in there and play nice. They're going to go in there and beat their chests and walk away without a deal the first go around. And then after a couple of months of yelling at each other on social media, Trump's finally going to buckle. This is how it's really going to happen, because he can't afford to have the stock market crash on his term. He doesn't want that to happen. So this is where we are. Just because China wants to meet doesn't mean anything's going to change. They're going to meet, and if they work out a deal the first time, I'll eat my shoe. This would be the first time ever Trump and China have met and worked out something without any hiccup. So the fact that they want to meet isn't 10% news. And I saw people on social media like, this is the next move. This is the next 10% day. This is the next big one. Get in, get in, get in. And I'm like, I wrote in my Discord last night, I was like, watch this fade all the way back to where it started. And futures pretty much just faded almost all the way back to where it started. It's bullshit news. Not really real news. China wants to meet. Great. Market popped up. Some of our guys shorted off of the upper DD band. I didn't. I just basically watched it. So we're chilling. Got a video explaining which lines the market would potentially balance and other info about it. Yeah, grateful. We have an actual boot camp that we do. It's 20 whole days of learning our process and these styles for $20. It's $1 a day, and there's pre-recorded videos. You can watch a video on every indicator, and I'll give you the link for that. It's very cool, this boot camp that we do. And you can read, this is all the customer reviews. I had this already open, but you can read what everybody's saying about it. It's all like 5 stars, mind-blowing, you know, people say all kind of crazy stuff. Like astonishing, game changer, you know. Anyways, these are all the people who have gone to the boot camp. This is all boot camp customers and when they did it. So for $20, we have the world's cheapest and best trading course, period. Here's the link for it. Believe it or not. People here will tell you it's special what we got. There's a link. I'm typing it in chat. So that has all the videos you'd want. How long is your Tradeify 30 code valid for? David, forever. You can use that code everywhere. I came up with the DD bands. So I was researching the CME group and all the different things that they do there. And the CME group has a lot of protocols that creates information that controls the market. And one of the things the CME group does is set margin requirements. And I was trying to find ways to exploit the consistent part of all of that. As the CME applies rules basically for people to follow, brokers, market makers, clearing firms, that's a consistent part of the market. I said, well, if that's consistent, then we should be able to find indicators out of this. So I started reading a bunch of patents the CME group came out with, and I started getting inspired while reading them on creating indicators. The risk interval is basically based on margin requirements. The margin requirements are set based on the interval at which futures are likely to deviate from the stocks they're tracking, based on the way futures are used to hedge against, or the index, sorry, that is tracking. The futures are used to hedge against that and also speculate. And so there's a specific way that markets can move overnight without breaking that structure. Now, again, they take reportable positions. Everybody reports like I've got positions here, 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 and here. And then the CME group looks at those guys and they go, okay, this is where everyone's spread out. This is where the risk of the market is. You guys are hedging in this range. So therefore that range just got wider. Let me make margin requirements slightly bigger. That's how the CME group does it. And I go, well, if they give me the margin requirements, then I can reverse engineer that risk range. And that's what I did. How do I come up with something like that? I mean, I was a chemical engineer in my former trade, so we're designed to think like that. You know, how do I break this apart? How do I dig deeper, and how do I reverse engineer this? It's just kind of like how my brain works. And most of our tools are exploits of something consistent like that. And that's why my win rate is pretty high, because it's a consistent thing and not really like a price action indicator. That's how it works. Good morning, guys. Good morning, good morning, good morning. When reading monthly map, bull zone declining down, bear zone declining down, but it means bulls are accumulating, right? Right. There's more calls that are being in the money as time goes by when you see it sloping down like that. Correct. You nailed it, dude. So what that means is the bottom of the bull zone is sloping down. It means as time passes, you have more dealer calls in the money relative to puts in the money. So therefore the bull side gets stronger. Each day that goes by, you're deeper in the money of that liquidity right here. And it means there's more bulls. When the bear side slopes down, it means there's fewer bears. You nailed it. Or bearish hedging. Bullish hedging. The bands in NQ. Yeah, if you scroll up or go to the announcement Discord, Marco. Are the green line DDs? Did you change colors? No, the table is down. So I just manually did them. So I manually drew them. Yeah, the colors are different today. China stalling like last time. Mark Landers, you nailed it. Yeah, exactly. Exactly. How you doing, man? What's up, Mike? Good morning, Fletch. What's up, good morning? Isn't like what everyone else is doing. It's totally different, yeah. How would one trade in your platform been using X and a 50K funded? What I do is I trade off of pivots. So liquidity maps will come out. Example, if I'm trading NASDAQ and I got QQQ here, NASDAQ futures here, QQQ here. Okay. And liquidity maps show me where the flow is going to be based on certain pivots. I've got a blue pivot, an orange pivot, and zone pivots. In our rule set, we have, these are the major pivots I take. I have 6 really strong long pivots and 4 really strong short pivots. Get my drawing tool here. I can draw on the screen for y'all. Under ideal conditions, this bounces 90% of the time. This bounces 80% of the time. Under normal conditions, they're both about 70. This is about 90% of the time under ideal conditions. This is 92%. This is 92%, 96%. So basically, I look for these pivots, and this little algorithm that's going to print off to the side is going to show me where the flow is going to be with the most probable flow under normal conditions without there being like an event or news or catalyst or something. So we popped up right at the end of the day to about 487. QQQ's opening close to 41. And all I do is trade off of these pivots every day. And that's all I do, EV. So I'll show you how it works when the market opens. So kind of chill for a little bit, you guys. If you're new here at 9:30 in the morning when the market opens, just watch what I do. We have a pre-market setup that we look for, and every single day it's called greater market. So I'm going to put the words G and M right here, or greater market. We have 3 indicators that we look for that are going to tell us if the market's bullish or bearish. We can already tell pre-market. Now I'm going to tell you guys today, with a bump up like this, SPY is expected to be above MHP. So already we're going to be bullish because we were above MHP yesterday. We should be above MHP today with this little bit of a bump up. DD ratio, it's probably going to be greater than half, but remember, we had illiquidity pockets yesterday, guys. So it was kind of like fighting to stay above half, but let's take a guess. It'll be above half, and we'll change that a little bit. And then monthly maps are definitely bullish, but we'll revisit this when the market opens. So far I'm thinking market's already bullish, which is great. And so far I'm thinking, what bull pivots do I have? And we're going to look at the overnights, which I posted in Discord yesterday. The overnight is 725 at the bottom, and then we have a bottom DD band play off of that. So with these different setups, what I do is I'm looking at possible long pivots in futures from here, 725, and then of course 631 to go. That news that we had that China is going to meet with the US is absolutely bogus and bullshit. So it's very likely that we come down and we close out that news event to make it a non-event, because them meeting doesn't mean anything's going to change. They're likely to meet and argue like they did last time. Trust me, I was trading the last trade war. It's a bunch of fluff and a bunch of nonsense. It's not going to move up until a proposed trade deal comes out, because China and I have made a deal, right? Boom, market's up. Now Trump said and the reason it went up like this was he was talking and he said something along the lines of, I'm sorry, at the end of the day yesterday he was talking. We had a bump up here and he said, the biggest news event ever. The biggest announcement ever. It's as big as it can get. We're going to do it on Monday. And so I don't know what this announcement is. I wonder if you guys can guess. What is this big announcement Trump was talking about? And then one of the reporters asked him, it had to do with the trade war. He was like, well, I'm going to clarify, it has nothing to do with the trade war. So I'm curious, what could be that big on Monday that affects everybody? As big as it gets means it affects everybody. Is he getting rid of the IRS? Is he declaring himself emperor of the world? Is he making, like, Vance coin? You know what I'm saying? Truth coin? Like, what's he doing? Tax cut for everybody? He announced it like it's the biggest thing ever. Like, what's this guy doing? Is he finally getting hair plugs? Like, what's up? I was tweeting. I was like, him and Biden gonna have a golf tournament. What's going on? What are they doing? Yeah. Maybe the next pope. He's the next pope. He just declared himself pope. And who cares what the Cardinals? Who the Cardinals elect? He's I'll be pope. His insider buddies are already on the move. Well, his insider buddies are already pushing the market down. We've been trading sideways to down over the last couple of months, a couple of weeks. So it's kind of hard to say if that's going to be any kind of. Let me actually mark this starting point where we opened up, just so we can have the gap for futures. Let me mark this right here, the white line. So this is our futures gap in Nasdaq. Let's do it again for the S&P. Clearly, it being a non-event, I'm expecting that market to push right back down to there at the start. So today, baby, could be a sell-off day today. I'm going to be very cautious trying to trade this. We have FOMC at 1 o'clock my time. So we'll be streaming at FOMC, so you guys chill here. I have this killer strategy for FOMC. I always crush it on FOMC. And I have a whole way that I do it, and I'll tell you guys how I do it. So be here for that. I don't know if we have an impact line somewhere in here. Yeah, we already tapped it. Okay, cool. So yeah, this is rushing out to be like a non-event. And I'll tell you guys the secret of FOMC and how to trade it. It's different than what you thought it would be, trust me. You know what the strategy is? Don't trade into FOMC and you'll crush it every time. Wait for them to talk in the press conference and let him push it to your pivots and just reverse it. Very rarely is Powell going to do anything that's going to create or reverse it or jump in on it, basically, wherever you get it. Powell's going to create volatility, but it's not going to change anything. We're not going to get rate cuts at all this year. I don't think we're getting any rate cuts, despite what the dot plot says. The way things are going with the trade war and the uncertainties, there's no reason to cut rates, period. So we're basically stuck in this environment that we're in. So we're going to have like a kind of a non-event. And I think the idea that the market is expecting good news and doesn't get it, we might pop and rally very quick on FOMC and then fade out and probably sell. This is my guess today. Remember, this is a guess based on nothing but just guess. The market's looking for some kind of news. And I think that a non-event is expected and the market's going to overreact because it's looking for something. And I think whatever direction we initially go, the market's going to reverse the other way because people are looking to move right now. There are shorts looking to get out. There are longs looking to take profit. Everybody's looking to move. So I feel like today's going to be the day where it moves one direction and then flips the other way while people finally get a chance to behave. This flat market is just sitting there burning everybody's theta. So I feel, I'm talking about those days where the market just moves very rapidly on FOMC one direction and then it flips and goes the other way. So I'm starting to think that I'm not going to trust much. If I go to a big strong pivot, I'll probably try to reverse it. I don't think the FOMC is going to really create a direction. I think it's going to create some volatility people are going to react to. Usually these wound up flat days kind of just build up a lot of pressure and people are kind of waiting for the first sign they get to do what they wanted to do anyways. What's up, Evan? What did you say? Even under stringent rules, I traded appropriately and grew these accounts, and in the end, Apex denied your payouts. Apex denied your payouts? No way. Oh, wait. I would recommend walking away from Apex. You can do everything right, and it will still refuse to pay you out. Also, it can deny you for anything now. Is that an email they sent you or whatever? I'm going to tell you, dude, nothing personal against Apex. I've never used them, but nobody here uses Apex anymore. Everybody here that used Apex has either moved to Take Profit or Tradeify or FundNext. So we get better deals with them, better accounts, and no payout denials. I've personally been using Tradeify since February. I've never got denied a single thing. It's automated. I get approved in 5 minutes usually. So I would say Apex is like your cheap discount prop firm for new traders that won't spend a lot of money. But with trailing drawdown and with all the payout denials and subjective payout rules and stuff, it's kind of like, we should learn our lesson and avoid it. Nothing personal against them, but there's so many better options out there. But sorry you got denied if that's what happened. Grab your snacks and pack your bowls. Love it. Purple tie equals long, blue tie equals short. Okay. I like that. That's the rule. So Jay Powell communicates to us with the color of his tie, if you guys didn't know that. Wait for the move. First move between 2 to 2:30, then play the reverse at 2:30. Reddington's on it. That's what you do. Yeah, like the announcement, we already know what the announcement's going to be. We can always guess the announcement. We almost always do. If you don't know what the expectation is, I'll teach you guys something. You go to something called CME Fed Watch, and CME Fed Watch, just Google that, FEDWATCH, and you'll get this nice little chart which shows the target rate probabilities based on Fed funds futures. The probabilities can be calculated based on those futures prices. A futures contract you can trade that's betting on the probability the Fed is going to change rates or not. And about 97% chance we're going to have no change, and 3% chance we'll have a change. So it's expected that nothing's going to happen. Which, of course, nothing's going to happen. Jay Powell can't change rates. There's no reason to do so. With possible higher inflation due to tariffs, the changing of rates, all it does is when you raise rates, it de-incentivizes participating banks to lend money to borrowers. So they basically deposit their money with the Fed to get a bigger return, and therefore it destimulates credit, and then therefore, or lending, so therefore it slows down the economy. And then cutting rates has the opposite effect. It forces banks to lend out money to other banks and other borrowers, and therefore it stimulates the economy a little bit. So that Fed funds rate, them stimulating the economy in the middle of inflation, well, stimulating economy creates further inflation. The more stuff we buy on credit, which is money we don't have yet, the faster we can drive up prices and create more inflation. So Fed's not going to really cut rates with the threat of inflation being there. We're not at the 2% goal yet, and tariffs are going to make it even worse. If you guys saw those Michigan expected numbers, that inflation number was like expected to be like 5% in 1 year, and that's basically very, very far from the 2%. So if the tariffs stick around, we're not going to get rate cuts for years if the Fed stays to its 2% policy. So in the midst of quantitative tightening, even though the Fed's balance sheet roll-off is slowing down, the roll-off rate is slowing down, we're still in quantitative tightening. So the Fed is not offering any assistance to the market. And I think, Donald Trump trying to pressure Jay Powell again like he did last term. If you guys weren't trading last term, I'm going to give you guys some information. The last time Trump was president, we're going through it all over again. This is repeat. This is almost like a storybook that if you remember trading, 8 years ago, it's exactly the same thing. It's so crazy how easy it's playing out. Market falls and falls and falls and falls and crashes. Trump says we're going to fix things, and I buy calls. I made $50,000 reversing the market in calls because it's the same story. It's the same thing all over again. My memory serves me right. Now, I'm going to tell you, they're going to get together and meet. They're going to argue. They're going to come up to very little conclusion, and they're going to walk away and probably still yell at each other for a while and threaten each other with bigger tariffs. And the market's going to be volatile for a little bit. And it would be like the pot of gold at the end of a rainbow gliding over there on a unicorn. If these two knuckleheads come out of that meeting with any kind of resolve the first time, they're the two most stubborn men in politics. Two of the most powerful men in the world, and these guys fucking do not budge for anybody. And so what's going to end up happening is they're going to yell at each other for a while. And if they come out of that meeting with somewhat of a resolution, the market's going to rally pretty hard. If they come out of that meeting with no resolution, the market's going to sell off pretty hard because it's the only news that we have in the market right now. Everything else in the economy is good. Nothing in the economy looks bad. Inflation based on tariffs, and once the tariffs go away, the inflation just drops like a rock. GDP was negative, but only due to the tariffs. So that's it. All the other data out there looks really, really good. Oh, market's opening in a minute. All right, let's get ready to go. I'm looking for long dips to buy, lower DD band, and of course at the MHP levels as well. So we wait for liquidity maps to come out. Within about a minute, I'll have my map to tell me what the market's going to do. I'm in no active trades right now, and I'm waiting for the market to basically undo that noisy event that we're going to rally based on Trump and China are finally going to meet. That's not a rally. The first goal is we're going to come through and close that gap out, 56.08. Did Powell cut rates last time because Trump kept complaining? I think he did cut rates one time, if I remember correctly, during all of that. But he also was like, it's not because of Trump. He held out. And Trump basically was bullying him. And Powell would stand his ground. And basically, when people would ask him, what about the president and his pressure on you to cut rates? And he goes, well, we don't follow any presidential or political. He says, basically, we don't follow any political pressure. We do our job as intended. So basically, he was like saying, fuck off, Trump. We don't care what he says, which is good, man. My boy Powell out there standing on his ground with both his feet firmly planted. I like seeing that, which is good. Hopefully this year he has the same approach. He shouldn't be cutting rates, and I'm going to tell you he shouldn't be cutting rates. Ooh, ooh, ooh. So liquidity maps that we have today, very simple, you guys. We are below MHP on QQQ. Take note of this. Look off to the right where the liquidity map is. You can see that there's pressure from here to here. This might be a sell-off day for 42.5. Breaking MHP is only about 10% of days. And so that's a almost bearish setup. If we break MHP, it's a long. So keep in mind, that might be a decent short setup if everything looks... Yeah, and the MHP resiliences are negative. S&P is in the same boat. Okay. Is that a short play today? Curious. I don't really short that often, but can I short off at MHP? Let's try it. Very rarely do I... Oh, shit. Yeah. So negative resilience. I could do it MHP short. Okay. Let's try it with one contract. Breaking MHP is rare in a liquidity pocket. DD ratio is 0.7, which is strong. Oh, maybe that is a bad trade. Hold up. You know what? I'm going to take it. I'm going to take it. MHP short down to here's what I'm looking for today. We are in a liquidity pocket, though, which is every single time. So I'm kind of battling two different setups here. I'm going to err to the short side because I think this bullshit gap needs to fill. So let's take a one little tiny trade. MHP breaks are rare, and if I get busted on this, then that would be bad news. But yeah, top MHP and pulling a short all the way down to here. Let's take it. I do like that trade, yeah. Here back down to there. Any MHP break that goes up higher, it's going to be a huge rally for today, which I don't know if we'll get that. So here is a big break and rally, but I'm going to follow the flow and take a bet on this. MHP resilience is still pretty negative, but we're going to watch to make sure it doesn't turn positive. Like I said, I think that's bullshit news yesterday. So I'm watching this orange line on the bottom of the screen here. S&P is negative, NASDAQ is negative. So the resistance is pretty strong off of this orange right here. I think we fade. Yep. Big alert. Matt is shorting. Well, yeah. I mean, into Fed, I think at least we take lower lows into Fed. I don't think we have an elevated trade going into Fed. We'll see. That pressure is pretty strong to the downside. Yeah, with negative resilience, it's going to come down probably. Let's chill on it. So this orange line is a tiebreaker at this orange line right here. Lovely. Let's get that shit right. Let's go, baby. Down the blue line. So we're looking to go, I think today, let me double check this. E and Q. Let's see where NASDAQ is. So yeah, we're so far away from this pivot. So I think we need to fill that gap leading in the Fed. Right here. This is the opening price before we had that big news event, right? We bounced off of that. So let me double check. Was that MHP? 19725. And let's do S&P. Yeah. Resilience is negative, or positive though, so we might bounce off of the half gap here, which is what it's trying to do. Yep, it's trying to do that. MHP down there, yeah. So I'm looking at this. S&P has the farthest to fall, so I'm looking to go right down in there. Boot camp starts on Monday, by the way, those of you interested in joining our boot camp. I love it, guys. I love making money. I love making money. There's hedge pressure. There's the scalp. Let's take it. Ooh, just shorting from pivot to pivot. Oh, that's great. There we go. Already made that much. Done. Flatten everything. Across the board. Short everything. Just from pivot to pivot. That was great. Now let's wait and chill. Probably do nothing until Fed, or at least the lower DD band. How much is that, team? Let's add that up. Oh, already. I'm done. Flat. Okay, 1902 plus 1712. That was textbook. Plus 1633 plus 968 plus 739. 6954. Pivot to pivot. Follow the flow. Okay. Now we're going to chill for a little bit and let this market play out. Let everybody else try to figure out what's going on. I do think we fill that gap, but we'll see. And this is how it works, guys. Your first day on the stream. Welcome to how we trade here. I just use pivot to pivot. No candles, no patterns, no nothing. I have my algorithm give me the pivots and show me the flow. 69.54 already shorting. Nice job. Nice job. That's good. All right, good team. Nice, nice, nice. Yep. So I shorted, right? Everybody's like, wait, what the fuck? Matt's shorting. Matt only shorts like 1 out of 10 of my trades is basically a short. About 90% of my trades are long setups. Look, this was bullshit news, so we need to get back to there. As a matter of fact, I'm gonna tell you guys, I think today we end up at the lower DD band, but that's just me. I'm not shorting this to sell off, but from in a BSU situation, you guys know, in the BSU, which is here. I'm sorry. Sorry. Where's my liquidity map? Hold up. Sorry, BLD. My bad. BLD. You have hedge pressure right here. You have that pressure from monthly to blue. And so we've opened below, and I'm going to go ahead and modify this on the screen so SPY is less than this. So I think we're selling off today, guys. I'm not going to be buying any pivots until we get to at least here or maybe here, and I'm going to double check and think about that. There is no MHP break, so it's not irrational, but we are below MHP, which means I can short in a bear market. That is one of my I can short in a bull market. It's one of my favorite setups to short off an MHP, and I do that every single time. You guys know that's another, as we call, EST trade. Now, let me tell you what this is on the little cheat sheet here. We call these every single time setups. Reversing MHP every single time is a trade I always like to take. And I only do the short trade setups if this monthly res is less than 0. This one right here is one of my stronger bear setups. I have all these memorized. All of my trades are one of these 10 things. That's it. There's only 3 different pivots on the short side. And then there's 4 pivots on the long side. We just handle them differently. Okay. So in res less than 0, it means the majority of the stocks are selling off in a negative gamma situation as well. So this orange line at the bottom of my screen is less than 0. It's ideal for me to take a short off of MHP. So y'all see that's textbook. So these lines are basically what the stocks are doing relative to all of these lines and add it up. So if I type in, for example, NVIDIA, right? NVIDIA is going to have monthly hedging, weekly hedging for monthly and weekly options. So NVIDIA is above its orange, it's above its blue, and it's below its white dashed. So it goes in its corresponding bucket of NVIDIA's above or below or above or below. And then we add up all the market caps to see what the sum of the stocks are doing, fluxing through those environment. So right now, what this resilience number is telling me for the S&P is that all 500 stocks in the S&P are above their white line, or the majority of them are above the blue but below the orange. So if both the S&P and NASDAQ are below the orange, it means the majority of the stock market cap is going to be below its orange as well. Now, Microsoft is above, but let's look at some like banks or something. JP Morgan, below, right? So with the majority of the market cap being below MHP, which is this orange line, then I tell myself the majority of the stocks are likely to yank the market down. So why would the S&P rally past its orange if the majority of the stocks are below theirs? And again, this is the maximum gamma exposure of market makers for that thing. And so MHP is a pivot 90% of the time. With the confluence of it being negative, I shorted from here to here in QQQ, and that's what I did. Now again, I take my profit and I get out of the way. As you see, it's right back up there a second time. Right. Wow, look at that deviation. Hold on. Now we're back up here one more time. And as we're getting there a second time, this MHP is improving, so the pivot is now weaker on the short side. We're bouncing off of it one more time. So the question is, from here, if I'm a long, I'm going to wait for the break with confirmation along. If I'm a bear, I'm still shorting from there. Take it again. Well, MHP resilience is now positive on NASDAQ, so we have gotten some MHP breaks on some of the stocks here. And so therefore, I don't short when that number is positive. Instead, I maybe err to taking a break. But honestly, I do feel like we're still coming down today. And it's just a feeling because FOMC is, where it is. And I don't think we're coming down maybe from here, but we could. Is that a second short setup? Could it be? I try it with one account. MHP res is getting better. The pivot is weaker. Try it one more time. Let's try with some micros. I don't like shorting against it, but just for funsies, let's put a micro on it. Or two. All right. I'd hate missing out on the big bull up day, but I don't think we're going to get a big bull up day based on the Fed. But NASDAQ just got a whole lot better, so this is a terrible idea. Don't be shorting. Terrible idea. When this orange line is above zero, I shouldn't be shorting because I shouldn't be shorting. I threw 2 micros at it, so maybe I'll make $100 or lose $100. We'll trade it like that. What about gold? Yeah, if you guys have any questions, I can run liquidity maps or anything. GLD, right? So we can run it on GLD. GLD is still very bullish off of its blue line. So basically, GLD has pressure off of this 312.5, so it's going to line up with gold futures pretty well. I don't want to lose $20. Come on. $30? No. See, I shouldn't. This is liquidity pocket every single time. So we're battling with 2 different setups here, right? And as the conditions are getting better, there's a higher chance that it will break and go. So MHP breaks are very severe and they go very fast. And this makes me wonder why we would pick up steam and momentum leading up into Fed, but we'll see. Yeah, I don't think we're selling off today, but I still want to err to the side of S&P is negative and we're not going to rally leading into Fed. So I put micros on it. If I lose $100, I lose $100. Not the best idea to short. The indicator tells me not to, by the way. So I very rarely defy my rules, but I feel like the indicator telling me not to do something, I shouldn't be doing it, and therefore I'm just going to trade with pennies just so you guys can watch me do something. I don't want to take the long setup because while textbook it should be leading into Fed, I don't see any reason why we would have rallied so much into Fed. So I think the FOMC is going to be a muted day, but anyways, just 2 micros. Here's the liquidity pocket top. This is the bounce point if there is one for a reversal. So this is the area. If we do support right here, this is a long setup to go higher. So I'm not trying to be bearish here today, but at least I'm trying to think that the market will hopefully stay inside of our daily range without a breakout. Now you guys know, without being FOMC, Matt would be super excited just to try to long from here and long from here. We take this trade every single time as well. But yeah, I'm not putting any real risk on the table. Just entertaining you guys with something. Like I said, it's a terrible idea. Probability is low, which is why it popped up. But I don't want to take big risk into Fed. So I want to bet that we stay inside of this range. How do we get our DD bands? It's not loading. Oh yeah, it's in announcements. There, we exceeded some kind of capacity on that process and the process shut down. He's trying to investigate what happened with that last night. Yeah, we're already on it, Gabriel. We're already on it for the fix. Let's check QQQ really quick. So SPY's at the top of the liquidity pocket. That's up to you to decide if you think that's the end of the move or not. MHP breaks are rare to break through and go. It's only about 10% of days under ideal conditions, which today we'll call an ideal condition. So only about 10% of days will break through orange and go, which is still pretty good. I always try to take the bull side if it does it. 90% of days will retain its position below. So like I said, I put micros on this thing. I already made a big chunk of money. Throw some micros on it, see if I get anything. As monthly res is getting stronger, it means there's a higher probability that this doesn't reject. But like I said, I'll put some micros on it just to see. If I get anything good. I've been calculating exit if the trade is going against you. Yeah, so I use typically 1 strike distance in the relative ETF. So With QQQ and SPY, those are 1 point each. So that's about 40 points in NASDAQ and 10 points in the S&P for stop loss. So basically the way that I do it is if the market's not volatile, which it isn't, we have an indicator that we use. If the market's not volatile, and I'll tell you, we teach you guys this. We use VIX futures, and in VIX futures, there's like a key indicator that we give you once a month in this group for VIX. It's just one number. And after we calculate this number, right now it's 2805. I'll give it to you. And it's going to be here until VIX expiration. If VIX futures is above that, I use a different rule. If VIX futures is below that, my stop loss is usually 10 ES and 40 NASDAQ. So when VIX is above this dark white line kind of on my screen right here, then I use another rule. What I do is I look at the biggest 1 minute candle in the last hour, and that's the overshoot I expect. So if the candles are moving up like 70 points in NASDAQ every minute in the last hour, then I'll allow myself 70 points of overshoot to match the volatility, and then I cut my position down. If my normal trade is 40 and I'm allowing 70, then I trade half my normal size to allow it to travel twice the distance for the same loss. So I adjust my position based on the expected volatility, and we have a whole class on teaching that. If you do our boot camp for 20 bucks, we give you the volatility adjustment calculations, everything. And I'll show you what it looks like. It's very cool. Here it is. We do these cheat sheets and handouts that we give to all of our traders. Adjusting for volatility is one of the most pro things you can do in your trading. So an example is, well, it's just a couple examples, but we tell you how to adjusting for volatility, little cheat sheets on how to adjust for the VIX and things like that. And then if you do our boot camp, like I said, it's $1 a class. You get all these different tools. So one of our members did a back test, by the way, if you guys aren't aware of that. Under all conditions, we finally did a 4-month back test of this entire... Are you not erasing? Erase! Oh my God. Right. Clear all. We did a back test of all conditions, not ideal conditions, of MHP and hedge pressure breaks. And this was fantastic because this also includes the bear market. Blue hedge pressure holds same side on the bull side 70% of the time under all conditions. Oh shit, my micros are making money. What the fuck? All right, let me close out of that. Something weird's happening. So funny. But MHP opens and closes 73% of the time on the same side, which is fantastic. 73% on the same side. So as we say under the most ideal conditions, which means all these lights are green and yellow here, that this bounces 90% and this bounces 80. Under non-ideal conditions, it's still 70 plus. So 70, and so this is a back test that includes the bear market. 68% of the time, hedge pressure doesn't break. And 73% of the time, MHP doesn't break. Look at my gut instinct was right on this one. Look at that. Somebody like 200 bucks off my NASDAQ micro short. Yeah, like I said, I don't think we're going to rally into Fed. I think today's going to be a really nasty day today, and we're back below here in no man's land. So my intuition was good. Simon, you're welcome. Ready to tap MHP on retest, and it's moving up. Yeah, so again, I don't think that it's going to rally hard, even though right now the indicators are getting slightly better. It should, for me, be less strong of a pivot. So if it breaks it one more time, it's likely going to go. But leading into Fed, I just don't want to be in a position to long this right now. But the stocks are improving, therefore the pivot is getting weaker on the resistance side. But my intuition was pretty good on that, right? I took 2 short plays here. Even though the indicator told me it was a bad idea, I traded micros because it went against the indicator, right? So when I have less confidence, I trade smaller. You guys are learning? Ooh. I'm not sure if you already told. I know when you start streaming daily, as you made maximum money already. Yeah, I usually make the max like right at start. Hey, Jeff, sorry, Matt, if you missed, but you always trade futures. Yeah, that's all I do is I trade futures, and sometimes I'll scalp, swing some options. You got the boot camp, should activate it on Monday, PB. Hey, what's up? Yeah, you can actually activate it anytime. We still meet at 4 o'clock every single day. Now that the boot camp is over, this is our week off, and we discuss trade plans. It's still cool to jump in on that. We're not really teaching anything. We're just reviewing. So you might be lost, but you can still come today. Bootcamp teach you from the bottom. Lil P, yeah, man. Like, bro, we'll get you from the start. You don't have to know anything as a trader. Bootcamp is very, very much designed to teach a brand new person the trading game. Simon says you are welcome. That's my boy, Simon. What's up, Gamma? Gamma shorting too, man. With Gamma and me both lining up, that's always a strong setup. Gamma's got the play today on the short side. We'll get a chance to win a free class today, probably. No news. I think that the market rallied up on fake news. This is bullshit news, and it doesn't make any sense for us to sustain momentum on that when we're leading up into Fed. As a matter of fact, I think we're going right to here today. And this is just a play on, despite what the technicals and the structures say, the market has no reason to be rallying on the fact that China and the US are going to meet. It just means that they want to work out a deal, but we already knew that. That's expected news. That's not price everything higher news. And I think that the Fed is going to be a complete snooze fest today. They're not going to do anything. So I think the market has proven the last week or two it's losing momentum. And while I'm not trying to sell or short this market for the longer haul, I do think that the market is really taking a leg down. And I feel like the lack of momentum that we've had as we've got the final leg of a short squeeze, you guys see the curvature right here. When it's curving up, that means short squeeze. That final leg of the short squeeze, and all of a sudden the market's stalling out. We've had 2 or 3 attempts at some pretty decent news that the market didn't pick up momentum off of. So right now, Wall Street, I think, is just chilling and waiting for anything to come out of the trade war. And don't kid yourself. I've seen markets stay flat for like months at a time. So this may not crash. This may not rally. This could very well chop in this range until they come up with a resolution. That is literally the only news right now that the market needs, is will they come up with some kind of deal? Any rumor or thought or comment that somebody says, yep, we're probably gonna make a deal, market will fly through the roof, because that's the only thing that's depressed the market, the inflation due to tariffs. So 4 p.m. I have another live. Yeah, AS every single day at 4. How much is the boot camp? Dude, it's $20 a month. It's $1 a day. And that's why we did it. Super cheap. And the goal is, guys, resilience just went negative, by the way, on NASDAQ. It's free if you're a member of our platform, like you're a subscriber to the platform, it's free. But other than that, you can just pay $20, come for $1 a day. We try to make it as super inexpensive and cheap as possible. Resilience dropping now. Yeah, so what resilience is a gap fill predictor. QQQ is below MHP one more time. MHP resilience is now positive. So this is a stronger pivot, or even a less resistant pivot. I don't think I would short off of that a second time, but negative resilience is stronger than MHP resilience. The white line telling me to fill the gap is a stronger play. So when they're tied, the white resilience usually takes precedence. That's the big question. 2 competing indicators today. Let me zoom in so you guys can see it. I'm going to lean to the short side today, but I'm not taking it though. I'm going to be cautious in the long because the indicators are starting to fall apart. Resilience goes this way, less than 0. NASDAQ is negative, S&P is positive, so S&P is still going to try to push us up. Monthly res greater than 0, so you got kind of a force playing here. My advice, if somebody I'm able to give advice, is to wait. This is not a day to try to be a hero. I wouldn't be shorting this with what I see on the screen. I would be avoiding a long instead because of the negative res and the deterioration of this white line here. So the white line pulling back is less strong. The orange line pulling up is more strong, which is weird. So you have resistance this way and support this way. So the market's going to expand its volatility because of that. So we're going to chop even bigger. I wouldn't personally be betting from here. I want to wait for something better. Let's let the numbskulls and idiots of Wall Street play this range right now, and we'll figure out something better later. Right? Get that second LP on SPY. Yeah. Oh, and then S&P. Yeah, it's kind of in that same boat, right? So we have, let's watch S&P because it has the more actionable pivots. DD ratio is good. We have every single time trade from here with an interrupt. BD greater than half, so there's a play off of that, which is the one we keep seeing. Resilience on S&P is actually pulling up. Let's talk about that one. So not shorting this anymore. The indicator has gotten better and better and better. I got lucky on that pullback. So this is only 10% of days. Break through here and keep going. There's the trade. Second time. If you got that long trade twice, you can probably call it a day now. 90% pullback. The 10% up, 90% down. We're likely to support here, which is good. We also have res greater than 0 on the S&P, which is good. Which also goes to there. But honestly, though, I don't know. I would not be trying to trade a breakout long league in the Fed. Every other day, I would be taking this long. I'd be joining you guys and showing you how to swing. Got that second LP. You guys nailed it, man. That was a great setup, yeah. So really, really strong play off of here on the support side. I'm not trying to short or fade this. I'm happy making the money I made. I think this was enough of a trading day, you guys. If you anybody here, all right, in chat, anybody make money today doing both things? Yeah, I'll be live for FOMC. Who made money today? Rocket and chat if you made any money. I'm about to give you guys the best advice in the world. You ready for some pro level best advice in the world? Don't forget, today we're giving away some credits for funded for the funded desk. So let you guys know there's 2 prop firms we're working with now, 2 new ones. Funded Next, which is kind of like my favorite end of the day account now. Funded Next code Rocket, you guys. That end of the day is badass. Uncapped payouts. Funded Next is uncapped payouts. I repeat, uncapped payouts. Nobody is uncapped. Get in there and steal as much money from them as you can. I got Funded Next account right now. Uncapped payouts, okay? No payout limits. No $5,000 per payout. No $3,000 per payout. You can take half of what you made. Let me log back in here. And then after 100% of the days, you can take. I'm sorry, after 30 days, you can take 100% of what you made. Funded Desk is a new group that's offered us $200 in credits to give away to 6 people. So we'll be giving away $1,200 of credits for the Funded Desk.
Order filled.
Oops. Okay, I didn't mean to do that. Oops, I'm trying to log. Okay, let me close that out. I didn't mean to. It was freezing up on my screen. So this is my this is an accident. So just showing you guys, this is my Funded Next account. I didn't mean to trade, but I was like spamming the button. I'm like, why is it not loading? It was frozen. So I closed out the position. I didn't mean to get in on a trade. Would have filled. So I've got my other DOMs open on my Funded Next account. Didn't mean to make a trade there. Oops. Whoopsie. My bad. Yeah, I'm like, what the hell? Why is it frozen? I was just like spamming the button here. All right, so I'm chilling and waiting. I'm not taking any trades right now. Nothing. Nothing. You thought that was you guys? Yeah, I'm sorry for scaring y'all. Now, what happened was I think it had logged me out while I was sitting there. And then because it logged me out, it was not responding to my button presses. So Funded Next is awesome. They have an uncapped end of the day account, uncapped payout structure. Imagine taking everything you've made. Now I love Tradeify more than anything, but Tradeify only lets me take out $3,000 every 10 days. Now after 5 days with Funded Next, you can take, you've made it to pay out. So basically in the first 30 days, you can take 50% of what you've made. That's incredible. And after 30 days, you can take 100%. So just like, to have like an end of the day account with uncapped payouts to me is the bee's knees of funded programs. You can't get better than that other than a straight to funded, which Tradeify has. Those are my 2 favorites now, you guys. ETF if you like static has a game-changing static account with a $2,000 buffer, which is unheard of for static. So there are some really good accounts out there, and I'll tell you guys always what the best accounts are. Just stick around. Everyone with Tradebait just got terrified for a second. Yeah. I was like, well, I was trying to spam the exit button. I was like, whatever, but I think I accidentally spammed. I was clicking it too hard. And then my mouse shifted over to the sell button. I was like, oh, ew, don't get an order there. It was a $70 mistake. LOL. Looks like it might actually break for another leg up. I don't think we're going to get any resistance from here. The selling has found buying as we're getting a little bit extra momentum as the stocks are picking up some steam. So it does look like possibly an update from here. All right, here's the best advice I've ever given you. If you've made money this morning, a lot of you guys look like you did trading today. Here's the best advice I'm ever going to give you. Ready? Don't do anything for the rest of the day. Don't do anything at all. That's it. Don't do anything else. You made money in this first hour, you're golden. You're golden, baby. Sit there and you just don't do. And again, I can't give you guys investment advice. Well, I could tell you all day long, this is ass carrot advice. I want you to sit with your butt cheeks still. I want you to put your hands off the mouse. This is personal advice, not investment advice. This is go out and touch grass advice. We'll stay on the stream and chill. We'll watch it, do whatever. But this was the predictable part of the day. If we got some ups and downs between pivots, this was great. You guys nailed it. Y'all got some free trades. For the rest of the day, let the knuckleheads figure out what's going on. Let people try to chase us. Let the newbies jump at the high and short at the low and long at the high. And let people figure out, you know, whatever's going to happen. The Fed's going to come in and do something. This is where we want to pay more attention. Indicators are getting slightly better that we're probably not going to sell off. But still, I think pre-Fed, the market's going to probably tell everybody to, you know, fuck your indicators today. It's going to not really do what you want it to do. This is some really, really, really sexy, simple chop. This is out the door textbook for a lot of us. Yeah, or work on a new eval. So this is the time, don't risk your real money, right? If you want to do anything, go out there and try to gamble or whatever. Go out there and try to pass some evals. Find somebody who has a sale and use this time to try to make money on your evals. Yeah. So what else, of course, teach you, Josiah? We teach you the three tenets of trading. One is proper trend identification, which is we use Rocket Scooter to find the proper flow. Second thing is position and risk management, where to size your position correctly, how to get in, how to get out, where to stop, where to add, where to trim, etc. And the last thing is market avoidance strategies, the most important part, when to sit out. Today, we're practicing a market avoidance strategy. The reason I have a 75+% win rate is because I know when to trade. That's what makes me better than all the other YouTubers out there. These guys are all kids. There's no YouTuber out there that trades that is spectacular that you want to learn from. These are all, they're okay. I'm friends with all of them. They're decent. But they're gambling, dude. They're always trading. They're always trying to throw money at the market. And I'll tell you, there's none of them really make millions of dollars trading. They make money off affiliate sales. You're very rare to find a multimillionaire trader on YouTube, and they're going to tell you all the same thing I do. They don't trade a lot. They're snipers. They're not like, it's not like they're walking around with a shotgun blasting it as wide of a net as they can every trade. 20 accounts copy traded up and down, chase the short, chase this long. They wait, and then they wait, and then they wait, and they strike. Knowing when to trade is the secret to becoming a millionaire in this business. That's it. Market avoidance, by far, is the thing you all lack. Knowing when, I have math that tells you when to sit out. Right now, I'm telling you when to sit out. Sit the fuck out today. Whatever you think is going to happen is not going to happen. I think the market's going to go up from here. It's probably not going to happen, though. It's going to be a weird day. So trust me when I say maintaining a high win rate comes from sitting out, strategically sitting out when you need to. We know Fed is coming up. We know the market already rallied on bogus news, and the Fed's not going to cut rates. So why would the market rally right now, right? Wouldn't you guys think that using logic, the market's going to wait to see what the Fed says and then overreact to that? Does this make sense, you guys? Does that make sense? Why would the market pick up an amazing mid rally right now on just news that China and Trump, or China and United States, are going to meet up? That sounds like, yeah, we already knew that. So why would, even though indicators are pointing up, my brain says, yeah, but it shouldn't be going up. This is a trap. It's probably not going to do anything until Fed. So let's go ahead and sit out. Now that makes sense, right? So when I teach you guys in the bootcamp how to think, as a trader, you want to think right all the time. Not every minute is a trading minute. Not every day is a trading day. Not every movement is something you want to chase. We teach you a saying in the bootcamp. It's that a hungry, starving wolf in the forest will be too tired to go after and eat a wounded pig that's hobbling by because he spent all his energy chasing squirrels. So imagine you're like, which one do I want? Which one do I want? And it's like, if you wait, that big fat wounded pig will come by. Juicy buffet. Dive right in. David, what's up? Says truth. You watch Matt prove that repeatedly for years. Sitting out is the key to winning as a trader. We have two different mechanisms. The indicators are all pointing up. So because of that, no shorting. But also because of the bogus news, I don't trust jumping in on a big long from here until at least the Fed tells me to do something. So while the short was a short-lived setup, the indicators got stronger as all of them went above zero. Just kind of like, okay, well, because of that, because of the conflict, I'm going to sit out. And while I do think it's going to go up and rally, why would it? Right? So I'm going to chill. I'm going to wait for something juicier. Like if the market falls today to like there, oh, that'd be so juicy, right? I would love that. Would have filled. Yeah, sorry about that. I probably scared all you guys. So what happens at the web version, apparently the web version will disconnect you, but still look like you're logged in. So that's what happened. And I was like, the price wasn't updating, the DOM wasn't updated, and I was like, oh, and I'm just spamming the button. Now it's updating. So if you were to ask me which direction the market's likely to go, it's likely to go up. So that's what all the indicators are telling me, it's going up. We have all kinds of supports inside of here, but I just don't think it's going to go up far because of the Fed. So, but again, I could be wrong. And the fact that I don't know and I don't have a lot of confidence, I'm going to chill on this one and wait. And so we're going to wait for something juicy. I've got dips to buy. There's no really shorts to high from today. I don't have much to go off of. But something about this just makes me feel like if I do anything at all, I'm going to be wrong. Does that make sense? So let's just chill and let's do it the right way, you guys. What's the Fund to Next code? It's Fund to Next, use code ROCKET. Yeah, you guys, uncapped payouts, you really can't beat that. It's incredible. I mean, milk it while you can. Go out there and make your 100K and then call it. It's 40% consistency and end of the day drawdown. You could pass that account in 3 days. There's no activation fee. There's no monthly fee. I mean, it's like, I don't get how these guys are going to make money. I'm going to be honest with you. And that's why I sided with them completely. Now, again, I'm on their payroll now. So this is not they're not telling me what to say. I wouldn't have jumped in, worked. I've had every prop firm in the world offer me a salary and I've told them all to fuck off, but I'll promote them. I'm like, no. So these guys, I'm working with them now. And the only reason is because their rules are fantastic. And so I believe in that. I'm only going to side with someone. And actually, you know, they're offering me the least of pretty much anybody. I don't care about the money. I use that money and buy you guys giveaways with that. I usually tell a lot of the firms, I'm like, I'll take the affiliate money and buy accounts to give away with. So this isn't a paid endorse. I mean, I'm paid, but I'm speaking truth of how I feel. Uncapped payouts, end of the day drawdown is my favorite type of account. And uncapped payouts is great. You know, monthly fee, no activation fee. It's kind of like, shit, you know, let's take as much as we can before they go under. Like, you know what I'm saying? Tradeify has capped payouts. That's the difference. It's like Tradeify with uncapped payouts for slightly more expensive accounts. It's the same as the Tradeify growth account. Exactly the same. Tradeify growth is 35% consistency rule. Fund to next is 40. Yeah, fund to next. Enter the giveaway, you just got to be here. So everyone got excited when somebody was telling me about it. The buzz was all around the uncapped payouts. So Tradeify, I can only take payouts every 3,000 bucks. I can get, you know, I have 30,000 buffer in account. I can only take 3,000 of it every 10 days. So I can't just withdraw all of it. With Fund to Next, you can take half of it. Half of whatever you made in the first 30 days, 100% after the 30th day. Imagine firms like Apex where you can get $1 million payouts. That you can't get $1 million payout from Tradeify. The max you could take from them is $80,000. So Fund to Next is uncapped. It's the next, yeah, it could be the next fast track, but you want to be into that at the ground floor, right? That's the goal with something like that. Now, again, they are a big futures, the Forex giant. So these guys like have money and they've survived them and the bigger ones out there. So they know what they're doing. I don't think they're going to take abnormal risk. What I'm going to guess is that these are introductory rules, right, to get people in the door, and then they might change their rules later. So your job when an introductory prop firm comes in with awesome rules is to milk it till they change it. We'll all be pissed if they start capping payouts or whatever, but until they do, milk it as much as you can, right? You can have up to $300,000 total. So it's a mix and match kind of thing. So you can take, you can do 650Ks, 100Ks, whatever. I'm going to tell you guys I did the math. The one in the middle is the best one. You have 25, 50, and 100K. Don't do the 100K. Do 50s. You get a better cost per drawdown, which is the metric you want to see for the price of a prop firm. The scaling of the drawdown, it's weird. It doesn't make sense for the 100K. 50K gets you 2,500. 100K gets you 3,000 at almost twice the price for $500 extra of drawdown. It's not worth it. So 650K is the way to go. That's what I'm going to do. Take profit trader is awesome as well. We love take profit here. Our max daily loss limit's based on unrealized profits. No, Kevin, they're end of the day drawdown, which is even better. No trailing drawdown. It's very much similar to my funded futures more than anything. Yeah. Yeah, I know. Wow, right? It's like, okay, where's this? It's like, what's the catch, right? So I'm actually trading with them right now. Excited to like try to pass my first account with them and see if I get anything good. Trailing drawdown's a scam, dude. That's why I don't do any of that nonsense anymore. I don't trade Apex with a trailing drawdown. What a waste of time and money. Everybody here that was using Apex before they met me is using someone else after they meet me. I preach against trailing drawdown more than anything. Trailing drawdown is a complete scam. You'll never make money with trailing drawdown. The only way your big influencers make money with trailing drawdown is they spend hundreds of thousands of dollars. If any one of your influencers out there were to expand their account tab and you can see how many times they've blown up. There was one guy that somebody was calling out that said that he had reset his accounts 4,000 times. 4,000 times, a major influencer. 4,000. I'm not telling you who it is, but I'm saying a major influencer. I'm talking major. Imagine 4,000 times, what is it? 150 bucks. Rack. I'm not naming names. 4,000 resets. Somebody called somebody out. They found something they posted and they were like, you made a mistake and revealed this and it's 4,000. I'm like, what? Isn't Apex like 20 bucks for account plus like $120 activation fee? So maybe like what, 150 times 4,000? That's 600 grand. What? What? So you spend a lot of money and a lot of money and a lot of money and get lucky and get lucky and lucky and finally build a buffer. And then all of a sudden you make your millions of dollars of payouts or whatever. It blew my mind. I'm like, you're blowing up like every other day. Like it's impossible to trade that much and blow up. I'm not saying anybody's name. But I'm saying somebody called somebody out and said 4,000. Blew my mind. There's a bunch of people calling each other out, and they always do that. And let me tell you, they're all blown up 4,000 times. Trailing drawdown, it's not because of them. It's because trailing drawdown's a fucking scam. You're gonna make money with Apex. Trailing drawdown, it follows you where you're winning. You could be green in the trade and still bust the account. What? What? It exploits your lack of understanding of volatility. The market chops up and down because of volatility. You bust and blow up because of the volatility. So it exploits a lot of things. Trailing drawdown punishes you if you lose a trade. It punishes you if you win a trade the wrong way. It punishes you if the market's volatile. It's a catch-all to make you fail. And that's why the accounts are 20 bucks after these whatever bogus 80% off sales or whatever. That's why they charge you 20 bucks, because you're going to fail them. And you think you're getting a value, but I'd rather pay $550 for a Tradeify account, which I did, and not blow it up. Some of these accounts have been babysitting since March. Don't blow them up. So, yeah, 4,000 PA accounts. Not evals, PA accounts. Now, again, I'm not naming names or calling anybody out. I'm just saying, and not saying they're bad. I'm saying Apex is a scam. Trailing drawdown is a scam. I've seen that influencer on Twitter. There's this one influencer dude who's like a new futures trader, but like, you know, has a big following on YouTube, but kind of like a new futures trader. Busted their 20 PA accounts like 10 times in April during the, I mean, it's a mix of them being new and not knowing how to trade that well, but also trailing drawdown sucks. People just busting and busting and busting and busting. But it's because Apex is the way where you can go out there and brag and say, look, I made $1 million bucks. You can't do that with any other prop firm, but you can with Fund to Next, uncapped. So every influencer out there is looking for the next firm they can say, I made $1 million bucks with these guys. And, you know, can you do that with trailing drawdown? No, you're going to spend hundreds of grand to get there. But with end of the day drawdown, it only resets once a day. It's like too good to be true. You sure it's PA? I'm pretty positive it's PA. I need to go back and refresh my my brain on what it is, but I remember seeing somebody say you blew up 4,000 times. And even if it's not PA, even if it was evals, that's still crazy, right? 4,000 times 20 is 80,000. Still, you guys aren't going to be spending that much at Apex, right? That's a lot of money. I swear, I think it was PAs. But anyways, because what happened was somebody had like blanked out. Like they basically, you know, blanked out their the picture with black. But with AI these days, you trust me, if you're going to post something and redact by just taking like Windows Paint and just drawing black over it, don't do that. Black and black are not the same black. AI can actually rip out what you wrote over if it's not exactly the same shade of black. So as a rule of thumb, when you redact stuff going forward for the rest of your life because of AI, you cut it out. Cut it and remove it. Don't paint over it with black. Anybody can unredact that with any program now. Oh yeah, the Danny Trades redaction. Yeah, you can even go through and highlight it with your mouse and it can still see it. If the shades of black are slightly different, AI can rip out those whatever it was. And somebody did something like, I know it wasn't Danny, but somebody did that and somebody undid that and was like, bro, you blew up 4,000 times. And I was just like, wow, I can't believe how much money they're spending on this. It's crazy. Well, I'm not throwing shade at anybody. I love everybody in this game. But this was basically telling you that Apex trailing drawdown is not what you think it's going to be. It's not all guts and glory. You're not going to get $1 million bucks doing that. The few people I know that made big payouts doing that spent a whole lot of money to get it. And that's not going to be you. Trust me. So avoid trailing drawdown going forward. Top step is after the first 2,000. Yeah. Right when you reach 3,000, it doesn't trail anymore. Right. I think that's what happens. So Ahmad, if you're looking to get, instead of the 100Ks, I'm telling people the 50K is better. You get more. And again, this is just some math. The 50K is better. Now, again, I'm telling you guys, I wouldn't be standing by somebody if I didn't think it was the best one out there for this particular thing. Tradeify is my favorite. This is my second favorite. Because Tradeify, I can go straight to funded. I don't want to deal with the eval. But the eval here only takes 3 days. 40% consistency. So what you're looking for is the fee. This is how you do this, guys. And with any prop firm, you do this. Put them side by side. These are all the same type of account, just different plans. You take the fee, and then you divide it. You take the drawdown divided by the fee. Okay? And that gives you a ratio. In this case, it's 1250 divided by 129. It's about 9 point something. When you do 25 divided by 250, it's 10. When you do 3,000 divided by 450, it's like 0.6, which is weird. Or 6. It's like 10, 6, and 9. The best value of how much drawdown you get for dollar you spend is this one. It was very weird to pay $200 extra for $500 extra of drawdown. Whereas here is 129 to 249, you pay double, you get double. So the scaling is very weird on the 100K. The value is not there. Does that make sense, you guys? So when you're actually shopping for prop firms, you want to see how much drawdown you get for dollar you spend side by side. So the best bang for your buck is the ratio of 10. So you can do up to 300,000 accounts. You can do 3 of these or 6 of those. I am going to be doing 6 of these. So that's my strat with these guys. So just letting you guys know. Do that every time you're shopping for prop firm for value. It's how much drawdown you get for how much you're paying. And also when you're comparing firms, you're going to want to do the same thing. When you put them all side by side, like how much, when you pay more, how much leeway do you get, right? Straight to funded on Tradeify is about 12.2 costs on drawdown. Yeah. That's why Tradeify straight to funded is my favorite account, period. It's $550 per account, but that ratio is really high and you get to skip the eval. So by far, the gold standard of prop firm account is Tradeify straight to funded. I haven't found something I like better. But if you want to pay, 40% of that and have an eval step in the middle, which is only 3 extra days of trading for 40% of the price, FundedX is the next best thing because it's uncapped. And Tradeify is capped. That's one thing I don't like about them. But cap payouts is good because it ensures that the company stays solvent. Uncapped, it's just like one swing of bad luck and that company goes insolvent. Right? So uncapped is very risky because the company can lose money very fast. But these Forex giants have so much money that they can afford to take losses. Like Fast Track couldn't, right? So Tradeify, when they stabilize the company by offering just, throttled payouts, it's going to prove that they're not going to go under. Top of step is end of day unless they change it. Yeah. But I think people are starting to revolt and rebel against top step. They're doing some shady stuff these days. And so top step is slowly losing ground to some of these bigger firms. And while top step is really good, nothing saying anything bad about them. There's a lot of people that are they just don't like what the CEO is doing. Trying to start like a regulatory organization and all that, trying to take over. There's better products out there without all the hassles and noise. They're doing too much. Yeah, they are. And trying to create a regulatory organization that like basically controls what their competitors can do. I see that as unfair. So get rid of their daily loss limit. Well, most of your end of the day accounts do have a daily loss limit, Shiso. So that's kind of that's basically like end of the day drawdown so that you don't have trailing drawdown. It's kind of like a great roll, but in return, they give you a daily loss limit. So it's kind of like, it's better to have a trailing drawdown with a daily loss limit. It's end of the day drawdown with daily loss limit than have trailing drawdown any day. And Tradeify's end of the day drawdown is the same thing. It's got a daily loss limit. It's a characteristic of end of the day drawdowns. But It's not really that bad because it only takes it's not really that bad. It only takes a couple contracts to pass. Like the fund index, I'm gonna beat it today probably if I get one good trade on it. This is day number 3. I won 3 days in a row. Indicators are bouncing all over the place and still biased to the bull side today. As the market is trying to sell off, it's not really finding any momentum to sell. It's probably going to go up from here. I'm still not taking this bull side break. I still think that the market, while all the indicators are pointing up, I still don't want to bet on upward momentum today. It'd be so weird to get it leading into Fed. So we could get it. Could burp up and rally pretty hard. Could get some Trump news coming out of nowhere that, woo, push the market higher. But until then, it's going to chill and wait for something better to come out before I touch this again. All right, you guys, we'll be doing a giveaway in 30 minutes. So how you enter the giveaway is just got to be here. That's it. So the shady stuff TopSip is doing is trying to create a regulatory organization that bands together with other prop firms and then sets rules for all of them to follow. Basically, if you use the Project X, they're trying to rope in Project X and trying to rope in Tradeify, basically, or Tradeivate, that says that the owners of the technology where you build your prop firm on top of are now going to set the rules for you to follow, or you can't use their platform. Like basically what McDonald's did. Like the McDonald's Corporation owned the land. If you wanted to franchise a McDonald's, you had to follow their rules or else they'd kick you out of your lease. So, it's kind of like a way to hijack their competitors and make them follow their rules or else you can't use their platform. Whether that's an honest or dishonest approach, Mike Paddock is telling you guys it's for your benefit. It's to create, standardization in the industry. But then again, he has financial incentive to benefit from controlling the industry. So people see it as unfair, monopolistic, and collusion. And so there's a lot of people revolting and rebelling against this because it doesn't seem fair for a bigger firm to throttle what their competitors can. It limits the creativity of the prop firms. And his thing is, well, we're going to keep them from taking extra risk and we're going to keep them from putting you at risk. And we're like, that's okay, bro. We don't care. Let me take the risk. I'm smart. I don't need you, TopSip, telling everyone else what to do. And the thing is basically like, if you're going to use Project X or you're going to use Tradeivate, we're all going to get together and say, you got to follow our rules. And the rules are, you're going to have to share your customer data with us. Because what we're doing is, if somebody's prop firm arbitrage, they're longing at this firm and shorting at this other firm, we need to tell each other that so that we can combat people cheating the game. And then it's like, well, it's not really cheating the game because that's actually a very fair practice. You can't tell me what I can't do at your competitor's shop. And so because of that, TopSip put a bad taste in a lot of people's mouth, including mine. I don't think that's fair. I don't think that's a fair business practice. I don't think that's fair to you as a trader. I don't think you trading at Fund Next should have your customer data sent to Mike Paddock. I don't think that's legal at all. Well, I guess if they disclose it up front, but collusion with competitors to fix the results of a contest is absolutely not legal in a business sense. But the prop firm is a weird gray area, Wild West industry that really doesn't have, it's not like it's a actual trading. So it kind of falls out of the cracks of like certain, legalization. So it's kind of like, you know what I mean? So a lot of people see that as, so we don't promote TopSip here. But TopSip is good. Their business is good. Their accounts are good. There's nothing I have personally to say about TopSip. It's the choices TopSip is making I don't want to get behind. You know what I mean? I don't want... There's a lot of influencers out there revolting because they do prop firm arbitrage. This is going to kill their business. If you pay 50 grand here and 50 grand here worth of accounts and you're longing here and shorting here and you just post your winner on your stream, right? You're going to look like you make a lot of money. And then, you only take, say you buy 2,000 worth of accounts here and 2,000 accounts here and you long and short, and one of them gets you a $50,000 payout. One of them busts. Trading the prop firms against each other is how a lot of these people make money. Because there's limited downside risk, especially with an uncapped prop firm. If you had two uncapped prop firms and you shorted one and long the other and just kept throwing money at it, ultimately you will bleed one unlucky prop firm of millions of dollars just by playing the arbitrage game. And so, you know, Mike is secretly trying to combat that. He's not telling you that, but that's exactly the motivation to say you need to share your customer data with us because I need to see if somebody's shorting Top Step while they're longing your thing. That's exactly what he's doing. And the fact that he's not telling you that's what he's doing is why I can't stand behind him, because I think it's very dishonest to not, you know, reveal your true motives. It's to battle prop firm cheats. And you need to say that to get us to stand behind it. But no, it's like to create standardization in the industry is bullshit. It's to tell your competitors what they have to do or else they can't use your software. And the power that you're giving somebody is just not good. So that's why I'm not standing behind them for that. Sign up for the boot camp. Yeah, here's the link. Hold up. Let me give you guys the link. Hold up. Here's the boot camp link. But again, nothing against their business. Their business model is good. Their prop firm is great. I actually have Top Step accounts myself, but I don't recommend them anymore. Yeah, I trade live every day when markets open, all the time. My funded futures, fantastic. MFF is one of the best end of the days out there as well. They're top tier. So we only work with the top tier prop firms. Let me show you who they are. These are the ones I think are awesome. Well, Apex is on there, but we don't like trailing drawdowns anymore. Apex, Lead Trader Funding, My Funded Futures, Funded Next, Tradeify, and Take Profit. To me, these are the best of the best right now. So, and Code Rocket Scooter is the best one. Best deals you can get. Maybe that Trump talk from yesterday is carrying over today. I think that the market sold off really hard yesterday, right? I mean, we just sold, and then that Trump kind of popped us back to where we were yesterday. We're basically sitting flat off of yesterday's kind of median price at the open. So the market is still kind of ranged. I'm not going to lie. I feel like this. I just feel like the bull momentum is not going to be here. Although the indicators are all really good. I'm not trying to fade or short this. But the idea that breaking MHP, then breaking bull zone and continue to go is the rarest of the rare. Let me tell you the percentages of this. Only 10% of days will press through here and go. So that's number one. Only 10% of days will do this. Usually it wants to stay down in here. And it may not jump below there until FOMC though. 90% of days will usually reject. Probably not going to sell off today until Fed, but it's hard to believe we're going to get a rally off of that news event yesterday. But we'll see. All indicators are bullish though. So because I'm conflicted there, I'm not taking a bull trade on the small chance break and small chance break. I don't know the probability of breaking bull zone and keep going. We don't have enough data for that, but we say it's also rare to break through. Rare on top of rare. Who is you guys' favorite prop firm that y'all use? And I want to know. I want to take a poll. I know what you guys use the most because I have all the like affiliate info. But who is your favorite prop firm and why? I want to know. Little poll here really quickly. And for the giveaway, by the way, we do giveaways every single day at 11 o'clock Eastern. So be here, be on the stream. Don't forget to like the stream, you guys. Click that like button. Click that like button. Yeah, pure collusion, right? I don't like the idea of Top Step doing that. Top Step, TPT, Tradeify, Top Step, TPT. Yeah. Apex, TPT, Top Step. Yeah, you guys mostly use TPT, right? That's kind of like one of the fan favorites here. Tradeify, TPT. That's about what I expected. Tradeify, no activation fee. Yeah. So by the way, Funded Next has no activation fee as well and no monthly fee. It's a and no time limit. So you can just buy the account and sit there forever on it. That is kind of like pretty cool too. You don't like the lack of customer support from TP? Yeah, TPT is like literally understaffed, man. Their customer service takes a long time to get through to them. Even me. I have a direct contact with these guys now, so I can talk to them every day, but when I was going through Customer Portal, their little customer service app, it was taking like many days to get back to them. And Apex customer service is horrible also. It's just because they're understaffed, man. It's like they're so big and they don't have enough staff. It's like takes forever to hear from them. Which of the platforms that you endorse provides TradeAvate credentials to connect to TradingView and Rocket Scooter? So you can't trade any prop firms through Rocket Scooter because TradeAvate and Project X do not work with other other platforms. Unfortunately, they're closed doors. As much as I'd love for you to be able to trade inside of my platform for your prop firm accounts, the TradeAvate monopoly is preventing people from doing that. So which one connects to TradingView? I think they all provide connections to TradingView these days. I don't know any that don't, but somebody here, because I don't ever trade through TradingView, but somebody here can tell him, answer that question. Which ones you know that connects to TradingView? They should all do it if they connect to TradeAvate. TradeAvate has a legacy TradingView legacy CQG account API, legacy CQG API with TradingView. So TradeAvate and TradingView are compatible. It's the only place in town where you can trade TradeAvate outside of TradeAvate. So if you have a TradeAvate connectability inside of a prop firm, it should work in TradingView. TPT does, ETF does, they all do, yeah. So if they use the TradeAvate API, they should work with TradingView. I don't know if Project X works with TradingView though. They all do. Somebody will have to tell me. It doesn't. Simon says no, it doesn't. Yeah, it doesn't. Okay. So Project X based prop firms don't. TradeAvate based prop firms do. So TradeAvate had this legacy CQG API that worked with TradingView that we could have still used to connect to TradeAvate had we got in before they closed the door on that API. They grandfathered everybody in who was already a developer connecting to them. So we could be trading prop firms in Rocket Scooter had I built Rocket Scooter a year earlier. I could have got in on that grandfather. And I begged them to give me API access. And they still were like, no, our model doesn't really want to support our competitors anymore. And I'm just like, but NinjaTrader's garbage. Nobody cares about NinjaTrader's platform. I'm like, okay, fine, whatever. Historically on FOMC meetings, the market will be around weekly open at the beginning of the meeting. Oh, very nice. So is that up or down from here? Weekly open would be about here. Yeah, so we're basically at the weekly open. Isn't that neat? How to get these indicators? So hi, right here. I'll give you the link. So the liquidity map tool you can get from this website right here. I'm posting in the chat for you. Right here. There's a 1-month trial for like $100, so you guys can check it out. And then that also includes the boot camp, which starts on Monday. We do this very substantial 20-day trading program. Love for y'all to check it out. You always thought NinjaTrader was garbage? Yeah, dude, it's just absolute horrible platform. It was great, 13 years ago when I played around with it. It was like, oh, this is neat. This is cool. Because you didn't have many, E-Trade was big. Thinkorswim was still actually a company called Thinkorswim before TD bought them. And then NinjaTrader was the alternative. And then you had a lot of other platforms out there that were just kind of like very like old. So NinjaTrader was one that's like, oh, it's customizable. Oh, you can write your own indicators. Oh, you can play with C#. Cool. And make anything you want. And that's what made NinjaTrader cool. But, in 2025, it's just an obsolete dinosaur. There's so many better platforms. Like TradeAvate's desktop platform is really good. The Project X based stuff, very, very good. And just like a dying dinosaur. So I don't know. They didn't want to give out the APIs to their competing platforms. So you can, like, if you could trade TradeAvate inside of Rocket Scooter, we would take so much business to them. Like Trades and Matt's building a platform called Tradester. Him and I met the other day. We had the same conversation. We're like, man, why won't TradeAvate open their doors to everybody? He's like, between you and me, we would take them. We would give them hundreds of thousands of customers by the combined influence. And he's like, but they just don't want to lose platform superiority. But then we're like, but then it's NinjaTrader. It's like, it's not really a superior platform. So whatever their business model was, I don't know. They sold themselves to Kraken or something, one of these crypto places. So now it's owned by a different company. Maybe they'll change their mind. TradeAvate can freeze up. Yeah, it can. Well, that's because their servers can't handle like large order flow and stuff, and it locks up a lot. Even their real account data feeds frees up their proxy paper account data feeds that everyone uses. NinjaTrader turns your computer into a heater. Dude, I know somebody that has a business that relies on NinjaTrader, and they sell indicators inside the NinjaTrader ecosystem. And like 70% of their Discord activity is tech support, trying to get people to upgrade their computers and get more RAM and shit and get a faster processor just to run NinjaTrader. They have to get like really fast single core gaming processors to run NinjaTrader because it's not a multi-threaded app. So all the modern, 16 and 24 core processors don't really make it even faster. You have to get a really, really fast dual core gaming processor for NinjaTrader to work the best. So they're basically like customer service for NinjaTrader's dinosaur platform. They're not even like troubleshooting their own shit. It's like, here's how you get NinjaTrader to work on your computer. Yeah, but I bought my computer last month. It's brand new. Yeah, but you can't use multi-core processors. There's no multi-threading, support and all that stuff. And I'm like, man, I'm glad I'm not that dude. Having to troubleshoot somebody else's thing and convince your customers, yeah, you bought my indicators, but also you need a new computer. So, like, ugh. Matt is actually AI. This is true. This is true. Well, it's probably because I'm like in the heart of the industry. Once you make a trading platform and once you, have exchange agreements with every major exchange. I have contacts in New York. I have contacts at the SEC. I have contacts at CTFC. I've got contacts everywhere, and I talk to everybody. I tend to learn everything about everything just by being around it. There's so much that goes on in this industry that, retail traders don't see because there's this whole back-end infrastructure that's crazy big. Like CQG has a yearly meetup where they take everyone to the Astros game in Houston. And so I go to that every year. And when I went last year, it's the CQG reps who sell our data or our API to connect futures to our account. So I hang out there, and I went there, and there was like hundreds of people at this event. I didn't know a single person there. And each one of them is like, oh, I'm at this clearing firm. Oh, I'm at this place. I work at this place. I work at this broker. And I'm like, I haven't heard of any of you guys. Oh yeah, well, we mostly just do clearing for agricultural futures. We're an agricultural clearing firm. And so we mostly deal with like wheat and corn and stuff. And I'm like, man, there's this whole side of the futures industry I didn't even know existed. So there's so many little like gears and, cogs to how futures works. And I thought, oh, I'm going to do the CQG thing. I'm going to meet people from, Thinkorswim, people from Schwab, people from Chase, people from all these different banks and brokers. Not a single thing there. I didn't know anybody there for any reason. I knew some people that were a couple of clearing firms. So AMP, I learned. AMP is called AMP Global Clearing. AMP is an FCM that you clear with. AMP's not actually a clearing firm, even though their name is AMP Clearing. AMP is actually a non-clearing FCM, which is basically meaning that they work with a clearing firm. And I met one of AMP's clearing firms at the last CQG event. And I was like, what do you guys do? Like, well, we're primarily a clearing firm for AMP and a couple other brokers. I thought AMP Clearing was a clearing firm. Like, nope, it's just their name. They're not a clearing firm. I'm like, I'm even confused by that. Like, what the fuck? What the hell's going on? Plan from here is to wait for a better play. I want to see what happens in case, breaking the bull zone and continue to go is a rare case. I don't think we pick up bullish momentum leading into Fed. I want to see if this market tries to sell, but the indicators they're not getting any worse. So it's a very low likelihood that we do sell off, but it's also very low likelihood that we continue to rally from here. If you're to put a gun to my head and tell me to pick a direction, I'd let the market dip really hard and I'd take the liquidity pocket one more time. I would love to take this trade here maybe one more time. I don't want to chase the long from here, though. Yeah, AMP is not a clearing firm. They're what's called a non-clearing FCM. So what is a non-clearing FCM, you might ask? And what's the difference between that and an IB, which is also a non-clearing broker? Like, futures has all these weird ways to... TradingView is a great platform. I love TradingView. TradingView is very good. Randolph TopStep X is TradingView. Well, so let me explain what TopSec. Let me give you guys a little history lesson on some of these platforms. So TradingView created a charting platform for web-based charting. I'm trying to draw it on my screen here. And TradingView also created a white label program where you can take their source code and build a platform around it. We white labeled TradingView to build a platform, and Project X also white labeled TradingView to build a platform. Project X built a platform that they can source out a second layer of white labeling their platform to prop firms like TopStep. The TopStep is using a white label of a white label. We took TradingView's source code and built our own platform around it, and we're not trying to sell it as a template to other prop firms. So Project X and Rocket Scooter are very similar. They're both built off of TradingView's source code. So basically, we're like TradingView on crack. They're like TradingView on crack. Janice says, you don't know what you're doing wrong in trading M5 orb and M15 orb and getting wrecked the last couple days so much at Wix and zero breakouts, big losing streak right now. I'm going to tell you guys, as much as you guys might use that stuff, I've never trusted opening range breakouts. I've never trusted candle theory, period, as reasons to long or short markets. I trust only order flow and volume. So I'll tell you, if you go on a losing streak with that, that's because those indicators are like hit or miss, 50-50. And it's just bad luck. I wouldn't say anything that you're doing anything wrong. You're following the plan, and the plan is good, but Johnny, those types of indicators are coin flips. And sometimes you'll go on a losing streak because they're coin flips. There's no statistical edge to opening range breakout. The traders that use them do very well because of good luck and good risk management. But that's not going to give you an edge, I promise. Can you please share your thoughts on Apex and consider getting them set up now? I would say that I don't like Apex because it's trailing drawdown, and I don't like accounts with trailing drawdown. I think trailing drawdown is very hard to do. If you're considering doing Apex style account, try something like My Funded Futures or Funded Next and do end of the day drawdown instead of an Apex trailing drawdown, because you're going to lose so many times in Apex because of trailing drawdown. It's a rule I say to avoid any prop firm or any prop account that does trailing drawdown. Avoid it. It's harder to pass. It might seem like it's easy to pass. Trailing drawdown is a cancer. It's too hard of a rule. It's like when you go to the carnival, you got the softball, you got the milk bottle stacked up, and you got to knock them all over to win the teddy bear. And trailing drawdown is they glued one of the bottles down. You're not going to win it. It's harder. So, I mean, you can try it because it's cheaper, but I would err to like going with something like Funded Next or Tradeify Growth or My Funded Futures. Those three have fairly inexpensive, around 200-ish bucks, trailing drawdown accounts. End of the day drawdown, which means the drawdown doesn't trail on your unrealized gains. It only trails at the start of the day. There's a little bit of pullback there. See, I'm not trusting the long here. And a little bit of a pullback here. Hopefully we get that pullback to like some of these levels here. I want to see this breakout or bounce off of this. Guys, if you are just tuning into the stream, welcome. My name is Matt. I'm CEO of the Rock Scooter Company. I built this trading platform you see on my screen here. I'm also a live streaming trader. I'm also a competitive trader. I won a global futures trading championship last October. I competed in the Robbins Cup last year. I peaked in the top 5 before everyone else I was competing against quit, and I lost motivation to quit. But I finished the Robbins Cup probably in the top 20. I did fairly well, but I wasn't going to continue trading with them all year. Everybody quit the contest. Ooh, that's looking nice. Now I want to decide if I want to make a trade in this Funded Next. I need to make like 500 bucks. Pass it. You see how I said it's rare to break and rare to break, and I avoided the market? You guys are watching me strategically avoid the market. This is one of the tricks we tell you. Rare on top of rare is not necessarily a strong play, despite strong indicators leading into big news like Fed. So, you know, the foresight I have to not take longs here was actually really smart. And so we're just chilling. Like I said, this is a potential long setup off of this orange line right here, but I'm going to wait even further because I believe the market's probably going to go lower. And therefore, I'm going to avoid the trade. When we get right here, I'm going to examine my indicators. This is still strong, and this is still strong to possibly have a really strong bounce here at this orange, but we'll see. Come on, baby. Let's go lower. Liquidity pocket one more time. Maybe. Maybe. See, I wasn't trusting that up move. This is a potential long setup from here on MHP. It's going to bounce, but I think it's probably going to reset below MHP where it needs to be. While the stocks are pressing momentum, I have a hard time believing the index is going to pick up momentum from here. I think it's going to flush and then make its way back up. Nasdaq's bouncing around pretty quick there. Come on, baby. Did you guys learn something? Strategic avoidance. How many people here learned something today about avoiding the market? Gamma says, stay away from trailing drawdown. It's a no. It's a scam. Yeah. So I would say use my funded futures or use funded next. If you want to try something, or top steps growth. Did you guys learn something today? How'd I do? How'd I do with the prediction today? Did you learn something? Strategic avoidance. Don't chase the long. I preached it all morning. Now I gave you guys trading advice, investment advice, but we're chilling on the side, right? Every day learning not to chase, not to be crazy. So now we are at liquidity pocket again, which is about right here. This is always an every single time setup, which is a bounce from here, possibly to bounce to there. Now again, just to demonstrate a possible trade, I'm going to put 1 micro on it. Again, I wouldn't be risking any money on this at all. I'll trade from here right back to this MHP line, and that's it. Like I said, I'm going to play 1 micro in 1 account. I wouldn't copy a single fucking thing I'm doing. Please don't copy my trades. I think this is a guaranteed loser, but I take it every single time. If I wasn't on the stream, I would absolutely be sitting out. But we'll see. If I get like a nice sharp green candle just to test, we should be all right. But yeah, I just put 1 micro on. I'm going to play with 50 bucks. I'm going to rather wait till Fed to do something here to here, and then I'll close it out. Okay. I take this trade every single time. Like I said, 50 bucks. I'm going to trade with nothing. I wouldn't be touching this. I hope the market sells off really hard today. Right here is a potential bounce. And if I'm wrong, I'm wrong. Oh, darn, 50 bucks, right? And I'm wrong. Here we go. Trust me. I think the market's will sell off today, and I told you guys. How'd I do? I was right. Resilience is crashing through the floor. I was right. Gamma, you've been sitting on that short, baby. Gamma banking today. Did anybody short this off of MHP on the break to the downside? I got my puts yesterday. Oh yeah, let me check my put value. They're probably down a little bit because we're still up on the day. I put about 10G into puts yesterday. I did. I bought puts yesterday. They're still flat. One of them is up 20%. Wait, hold on. Wait, no. I'm sorry. No, they're not flat. They are up. I'm up 800 bucks for the day. Total. So my puts are up 7%. So basically I bought puts in case the market was going to flush post-Fed so that I can continue long in the market. Now again, below here, there is no pivot edge to hedge, which is the flow from orange to blue. There's nothing down here to trade off of. Like I said, I'm telling you guys, when I was like, this is a sit out, this is bullshit news, we need to come back down to this white line. If you break blue, the market's going to collapse on itself. All right. Question. Was anybody here long at the top? Or were you also practicing strategic avoidance on the rare on top of rare before Fed and not being a numbskull trying to long it? Is it worth the buy? I'm gonna wait till Fed. 56. We're going 56.08. You guys sat out and chilled. I love it, dude. I love everyone on the stream is fucking learning stuff. And you guys are impressing the hell out of me. I like watching you guys do smart things. That's what I'm saying. I can't tell you guys what to buy or sell, but you know what? I can tell you guys to sit out. That falls outside of your jurisdiction, SEC. I can tell people whatever I want. When it comes to not investing, I just can't tell people where to buy and sell. I can tell people sit out all day long. Avoid the stock market. That's not investment advice. That's touch grass advice. That's do something else advice. So I can tell everybody all day long, sit out. Because that's technically not investment advice. But this is also a free stream. You guys aren't paying me, so I can tell you whatever I want as well. So strategic avoidance is very important to a trader. Now, there's the first bounce point here at this 559 SPY. Indicators are kind of falling apart. NASDAQ resilience is being lost. So just be careful today. I don't tell people where to buy and sell, though. I don't take that liability. When you ask me, I tell you, I'm not going to tell you anything where to buy and sell. But when I'm sitting out, there's a very good reason for it. Even though I thought the market was going to fall, I still didn't take a short because my indicators weren't telling me to short, which is fine. I missed out on it. I'm still way up for the day, so I'm okay. Google is thinking, yeah. Just started your Top Step account. This helped me a great deal. Oh, good deal, man. I'm glad. Sitting out would have been the best move here. Next time, Matt, you'll learn. Oh, yeah. Sorry, Wes. It happens, though. You're allowed to show your P&L. It's illegal. Oh, yeah. That person, I swear to God. You guys ever see ads on YouTube for like these like I call them YouTube traders. They're traders that nobody knows. Nobody knows they're any good, but they're huge on YouTube. Humble trader. You'll see her. She's like humble trader. Chinese girl, I think, posted this post. It was like, I don't show my P&L on my streams because it's illegal to show your P&L. And fucking hundreds of thousands of single male simps that drool over an Asian girl like, that's okay, I'll still watch you. Fucking idiots out there, dude. I'm glad there's idiots in the stock market that listen to shit like that because I need idiots to take their money from. I beat them in trading. Please follow that girl and continue to be an idiot because every idiot out there is more money in my pocket. I swear to God. Drooling Neanderthals. Girl, I don't care. She's a girl. I clean the drool off my bottom lip. I hope there's more morons that follow shit like that. Because the more idiots in the market, the easier it is. I'm going to walk away with their money. So we're good. Yeah, you can't show your P&L because it's illegal. And I was like, what? No. You say that to people? You're telling that to people and they're listening to you? They watch your stream and they're asking you, why don't you show your P&L? And then you tell them because it's illegal? There's a special place in hell for people like you. I won't tell you what. You must be horribly misinformed, my friend, or just scamming directly. It is absolutely not illegal to share your performance statements. As a matter of fact, it's encouraged to show truthful representation of any claims you make. As a matter of fact, the SEC and CFTC both require that your claims survive an audit. Therefore, if you claim something, you must be able to back it up. It's actually encouraged to show your performance reports. Illegal. Whose illegality? Is it your local and state federal laws that don't allow you to show your bank statements to people? Okay. 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 You just said penile. Yeah, now you have to go check her out. Pat is like, ooh, hot girl, let's go. Actually, I was just kidding. Not, I'm not saying she's a hot girl. I don't think she's hot at all. I'm not saying she's not hot either. I'm not trying to say anything about her looks. I'm just making a joke. There's only one hot girl for me, and it's the eye doc. You guys know. Probably a nice person, but this is the dumbest thing ever. You can't share your performance because it's illegal. Yeah, you're gonna. The cops are gonna knock on your door. The SWAT team's gonna show up. They're gonna lock you up with the people that rip tags off of mattresses. You guys to share a jail cell together. What are you in here for? I ripped a tag off of a Serta mattress. What about you? I showed my P&L on stream. Guards, get me out of here. I feel unsafe. I can't be with this criminal. Oh my God. Scramble to get political with the hot girl thing. Yeah, that's great. Yeah, I had to correct myself. crashing all the way down. I don't want iDoc to kick me in the face. iDoc's about to bust through that door. Anyways, can't show your trades because it's illegal. I'm like, come on. All the influencers looking at her like, really? Really? No, you can stand around the water cooler and say anything you want to your friends at your office. I can stand around the water cooler and tell you to buy Apple stock all day long. That's also not illegal. It's only illegal if you solicit money to invest for other people or get paid for giving investment advice and you do it to more than 15 people. Then it's illegal. You must have a license. And that's the only thing, is you must have a license. You don't get arrested for it. It's not illegal. So you can share anything with anybody, including your opinions. You can stand at your office and shout on a megaphone, buy Apple stock now. I love the stock. And you can say it to 1 million people as long as not paying you. There's no law against it. Freedom of speech. You are protected under the First Amendment. Say or do whatever you want, blog whatever you want about whatever you want. The worst that can happen is if you're not allowed to share your performance results, is that broker or that bank could just terminate their relationship with you. As there are certain brokers that are like telling people, you know, don't post our results or whatever, but that's a broker thing. It's certainly not an illegal thing. You almost died. Good save. I'll be real with you guys. I don't think she's hot. I was just making fun of the guys that simp over a girl. They think she's hot. I don't think she's good. I don't think she's hot. Heard that shit through the floors and your ears perked up. There's only one hot girl for me. You know it. The stream crashed prematurely. You guys hear sirens in the background. There's a bunch of chatters. They're wheeling me out in a gurney. Yeah. Everything went black. What happened? Where'd the stream go? But yeah, anyways, jokes aside, don't, like, people are going to always try to pull the wool over your eyes. I'm really known as the person that tells you the truth of the industry. I have nothing to hide. I make a ton of affiliate dollars from the sales, you know, from these prop firm sales, and then I give it, most of it, away to you guys as far as like giveaway accounts and stuff, which, by the way, speaking of that, time to go. I tend, you know, I've done very well in trading. Like my tenure in this role has been as a trader. Okay, this is a group called the Funded Desk. So I want everybody to type in Funded Desk in chat because this is what they're going to offer you guys. $200 worth of credits, and I'm going to give away two $200 bunches of credit. I'm about to give away $400 to you guys. Spend them however you want. So we do this giveaway every single day at 11 a.m. And then sometimes we do multiple giveaways. So we'll be streaming through Fed, so don't go anywhere today, guys. I met with them. They seem very cool. I'm going to be honest with you. I haven't, I'm not getting paid or anything by them. This is just a standard introductory affiliate kind of thing. So I don't really know much about their accounts yet. I haven't checked it out, but let's take a look while we're here. Let's explore together. I found out about them because I saw a post on my Twitter, and on my Twitter account, it was like, post your trading setup, right? And I posted a picture of my trading setup and I won their little contest. And they were like, congratulations, you won the contest. Here's some credits to spend at our, you know, whatever. And I was like, no, it's okay. I don't need it. Give it to someone else. But I'd like to explore you guys and check out a possible affiliate and get a code for you guys and put it out there. So we got 50% off code with these guys. And then it's Rocket Scooter the same. And let's take a look at what they've got. End of the day drawdown, which I like. I saw that. And they have a static drawdown, which I also like. Let's see if I can't get more details about this. Come on. Can I see something further here? You can go in there and adjust. Okay, this is pretty cool. Again, I wanted to explore this on the stream for the first time. My goal with these guys was to go through an honest exploration and see what we got. Let's look at it together before we do the giveaway. You can come in here and adjust your plan. That's pretty neat. I don't think I've ever seen this before. And I'm new to the prop game, but I think that's very cool. You can design your own plan. So if I want more max loss, costs a little bit more money. I want to add more contracts, costs a little bit more money. I want to lower the minimum trading days, Costs a little bit more money. Now you can actually see somebody's scale. You can reverse engineer a trader funding program's risk plan by plotting all this data. Ooh, my engineering brain is going off right now. So every fewer day costs 10 extra bucks, according to them. Every extra contract costs 10 extra bucks, according to them. Every $500 is like 20 bucks or 30 bucks. Super cool. And you have static option and end of the day option. Okay, so let's compare them to some of our static friends out there. Elite Trader Funding is the bee's knees for static, and Funded Next is the bee's knees for end of the day drawdown. So, ladies and gentlemen, let's do a side-by-side comparison. Let's take a look at both of them. All right, let's rebuild their futures. Let's see what the price is. We'll do 50K, 2,500 loss limit. Can I choose a profit goal? What was their profit goal? 2,500. Oh, so let's pick a 2,500. It doesn't. Oh, 2,500. That's static though. So they have a decent 2,500 static drawdown, which is awesome, just like ETFs. And I think it's slightly more expensive though, but it's in the same ballpark. Static. So their 50K static with 2,000 drawdown is 450. Their 2,000 drawdown is 450. 2,500 is 569. Bigger drawdown, more price. It's probably at par with the ETF one, which is really good. Wow, these guys have a static I really like. So let's see if I can adjust that to 2,000 and see what the price is going to be. So 2,000 is $200 a month. Wait a minute. Wait, no, I have to do all the plans. Minimum trading days. Okay, it's going to take a little bit of time to do this. I don't got time to do all of this on stream. But pretty cool, right? I kind of like this. You can actually build. It's kind of like you can build a plan comparable to somebody else and see if it actually turns out to be the same. Okay, so let's do end of the day drawdown. 2,500 max loss. 5 contracts. Can you adjust your consistency roll? Oh, that'd be kind of dope, right? Minimum days 5. End of the day drawdown. 2,500 max. 4,400 profit target. For 219 as a one-time fee. And 75 resets. That's actually really solid. For a $2,500 end of the day drawdown. Now, I don't know anything about they have uncapped daily payouts too. Well, shit. There's a bunch of really good firms popping up. Oh my God. And people still over there trading Top Step. Like, it's the only one out there that's good. There are a lot. I'm learning so much about this. There are so many good firms popping up with awesome uncapped payouts, man. All right. You guys ready? We're going to spin the wheel. Uncapped payouts, man. Oh, that gets me, ooh, that gets me all titillated. Daddy like uncapped payouts. You guys know the rule. All right, we're going to spin the wheel. Dude. Funded Next, Funded Desk, Tradeify. I mean, these guys are all reshaping the game here. I love it. ETF static is awesome. Funded Desk static is awesome. Modify your, like, create your own eval. That's pretty damn cool. Now, I don't know if they don't have straight to funded option. I don't know what their eval parameters are, but hey, you guys that win the accounts, y'all come back and check in with me and let me know. You guys ready to do this? You guys ready to do this? All right. Type in Funded Next in chat. Everything rocket scooter. All you need and all you want. Julius. Born in the bull zone. I don't hear Pickle. Is Pickle out there? Night Doc. Oh well. Rocket scooter. Brr. You guys know it. Burr in chat. Brr. Bunnypreneur. Okay. Rocket scooter, best system in the world. Rocket scooter. Okay, if your name draws up on screen, you have 1 minute to type something in chat. Wow, a lot of you guys entered. Ryan is the first winner for 200 bucks with Fun to Death. Ryan, good job. Ryan, no last name, just Ryan. Type something in chat. Type in anything. I'll give you instruction after that. Hey, what's up, Ryan? You won 200 bucks. Good job. One more person. And I'm going to give away 2 boot camp seats today as well. I'm feeling extra generous. So stay tuned. 2 boot camp seats will train you guys in trade education. As a matter of fact, if you win the funded desk today, I'll also give you boot camp. So Ryan, I'm going to give you both. Congrats. You won twice. 20-day training program for free, dude. Congrats. Mad Yoda, already in the boot camp. However, congrats on your win, Mad Yoda. I will make sure to give your boot camp away to another person though. You're already in the boot camp, Yoda. I believe so. Go do some more giveaways. Hold on. Good job. Good job, guys. Okay, hold on. Oops. Where did they go? Here we do more. Hold on, we're gonna do one more. Congrats on the Fun to Desk, you guys. Okay. Bad Yoda, all right. 200 bucks. 200 bucks. Okay, hold on. I'm just setting up because I forgot to do this in mine. Okay, we're gonna do one more drawing. Hold up. Hold on, question. Except trying. Wait. All right. Okay, chill for a minute, guys. Yoda, you're already in the boot camp, right? Type something in chat, Yoda, through all the flurry. Yeah, you already are in the boot camp. So I'm gonna give away to someone else. Is that cool? Market's still pulling back. We're gonna go all the way down to 5608 today. Okay, we're gonna spin the wheel for 3 boot camp giveaways. Ryan and 3 other people. Okay. But yeah, guys, I'm honestly excited to see ETF making a top of the line static account. By far, that is so cool to see. And Fun to Desk is a comparable one as well. That's just great to see static starting to pick up some steam. I'm telling you guys, trailing drawdown's a scam. Like, avoid it as much as you can. You want static or end of the day drawdowns. So nice to see these companies starting to give you better options. All right, stop typing, you guys. You can only enter one time. RD, congratulations. Congratulations. Okay, I've got instructions for you guys, so hang tight. I'll tell you what you need to do. Type something in chat. My options are up 25% today. I bought put options yesterday at the high of the day. Good job, good job. RD, you got 1 minute to type something. Yo, what's up, Ryan? Okay, I'll give you guys instructions in just a minute. RD, you've got 1 minute. 1 minute to type something. Okay, stop typing, everybody. Stop typing. Can't enter anymore. Entry is closed. Entry is closed. That's the only way. RD is about to forfeit. No! I bought puts yesterday. Just a hedge so I can continue to long the market. Not that I'm bearish in the market. But because I'm going to continue to long the market if it's bullish, I have puts to hedge for Friday and for Monday. Just in case the market dives on Fed, I'm still going to be longing the market off of strong pivots. But if I lose on some of my long trades, like pretend I tried to long today and lost, my puts are hedging my long exposure in the market. So I'm longing in all my prop firms because the market's still kind of bullish.
Matt fires up the rocket scooter. Day trade swings like a wild commuter. Charts dance jig and stocks go higher. Resilience guides like stars.
Magus, what's up, man? Congrats. Now you have typed something in chat.
Price direction begins to shift. Liquidity maps reveal the twist. Market maker hands unseen by day. Trading magic just one play away. Oh, 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 Matt's in the flow, following the charts.
Congratulations, Magus.
Where they go.
2 more people.
Rocket scooter rides through the
Look,
cosmic night.
it's no NASDAQ Cowboy, but it's
Gains in
almost as good as Matt's song. Can't beat the NASDAQ Cowboy. It's top tier AI song. Is there a funded next sale? Yeah, funded next we get 5%, 5% off at funded desk, funded next all the time, which is their prices are already low and we get 5% off of it on top of it. Finor guy. Okay, I'll tell you guys what to do in just a second. And we'll be here until Fed, so just hang tight because we're gonna trade through Fed today. Starlit night. Why do you guys decided to enter the contest and go take a leak? This is a $20 piss you're taking. Gotta type something in chat. Dunded desk, Dunded desk. Yo. What's up, Diddy? When it's Fed, it's at 1 o'clock my time, so it's in 3 hours. The Santa Claus song always loses people. It's addicting. It's kind of catchy though, right? I can listen to this at a Starbucks during Christmas time. Come on now. Oh, you didn't type it in time. Okay. Sorry, bro. We got one more song. What do you want to hear again? All right, I'm out of songs. We need to have another contest to make more songs. My arms are tired and my head is tired from all the head banging. Slide a Tradeify. Look at Ryan over here. When we slip him a Tradeify. Actually, it'd be kind of cool to do that, yeah. I could throw one out there at Fed, maybe. If we have a big showing it then, yeah, we'll do one. All right, Giuseppe. You don't have to type it more, just one less. Mathematics. I like your name. We vibe already. The mods are going to be very mad at you guys if you keep spamming. So you have to type something in chat. Mathematics. Congratulations, you've won. What happened to all these winners? At least people typed and they entered and they... Are you the winner today? We got 2 more people to draw names for. I swear. Mathematics, are you here? Winner got kidnapped. Where'd they all go today? What the heck? Hello? Hello? Haynes won. Yeah, RD won, then he left and came back. Oh my gosh. Okay. Literally, I'm just going to like, if RD, you actually won and you weren't here to claim it. You missed it. Your name is not there. What I'm going to do, if nobody claims this one, then I'm going to play a game with you guys. If the random wheel today, tons of people entered and they decided they're going to, I'll make some coffee. I'm going to enter this drawing that this guy's having in like a minute. I'm going to go make some coffee real quick. You know, the rule is you got to type your name in chat. You got 1 minute to type your name. Boo time. Type your name in chat. See, Boo time is going to win this one. There's no way we're going to have 4 people not here. Boo. Are you saying boo or Boo Ernst? Boo. Remember that? Mr. Burns on The Simpsons? Sarah, they're booing you. All right, Boo's here. Let's go. What do you win? You get free 20-day boot camp or trader day trader training program. You get the whole thing free. Congrats. All right, one more person. So again, after the drawing's over, it's the longest drawing you've ever had. Jesus. After it's over, I'm going to tell you guys how to get the prizes. So just chill. Resilience just went positive, by the way, across the board. So the market is sort of stabilizing here. It's probably going to have a big green candle going back up to the upside. Just chopping around until Fed. Can you type it more than once? I mean, you can, but you can't enter more than once. You can't trick the spinny wheel bot. It knows. Speed hacker. All right. Last winner. So the boot camp is by far the most substantial thing we do. It starts on Monday. It's a very, very, very cool program that we have. I was going to plug it really quick. Hold on. Shameless plug. Let me show you what it is. I mean, it only costs $20 for 20 days. It's a tremendous value already. The reasoning for it being super cheap, and again, that's just my desire to not sell trading courses. I believe that an entire industry of trading education, just like self-help, has spawned up. Good job, Speed Hacker. So that people can make a lot of money off of the desperation of others. And I always found the pricing of trading education is ridiculous. Thousands of dollars for boot camps, and buyer, hurry, 3 seats left, $3,000, come to my weekend boot camp. It's all a bunch of garbage. So I decided to create the world's best day trading education. It's a masterclass on betting practices, and I only charge $20 for it for 20 days. So it's $1 a day. That's it. That's it. And the reason for that is essentially to rebel against charging for trading education. I don't think that it's very valuable to you guys to spend $1,000 to learn something, and most of it you can learn for free. So instead, we charge the bare minimum. It's $20. It's enough that you take it seriously. It's $1 a day, and then we have 2 employees that manage all the content, and it pays the salary of 2 people. We make $0 off of this boot camp, so FYI. And I meet with you an hour and a half every single day to train you guys. So basically, those of you that got it for free, you get to come to the whole thing for free. And these are what basically people have said. I mean, all the customers have been taking it. We've done the boot camp for about 9 months now, and you can just read. Completely different, the best deal ever. It's absolutely nothing like this. People are like, great product, great insight into futures. I finally became profitable. I've been profitable ever since. This product is revolutionary. And I don't pay these people to say this. This is actually what the customers bought. They leave reviews on their own. You can go down and just read. Because it's $20, I think people really feel like they get a lot out of it for basically nothing. So you can go read the reviews yourself. It starts up on Monday. It's every day for 20 straight days. We go through 3 principles of what we teach is how to find proper trend identification, risk and position management strategies, position sizing strategies, where to get in, get out, where to size, and then of course, market avoidance. Stay or practicing market avoidance. Market avoidance is completely like something that you are missing from your diet. Okay. It is by far the key to my high win rate as a trader, market avoidance. Sit out when you need to and have a reason to sit out. You won't ever, you trade too much. All of you do. If you're struggling, it's because you're trading too much. You need to wait for something that matters. Every single thing that moves is not something we're taking, right? There's a rare case that we break through MHB. 10% is rare, and this is rare again. Rare on top of rare leading into Fed makes no sense. Market rallying on bullshit news makes no sense. So I know that we're probably going to trickle right back down to here for the rest of the day. And I did say that in my Discord last night. But so if you think it's going to come down, Matt, why don't you short it? Well, okay. But I'm also not convinced that it's going to short either, because some of the indicators are looking pretty solid to the bull side. So I bet you there's a lot of traders right now that longed and got squeezed, and now they're going to jump in. They're going to try to short. And in a couple of minutes, we're going to get some really nasty green candle that goes like this, right? I've got conflicting indicators. I've got conflicting mentality. I've got market moving on some news that's not real. I got a big news event coming out. Clearly, it's probably wise to avoid the market today. I took my scalps that made sense right in here, and then I've done nothing else ever since then. Like I said, I've made close to... Wait, I didn't update this. Oh, that's right. Let me update that. Sorry. I had some trades like earlier. I didn't even notice that I didn't update that. I had two of those are off a little bit. Sorry. So I'm completely flat, but this is how much I made just in that first little box today. So whatever this is, 5, 66, 73, 79, $8,000 bucks. What time's boot camp on Monday? 4 o'clock. 4 o'clock. And the only reason the boot camp's not free is because people don't take something seriously that's free. You will take it seriously. It's called the perception of value. And it's also a lesson we teach in trading, is that the perception of value is that when you invest in something, you take it more seriously. So that's very true. Is it for subscribers only? No, anybody can do the boot camp for 20 bucks. Subscribers get the boot camp for free. It's a free perk if you use the platform. So the boot camp was just training that I do, and I love teaching, and that's why I do it for free. For if you're a member of the platform, it's part of it. It's like we train everybody that uses the platform, and you can come to that boot camp every single day. Some people have come all 8 times we've done it. Does indicators come with it? They don't, but you can buy the indicators and the boot camp together. It's $100 for the first month to try it out, and $159 after that. And that comes with the platform and all the indicators and stuff. So I'm the CEO of the company that made the platform, and we also created the tools inside of it. So the monthly package comes with everything, and the boot camp's free with it. Yeah. Funded code next is you have to type in Jim. You have to type in Rocket, and you have to switch the slider. I told these guys this, and again, they've got 2 really weak parts of their funnel. And I've told them this, and they don't seem to care that that's a problem. First of all, don't click CF. When you load up the site, it loads on CFDs. You have to click futures first. And then the next thing you have to do is you have to go buy your account. Okay. And you have to move the slider. It's weird. There's a coupon and a referral code. It only works in coupon. That's confusing, right? Like, what the fuck's the difference between the 2 of them? I don't know. I don't understand the difference. So Rocket is a coupon. Let me make sure I type that instruction in chat. Like, that's 2 weird interrupts to a funnel. I don't understand why it's not straightforward. My link should default landing on futures. That's what I told him. I said, we should land on futures by default. The cookie should take you to futures, not the CFD. And we're like, well, they'll know to click the slider. I'm like, no, they won't know to click the slider. These Forex giants come in here and think they understand you guys. They don't. There is no option. You go to a prop firm for futures, it's prop firm for futures. There's no slider. Anyways, I told them their funnel needs to be improved a little bit, so easier access. So every time you interrupt a customer, I'm a genius at making businesses work. I got 16 revenue streams. Let me tell you something. You interrupt a customer for a split second, you're gonna lose a sale a lot of the time. Wait, which one do I click? Oh, I'm having second thoughts. Maybe I shouldn't buy this. They need to land, they need to click, they need to check out. So make sure you click futures at the top. Make sure when you get your plan, you type coupon instead of affiliate code, which is weird. Referral code. What the fuck is referral code then? That's what I'm trying to say. Referral code doesn't work, but it works in coupon. So I got no idea what the difference between the 2 is. But it is what it is. So type in coupon. Great firm. Could use those 2 slight improvements, I would say. So I got to type in some instructions. Use Rocket. Must move the slider to coupon, not referral code, for it to work. And they're like, no, it's okay. Like, and I'm like, no, it's not okay, because when I do a rotating ad for somebody to see your stuff, they just need to say, oh, I just type in Rocket Scooter, we're good. I can't type in a rotating ad with like 3 lines of instructions. By the way, go to their site, click this slider, go to checkout, click this other slider, type it in there, and then by far you'll get. That's the worst commercial ever. The slider screw with you. Yeah, I keep telling you guys that. I keep telling them that. I send screenshots of y'all's chat every day, like the code doesn't work, the code doesn't work. So hopefully they'll change their mind. It needs to be simple. Go to checkout. My link should land you to the product page. Click checkout. 1 box, type in a code, you're good to go. It's like funnels 101. Anyways, great firm. I'm not throwing shade at them. I love these guys. But they were like, no, the customers will know to click the slider at the top. I'm like, no, they don't, because we don't get options in America. It's a company in it's a company based in UAE that does Forex. And the Forex giants are now making futures, and they're all making Forex and futures sides of their business. The website goes to one or the other. We're not used to that. We go to Top Step, we go to ETF, we go to Tradeify. There's no slider at the top. You land on the site, you buy the product. People aren't going to know what CFDs are because they're illegal in this country. We won't have that option. So it's not native instinct for you to look at the top and go, ooh, I can slide. Because if you do go to the website, you might accidentally buy the CFD product. That's what I told them. So people are going to land here. They're going to land here. They're going to try to check out, oh, let me get the 50K. Matt was talking about Funded Next. I'm at Funded Next. Cool. Let me get the 50K plan. Choose the best plan. Nothing here says, this is not futures. Click the slider at the top. Now, you must know up here to click futures. But this doesn't say anything other. So you might go in there and try to get this one. And you might be like, oh, okay. I got people asking me like, Matt, what's the swap type? And I'm like, what? I don't know what that is. So anyways, make sure you click futures. It's a whole different website that our link doesn't drop you into. So like I said, it's a little messy. It requires extra instructions. So if you get lost, just make sure those are your instructions, right? When you pass the eval and become funded on Tradeify Growth, it's a static account, 2K drawdown, no more trailing drawdown. After a certain buffer, it fixes to static. The slider scooted with you. Yeah. People still typing Funded Desk in chat for the 100th time. Yeah, they're not going to be able to figure out a slider. That's hilarious. You want your gift to boot camp? Oh, so here's what we have to do. My bad. Okay. So, Ryan, just gift your boot camp. I'll give it away to somebody later today. I'm sorry, I forgot to tell you guys how to win your prizes. If you won today, open up your YouTube. This is my bad, guys. I'm such an idiot. Okay, go to YouTube. Open your YouTube account. Take a screenshot of the top left of your account to show that it's you on your YouTube. Go to our Discord and send me a message if you won Funded Desk. So Ryan and Mad Yoda, send me a message. Mad Yoda, I know it's you, so you don't have to do the screenshot. But send me a message and give me your email address. Make sure you set up an account with Funded Desk within the day. I give them your email address right after the stream, and you should have your account by tomorrow. Or your credits, and you got to use the credits to buy an account with. If you won the boot camp, do the same thing with the screenshot, but go to our Discord and send a message to our admin. His name is Slacks. I'm going to type it in chat. If you get it wrong, you forfeit the prize. Slacks, I'm telling you once. Slacks. Send him a message with the screenshot and be like, I won the boot camp today, and we'll hit it. Ryan, I'll give yours away to somebody else. Why are CFDs illegal in the USA? I don't know. They don't let us trade them, though. It's considered something that our brokers aren't allowed to let us trade. Probably because they're not regulated here, and the regulators are like in the pockets of major exchanges that don't deal with that stuff. Therefore, it's probably American monopoly on trading just futures and equities products. So they don't allow it here. Probably lobbying from the exchanges. I don't know. What's up, Sam? Good morning. Funded Next. Why? So I don't know. But they've never been legal. Are the training classes recorded? Yeah, if they're recorded, you can watch them at your leisure. Can you talk to Liquidity Gap? Can I talk to the Liquidity Gap again, please? Oh, talk about it. So what I'm looking for is liquidity pockets. I usually like to trade a lot, but this is just a weird day. I'll be honest with you guys. This is not something I'm going to trade anymore until Fed. So we're going to watch and wait. If I were to tell you guys what I think is going to happen, I think we're going to fill this gap right here, 56.08 yesterday. This is the starting point of that big news that we had when Trump was, when China was going to meet with Trump over the trade war stuff. So the market dipped here and ripped. I think we're going to return to that level before FOMC. We're going to price all of that out because that's not real news. That's what I think is going to happen. And while the indicators themselves are bullish, there's not a lot of bearishness here. I don't think the market's going to crash. I think the market's probably going to dip to here and probably hold there in the Fed. So if we're going to take a guess, I think we're going to be like here and here. Okay. I've been good, Sam. How you doing, man? The code is just rocket. Your stupid attempt to be funny. Yeah, no, dude, it's... Yeah, and I wish Funded Next let me be Rocket Scooter. I have to be Rocket there. It's like 3 little curveballs. I'm telling you guys, I'm going to improve that funnel. I'm going to make people... The funnel's going to be so easy. You're going to lose people. They got to if they make 3 mistakes trying to check out. 1 is too much. This boot camp is on Zoom. That's correct, Kim. It's on Zoom. Thank you guys. What is your typical spot on the NQ? Typically, I trade 1 to 2 contracts on NASDAQ and 3 to 4 contracts on the S&P under normal conditions or medium normal conditions. Under the highest conditions, I'll trade usually 3 to 4 contracts on NASDAQ and maybe 5 to 7 on the S&P is pretty normal for these funded accounts. But in this environment, this kind of volatile, crazy environment, you haven't really seen me go above like 3 contracts in NASDAQ ever. I kind of trade small in this environment. All these trades today were like 1 and 2 contracts. So that's all you really need. To pass a trader funding program, you just need like 2 contracts at most. But the next allows DCA, they do cheat. I confirmed with them. DCA. So they allow DCA. Not only do they allow DCA, they encourage it, which is even better. Number 2 is I got confirmation last night. I asked them many times to make sure I got the right answer. Their website says you keep your first 10K profits, then it's 90-10 split. They said that's a mistake. You keep 100% of your profits. There is uncapped profits and 0 profit split. 0 with Funded Next. Literally 0. I made him say it a bunch of times so I could take a bunch of screenshots. Ryan, you won both boot camp and the $200. I gave away a free boot camp to be extra generous to you guys, but you don't need it. So Ryan, you actually won the Funded Next. So send me a message in Discord. I'm Matt, top right. And then just send me a picture of your YouTube. Does ETF allow DCA? ETF does not allow DCA. RD never left. He's already in the boot camp. Oh, that's what I was wondering. Because I was like, it did sound like you were someone that was already in the boot camp too. I didn't think about it, but I guess RD was here. He just never left. Just didn't deny the winning and say pass it. Ernstine, what's up, guys? Okay, gotcha. Yeah, you bought the boot camp. Where do we meet? 3 o'clock Central, 4 o'clock Eastern every day. We meet at Zoom. There's a channel in Discord called Boot Camp. Once you get access and open up all the channels, you go to your Marketplace dashboard and click Claim. It unlocks all the Discord channels for you, and then you should be good to go. DCA is allowed on Funded Next. This is what I'm saying. Funded Next allows DCA. They have uncapped payouts. It's end of the day drawdown. There is no profit split. There's no monthly fee. There's no activation fee. It's a 40% consistency on top of that. They are trying to win in every category. And I was like, okay, I can get behind this. They beat everybody in every category. 40% is better than Tradeify's 35%. Uncapped payouts is better than everyone else that has capped payouts. Uncapped. The first 30 days, you can take half of your winnings after the qualifying number of days, which I think is 5. How's that model sustainable? It don't matter. We be the ones that make it unsustainable. That's the best part. We don't need to worry about it. If it's unsustainable, we need to go make the money and drag those guys under. You see what I'm saying? Fast track blew up, but that's because you got in at the end. I don't know how it's sustainable, but they're Forex giants. And they've made money, and so they know what they're doing. They have a lot of money. These guys are hiring celebrities to promote them. So, I don't know. It could be what I think is going to happen is introductory rules. Usually you bait everybody in with awesome rules and then you change them once everybody's in. It's probably what might happen if the risk is too high, which you just have to be lenient for. A prop firm is trying to really make a splash. Then while the rules are awesome, you guys go milk it for as much as you can. They have issues on the CFD side with denying payouts. Well, right. The moment they deny a payout for unjust reason, I'll cease working with them immediately. So I listen. If somebody ever makes me feel uncomfortable, I actually go straight to the top and say, you denied a payout from my followers and they gave me all information. I'm going to remove your affiliate code. Like I've said that to some prop firms before. And I get the prop firm to prove to me why they denied the payout. And if they don't say anything, then I don't work with them anymore. Did I say you, Brian? No, I didn't say you. But yeah. Trade must be above 30 seconds and also above 5 ticks. Yeah, it's like a, you know, a no flipping kind of rule. And I think you have to make like $200 for it to count as a minimum day. But right, the idea that the rules are immaculate means that they've got something we don't know. Maybe they've got a great idea. But we'll see. The goal is that they're a Forex group that has a whole lot of money in Forex, and now they're moving to futures. Let's drain that money from them. My goal with these prop firms is to put them out of business and put their money into my pocket. Let's just be real here. If there's no profit split, why would they give you an account? Well, because in the sim to funded world, you're not actually in an actually funded account. That always was weird to me too. I was like, what's this whole profit split thing? So in the sim funded, right, in an eval stage or challenge phase or whatever you call it, is actually just paper, okay? There's nothing. But when they move you to what they call funded, all these accounts, they move you to funded. Even my Tradeify funded is also a paper account. So you get paid for your funded gains, but it's still paper. It's not even real money. So if they take 10% profit split, they're not really taking anything from you. In the paper account, you're trading against the prop firm. So I'm trading against Tradeify right now. The money that I'm making, Brett's going to pay me out of his pocket. So once you do very well in the funded, then they move you to live. This is usually the third step with the prop firm. Live is where they actually give you real money. And in real money, there's profit split usually. So in the sim to funded, which all these other funded accounts, pretty much all of you that are funded are right here. The profit split is actually no profit split there. But at the end of the day, there's no profit that you're splitting. They're just deciding to pay you less just as a risk aversion technique. So every 3,000 I take from Tradeify, I get 2,700. They have a 10% profit split, but you know, profit anything. They're just paying me 10% less. Yeah, so that's what they did on CFDs. At first, the rules were super good. They got worse little by little. Yeah, that's exactly what, I mean, you know, I wasn't born yesterday. I know exactly how these prop firms work. When the rules are amazing and they get worse little by little, that's actually a good thing because they basically bring all the customers in on immaculate rules. We start winning, which means we need to be the first winners. And then they start dialing back on the rules. And then it pisses everyone off, but then some people stay loyal. And that's how they build their business. It's a great way to steal market share in the prop firm world. And funded next is great. And was it Top One? They did the same thing. They baited people in. And then within like 2 or 3 weeks, they changed their model. Like immediately, we're getting heat for changing their model right out the door. So the goal is you as a customer, it doesn't matter to you. They've got a big buffer of money. You want to be the first person to take it, right? And then once they start changing the rules, when other people are trying to make money, you already made yours, then you're in and out. Remember, in trading, being first is always the best. You know what I'm saying? DCA is dollar cost averaging, yeah. Wasn't the commission super high with Funded Next? For the affiliate commission? Can I be honest with you? I don't even know what it is. I didn't even ask him. I wish I knew. Angles Mining, you're studying a master's investment finance. Would I recommend going to a trading firm? You mean to like as a career? I've never worked at a trading firm, so I wouldn't know if that's a good career path or not. It all depends on what you want to do for a living. I mean, I'm sure a good trading firm is a great place to learn trading, learn the game from the institutional side. My funded futures expert are still the best in the industry. Tyler, I don't disagree, dude. My funded futures is one of the best plans out there. The funded next and my funded futures are the expert is really good. They're at par with each other as far as the end of the day accounts. And it looks like the funded desk is now very similar to them as well. This end of the day drawdown account with a great model, funded futures is A+, probably S tier. Agree. So open a future prop firm company meeting must be registered in the USA. We have to deal with futures brokers just like Tradeivate, Project Runner, prop firm. That I don't know. I don't think you have to. There's a lot of prop firms that are global that work around the world. So I don't think you have to actually be in the US to run one. My typical stop level in the S&P and NASDAQ trim trader is 10 points in the S&P and 40 points NASDAQ under certain volatility conditions, such as normal. Markets abnormally volatile. What I do is I look at the 1 minute candles and I take the biggest candle in the last hour on the 1 minute, and I decide that's the volatility. So an example is we're in a normal volatility state. So I'd be using 10 points on S&P and 40 points on NASDAQ, which is equivalent to 1 point in SPY and 1 point in QQQ. I trade from option strike distance to option strike distance relative. So when the market's unusually volatile, what I do is I put on a 1 minute chart and I go through the past hour and I say, what is the biggest 1 minute candle in the last hour? Probably maybe this one. And I say, that's my expected overshoot of a pivot. So 35 down to 27, it's less than 10 points. So I still use 10. If that candle was like 30 points, then I would use a stop loss of 30 points to account for the volatility, but I would adjust my position size. Because when the market is that volatile, you could hit your strong pivot and then overshoot it by that much before it goes. Volatile markets can do that. So if I normally is going to do 3 contracts in a non-volatile market, like trading right here, where it's nice and sharp with a 10-point stop. If the market I identify it as volatile, then I give it 30 points as that example. If I count and there was a 30-point candle, then I give it 30 points to overshoot. And instead of putting 3 contracts and holding 30 points, I put 1 and stop 30 points lower. So 3 contracts moving 10 is the same as 1 moving 30. Same profit loss. So I would do 1 contract and then 1 contract and then 1 contract and then stop really tight off of the last entry right there. So I will usually split my position up into smaller chunks and build a rounded pivot, accounting for that volatility in case markets are volatile. We cover all this in the boot camp. Ryan, you messaged me? All right, bro. Cool, man. Appreciate you. For the eval accounts, I wonder if some of those firms take opposite trades in live account. I'm sure they absolutely take the same trade in the live account. So let me tell you how I would hedge a prop firm if I owned one. I wouldn't be trading against my customers. I'd be trading with them. If I are on the eval side, I notice that everybody's long and I've got risk on the table. And I was to look and there was $100 million worth of long risk on the table and 200 million short risk. Okay, so let's talk about it. So there's more people longing than shorting. And if I was owning a prop firm, I'd have to say, shit, if the longs win, I got to pay a lot of money compared to the shorts. So therefore, I must also be long in my real account. I will mirror the biggest side in my real account. That way, if the market goes up, then I've made money in the stock market to pay out the winners. If I have long exposure and the market goes down, then I lose a little bit from my long exposure, but I make a whole lot by busting out the bigger side. So it's actually smarter to hedge in the direction of your clients instead of trading with them. Now, does that make sense? Best of both worlds. If I long with my clients and the market tanks and I scoop up all of their activation fees and reset fees right in my pocket, and I just lose a little bit in the market. If the market blows up out of the water and everybody here was long, well, I was long with them. And now the money I made in the market pays the winners against my prop firm. So you should always trade in the direction of your customers because that's where your risk is. Remember, the goal of a prop firm is to make money off of selling accounts, not making money in the stock market. Oh, believe me, the easiest way to make money in the prop firm is to bet on the highest probability thing that you have, which is, what do you think that is? What is the highest probable thing that you have from a prop firm's perspective? Let me see if you guys can guess it. Yeah, the failure rate of traders, right? That's your bread and butter. You guys nailed it. Yeah. Customers like blowing their shit up, right? So as a prop firm, you want to make sure that that's your core business model is traders blowing up. So you're not going to try to put a lot of money into the stock market to gamble your company funds on market direction, which is highly unpredictable. As a savvy businessman, you would realize that the failure rate of trader is very high and consistently high. So let's bank on that. So we must hedge by trading in the side of my customers to offset my risk in case they accidentally win. Trump tweets something, the market goes up 10%. Oh, well, I was long too, baby. So we're good. So whatever I make in the market pays you off. Now, if I'm on the wrong side of the market and I lose with my customers, the amount that I lose in the stock market is offset by the money that I made plus some on the failure. So typically customers aren't going to be biased one-sided like that. Your customers are going to be 50-50. as of which, if your customers are 50-50 split on their risk, you don't need to hedge anything. The majority of the people longing the market, if the market sells off, the majority of people are long are all going to blow up. And half of the people that are short are also going to blow up by shorting the wrong way. So when your customers are balanced 50-50, as a mathematician, my risk model would be I wouldn't even trade the market. I wouldn't need to hedge. The market goes one way or the other, I'm probably going to be fine. I might hedge just a little bit in case the market blows up one way or the other really fast. But if your customers are tilted very heavily, like everybody's long and nobody's short, you must long with them. Is that making sense to you guys? If I was running a prop firm, I would make sure I did exactly like that. I would not at all do anything other than to hedge my customers being polarized one way or the other. Make sure I don't accidentally go insolvent because of an accidental coin flip that pushes the market up and rewards everyone with hundreds of thousands of dollars of gains because Trump tweeted something. Right. Not gonna lie, you trade SPX and getting the futures, but this prop firm stuff sounds ridiculously overcomplicated. Jordan, you're right, dude. It kind of defeats the whole purpose of going from Greeks to futures, doesn't it? Right. So the thing is that once you get used to it, it's not too bad. There's additional trading rules that makes it overcomplicated. So let me tell you some of the tricks to get rid of the rules to make it as simple as possible. You want to start the easiest place to go. That's like the easiest transition. It'll be one of your most expensive options, but it's what I do. Tradeify straight to funded. I pay for these accounts with my own cash, by the way. They don't donate anything to me. I buy these things. About $550 and it's just a straight funded account. That's it. You just make a profit target and you're good. And there's a daily loss limit and a squeeze point. And that's basically it. The only rules are you can't lose so much. You have to make so much. There's other rules like trailing drawdown and things that make it a little more complicated. And that's what kind of makes some of this hard. So just avoid anything with trailing drawdown because it's an extra shitty rule that is just as complicated as the Greeks, right? Greeks are like, hey, I picked the direction right, but wait, I'm still losing my trade. Well, that's how the Greeks work. And then, trailing drawdown, it's like, I picked the direction right, but how did I still blow the account up? Well, because you took some volatility. You're like, wait, what? Can I show NQ? Yeah. Not doing any trades till Fed, you guys. So NQ actually came and filled its gap a second ago, right off the bottom. S&P hasn't filled its gap yet either, but NQ is still trying to hit that, what I call the bullshit level from yesterday's news. We've kind of filled that gap in right there. QQQ and NASDAQ, let me show you what we're seeing. We're still trading within the DD bands. We're awesome. We just basically made its way to this particular level that the market needed to like undo pre-Fed. And then NASDAQ over here off to the liquidity map. Like I said, they're just going to wait till Fed to do something. NASDAQ is sitting in what we call no man's land. So in this particular setup that's called BS&D, you see those right, BSD? This particular setup, below this blue hedge pressure, there is nothing you can do. There is no flow. We don't try to predict the flow down there. So in this mode, we wait. This is a there's no predictable flow and the market is just kind of chopping all over the place. It's kind of a gamble from here. While the indicators all kind of point up, the gamble is to the upside, but I still am not going to do anything until Fed. I'd like to see the Fed take us to better key pivots. I like to see this go to here. Good long strongs today are going to be off of 725 and 631. Not from here. This is not a strong pivot. And if it rallies from here and I'm out and I miss it. But these are really strong pivots. This is a 90%er and this is a 92%er. Conditions are ideal. So I'm going to wait for dips to the good spot and take longs off of those. That's basically what I've been doing all morning. Yeah, time to relax and chill. So I trade trades during the Fed, after the Fed comes out. I never trade into it. I always wait after, and I let the Fed create volatility that I act on. Like if the Fed dumps us to my strong pivots, I can long off of those. If the Fed pops us to your strong pivots, you can short off of those. So today in NASDAQ, I I think this is, let's kind of draw them. So now we have a QQQ equivalent, which is right here, MHP. So let me type this up. I'm just estimating where that's likely going to be. So inside of here, we've got pivots between these two levels. Make them slightly bigger. It's a little smaller, you guys can see it. So this is a strong pivot. This is a strong pivot. This is a strong pivot. And we're kind of sitting in no man's land. And also in the liquidity map, it's also no man's land. It's not really smart to trade from here. So what I do is when the market's doing this, I let it pick a direction and then I make my decision off of that. So this consolidating range is a coin flip if you're trading from here. If the market falls, I'll be looking to take longs there. If the market rallies, I'll be looking to take maybe shorts there. And I might still decide to sit on the short because the indicators are still bullish. High dynamic pivot is 56.23. Okay, thank you, thank you. You take, so yeah. I stream every day. Yes, Jack Test, I do every single day. 8:30 in the morning until a little bit after lunch. It's called Futures Desk, not Funded Desk. What was I saying? Funded Desk? Oh my word. Funded Futures, Funded Next, Futures Desk. I get tongue-tied. They all... My bad. Where did I type? Futures. Futures Desk, not Funded Desk. My bad. Futures Desk. Oh my God. I'm getting like... I'm like in the Twilight Zone here where they all start to... Everything starts to like blend together and sound the same. Free desk. My bad, guys. If I said Funded Desk today... Oh my God. I'm fired. I'm fired. I know. My bad. Can you talk about psychology? Today's been rough for you. Sorry. Well, okay. First and foremost, if today's been rough for you, you're already done trading. Psychology rule number 1. Once you start feeling off, you're done. Don't even touch it. Don't even try. Let the market be crazy. Let the market move and don't touch it anymore. Once you start to feel off, you're done. Ryan wins a Funded Desk account. So Brian can be the first person with Funded Desk. We're gonna make that company. I hope they don't watch the stream and be like, that's not our name, bro. Ah, my bad. Futures Desk. Okay, everybody go to futuresdesk.com. That'd be like they call me my company. Yeah, go to rocketpooter.com. Wait, what? Rocketsquirrel.com. Wait, what? The Futures Desk. I think that's pretty sick that you can change. I didn't even know you can do that. That's the first time I ever looked at the website, to be honest. You can actually create your own eval. That is super sick. I like that. Wait, you signed up at Funded Desk? Oh my God, guys. I hate y'all. How did I come up with the stages? What do you mean? Can you use Rocket Scooter software in Mac? Yeah, you can, Tom. It's web-based. Is it a standing Funded Desk? Yeah, is it like, does it have a little button? Does the Funded Desk like raise up and down? Does it spit out money when you win? The socket cooter. So anyways, back to the psychology thing. There's a couple of things. Number one is I only trade on high volume pivots, and that helps with psychology. All these pivots that I tell you guys, like 80% and 90% are actual backtest numbers, right? It's much easier to keep your psychological level intact if what you do has a high probability of success, which means you're not shaken up as much. Every time you're shaken up on a trade, it always kind of impacts you, has an impact on you so that you can, you know, not perform as well the next time, maybe be a little extra scared or a little kind of timid to do anything. So limit yourself to trading only what you know works the best and then wait for it. That's the best thing to do in psychology, is to wait for something with high probability. Right now, if I was to gamble on direction, I'd get it right half the time and wrong half the time. That takes a toll on you mentally to be wrong half the time. And what if you're wrong half the time on like a 5-day losing streak because you're just bad luck while you're wrong half the time, right? So by me trading things that only work 60, 70, 80, 90% of the time, I win more than I lose. And so it allows me to continue to maintain my confidence because I'm not always gambling. So a higher loss rate is why most traders suffer with psychology, because you're losing a lot and it really affects your ability to trust your winners. Imagine you like lose and lose and lose, and then finally you make a little bit of money. You're scared to hold on to it because you're still crawling back to even. And so when you trade higher probability setups and wait for them, your win rate will go up and therefore your confidence will be higher. That's a good rule of thumb. So if what you're doing has got you on an unlucky win streak, that just happens. You know, we lose on losing streaks a lot of the time, just unlucky. So if what you're doing actually doesn't have a high probability win rate, you win half the time, you lose half the time, then there's no way you can get better at that. You're always going to be dealing with that. You probably need a better system. Maybe explore and find a better thing that works better for your trading style. It's very rare to have something that works more than 50% of the time. That's genuine edge. I have something that works more than 50% of the time for me, my trading style. So even if you use something that works well for someone else, it may not work for you as well. Everyone's different in how they trade. But find whatever it is out there that works for you that you can say works most of the time. And then focus only on that. Don't focus on anything else. Don't focus on anything outside of the range of boundaries of that one system. For me, right now is no man's land. Half of you guys in this chat are probably sitting out because you've learned from me. The other half of you are probably sitting in a long or short right now. And probably those of you that are short, probably shorter there. And those of you that long, you're long there. And everyone that's long or short right now is probably upside down a couple $100 while you're waiting for this to play out. Can I get an amen? Everybody that's long or short right now is going to have a very, very tough time growing as a trader because you're going to spend a lot of time battling your emotions rather than battling the market. Okay. So because it's a 50-50 shot, you're going to lose more often than somebody that's waiting for a better setup. And therefore, you're going to have that like hit more often than other people. Should I get the options, all tools in the software? Yes, Tom, you get the all tools. That's what you need. Rocket. I like when people call me Rocket. Can we talk about psychology a little? I've had a week, feel like quitting. At this point, I'm wasting money. Been trading for a year, but damn, you don't know anymore. Well, I've been talking to you, Sam. Slow down. Try something different. If something is hurting you or not doing well for a year, it's time for a change. Try something different. I'll recommend our boot camp to learn something that's different and maybe try something new. And if something new, just rewind the stream, the last 10 minutes we're talking about it. Try something new and then see if that works. And if that doesn't work, try something new and see if that works. It's time for a change if you've been doing the same thing for a year and it's not working. It's because what you're doing doesn't work. There's no edge in it for you. So try something different. What's the white line on the futures chart? So white lines are always gap fills in my color scheme. And so this is filling what I call a, not really a gap, but this is where the market, actually this is a gap. We gap down when we fill, sorry, this is not a gap. This is, I use this for completing gaps or completing moves. This is the place where we opened at and then rocketed on that like China trade war news. So this is the return point to make that event a non-event. So that's what that is. It's actually not even needed anymore. The S&P has one. I'm just marking where that event started. I don't think this is an event to move the market higher. I think this is a non-event and it's a bullshit news that needs to price its way back out. That's why that's there. I hit the nail on the head. Yeah, so like I said, if that's you in this boat, I just want everybody to know it's not like you're a good or bad trader. It just means that you can do better, right? We've all been here, and anybody guessing right here, half of you are going to win, half of you are going to lose. As a matter of fact, most of you are 50-50, and most of you are probably losing because you shorted at the low and it's here, and you longed at the high and it's here. And so I would say maybe 80% of you that are in a position right now are upside down, even though you're split 50-50. And that's the great part about the stock market. Consolidated range with no discernible flow. You're just betting on a coin flip and you're betting on momentum coming out of nowhere to pick a direction for you. And it's going to be tricky and choppy. So what I'm doing is waiting for a better high probability setup where those arrows are. And I'm going to wait for the market to squeeze all of you guys out. And then I'll take my decision next. Imagine right now you are long the market and then the market starts selling and selling and selling. And now you're panicking because you're upside down. Now you're panicking. Now you're panic selling. Yeah, you're the liquidity to me when I buy. What if you're short down here? Oh crap, it's going up. I'm squeezing. Now you're the panic buyer at the top. And you're liquidity for me to sell. Right, so me, I'm going to exploit and be first on a reversal move against everyone else's panic. Is 68% win rate with one-to-one trades good or decent? That's not only good or decent, that's immaculate. If you can maintain a 70% win rate, it doesn't matter what your reward to risk ratio is. If it's one-to-one, that's me. Most of my trades are actually one-to-one setups with a 70+% win rate. Ryan's exactly like me. If you don't have a high win rate, again, a genuine edge can trade one-to-one because you're winning more coin flips than not. So you don't need to take additional risk or time in market. That's me. Liquidity pockets are almost always one-to-one trades, and they work 90% of the time. So if you have a 50 to 60% win rate or less, you kind of want to be greater than one-to-one. You're gonna slowly grow. But if you can maintain 70% plus in your one-to-one, it's an immaculate. That means you've got a genuine edge, Ryan, which is good. Market will crash if Fed doesn't lower rate. I think if the Fed doesn't lower rates, the market's going to price in something. It's going to move and then reverse. I feel like the market's waiting for a reason to take action. I feel like there's a lot of people that are long the market off of the Trump news. It's the obvious trade right now to be long. I think there's not a lot of people shorting the market because it's clear that they're going to work out a plan to fix the trade war. However, I don't think they're going to fix it anytime the next month or two because they haven't even started their talks yet. So the longs that bought calls are now bleeding theta. Remember, back here on this day, I bought calls for 505 and 515 QQQ. And I was smart enough to sell those calls pretty much, actually 515 is about here. I sold them like right here at 100% profit. And then they've been basically whittled away on theta for the rest of the couple weeks. My delta gain was offset by the theta loss. So, okay, it's time to sell. When you're not gaining as much delta as the theta you're losing, it's time to close your option position. So a lot of people are in that boat of buying long-term calls. And right now the market's just bleeding their theta. So right now, I think what's going to happen is the market needs a reason to move. There's people that were long that want to take profit. There are people that are short that need to cover. And they're sitting here flat waiting for somebody to move. So if the market pops on Fed, because Fed's not going to cut rates, we know this. The Fed's going to do nothing. So if the market pops on the press conference because Powell's saying something that's positive or hopeful, the longs are finally going to sell and take profit. Okay. If the market dips really nasty, your shorts are going to cover. So I think that the Fed today is going to give us a fake out move, probably up and then die, or just straight up die. And then next couple of days we do this and then we get back to maybe consolidating lower, waiting for trade war to get better. I honestly think until they actually make some solid ground in their meetings that we are kind of like doomed to be inside of here for a long time. We've learned our lesson. The last trade war is the same shit. The market's waiting for the resolve. The rumor is no longer going to push it. The rumor pushed us to here. Now we're floating in the middle, waiting to get action. So I think with no action from the Fed, the market's going to start to lose patience, and they're finally going to have some longs taking profit off of any pop we get. I feel like we're going to pop and then drop. Now, again, just speculation. That's a guess. I have no reason other than just feeling it out. I think that that's what we do. What do you guys think? That's a good question. Who cares what I think? Sam, you're saying what you do has made you money before, so maybe time to change? Yeah, maybe time to change. Like if you're struggling with something now, it's also, the market's kind of weird because like certain strategies work very well in a bull environment and work very well in a bear environment and work very horribly in a choppy environment, right? So start to think of the market in three different modes. Non-volatile bull market, okay. Volatile bear market, okay. Flat market that's choppy, okay. You need three strategies. Whatever you're doing might have worked in a bull market, but isn't working in this kind of flat, choppy market, okay. Then find a new strategy for the flat, choppy, but don't change your bull setup, right? How long am I going to stream for? I'm going to stream through Fed today, so I'm going to stream for the next 2.5 hours. Team sitting on your hands. Sorry for your phone had to cut out. Hopefully, Sam, that helps you out, dude. Yeah. So try to think of like when your strategy did work, what kind of market were you in? Trust me, I have a different strategy for each market, and we train you guys on this. In my boot camp, I have bull pivots and bear pivots. They're all different. So like I have more bull setups than bear setups. They're completely different. And they have different circumstances I use them for. So I actually trade a bear market much different than I do a bull market. So I have a strategy for each. And it's good to have a strategy for each because like when you have volatile markets, you need to trade smaller and take wider positions, like get in at wider spots. That may be fair to trade smaller and then have wider stops, right? So the way you behave in a different market is different. And our bootcamp covers all of that. I mean, you're welcome to join. Unsolicited review, Raj Patel. Raj Patel with the Texas flag on his icon. Bro, where in Texas are you from? Fellow Texan here. I'm a Houstonian. Brought Rocket Scooter software, only viewed 3 days of bootcamp and have learned more in 3 days than any time in the past. Matt explains the market and trading unlike other figures out there. Well, that makes me feel happy, dude. Very excited, dude. You're in Dallas? Well, now we're no longer friends. You evil, horrible Dallas people. I thought we were gonna be friends. Just kidding. There's some fake, funny rivalry between Houston and Dallas. I don't get it. I don't know why there's rivals. Like, why they think they can be rivals with us. Like they even compare. That'd be like a high school student playing against an elementary school student. Not even. I'm just kidding. I'm just playing into it. It's not a real rivalry, guys. And Matt is a Cowboys fan. Yeah, that is the one thing I do like the Cowboys. I'm not really much of a Texans fan because I was a huge Oilers fan when I was a kid. And I love the Oilers, man. The Earl Campbell, Warren Moon days, those are my days, man. And then when they went off to the Titans and then we got the Texans just never really were like that hot. And the couple years that they went to the playoffs when Matt Shaw was quarterback, they got smoked by Tom Brady. So it was like, you know, womp womp. We've never been good since then. That's awesome, dude. Raj, thank you for the kind words. I'm really glad you're enjoying the boot camp. And I go to Dallas all the time, man. So if I'm ever out there, I'll look you up. So I'm streaming through lunch. Do I want you to make you food before you head out? Yeah. Can you like meatball? That'd be good. Thank you so much. Rangers or Astros? Astros. I do like the Astros. The Astros are one of the best teams out there this last 10 years, man. They've been crushing it, man. Astros have been I think of all the sports teams we have, the Astros have been the most winning of all of our sports teams. The Rockets had some good stints before, you know, like Rockets are doing good this year until we got beat by the Warriors, but yeah, the Astros have been like our best team, I think, of all the sports we have. Because the Astros were good when I was in college in like the early 2000s. The Astros made the playoffs a bunch, and then in like the last 6-7 years, Astros have been crushing it, man. Dragma's pretty good. Yeah, that's why I was a Cowboys fan when I was a kid. Back in those days. You're just chilling now, Wes? Okay, that's good, man. The refrigerator Perry. Yeah. Chicago, man. Brady. Yeah. And so the kind of the crappy thing is that Tom Brady beat everyone. And the problem was with like Matt Shaw was like a new quarterback and he was actually not that bad. His team was just bad. Our defense was just not that good that year. And the offense was good. And the 2 times into the playoffs and got smashed by the Patriots because like you could see the difference. And also it's just Tom Brady was just that much more experienced against, you know, high stress environments than we were. You can just see like the professional levels were like the way that he performed was just like perfection. He outsmarted our team. He outplayed our team. I mean, it was sad to watch us lose, but it was great to watch like a master at work. The way that they beat us was just, I mean, every play was just outsmarting us. They were always a step ahead and you could feel it, man. And it was like kind of cringe watching us just like, it's kind of like watching a JV team play a varsity team. And you're just basically, they have so many better plays, so many better reactions. And so Patriots did earn that victory. And although we had a good team, a goodish team that year, we lucked into the playoffs both times and we made it. Texans always get beat by the Chiefs too. Yeah, I know. I don't even go to Texans games anymore. I'll go to Dallas every once in a while. Maybe I'll catch a Cowboys game or something. But the Timberwolves, yeah. How'd your Wolves do against the Warriors? Well, Warriors are crushing it, man. The Rockets were so strong this year. I was really sad. She gonna whip up a quick meatball, making that meatball, baby. I made meatballs last night. It was good. Cowboys was America's team back in the day. Do I watch UFC? Not that much. But I mean, I'll if people are like hosting a UFC event, I'll go watch it. But I don't follow it. Ryan's from Dallas Fort Worth, and you also don't care about woke sports. What happened with Ashton? Oh, there's no bad blood at all. No, Ashton and I merged forces early days of Rocket Scooter and combined our Discord rooms. He had an options focus, I had a futures focus, and it became more confusing to everybody to drop into a room and have two different places where they could go. And it was better for both of us when we made the Rocket place for each of us to have our own identities again. So Ash and I still work together a lot. But we just basically each have our own brand. So he started his a company that's focusing solely on options. So it's kind of weird to like come to a community and you've got an options teacher and a futures teacher and you have two different groups inside of it. The vibe was just never cohesive. It'd be a good idea for two futures traders to pair up. And we were like, well, if we pair up with an options guy and a stock guy, that's what my mentality was. We'd have more products for people to choose from. But it was like him merging with us was hurting his business and him merging with us was hurting ours. It's actually not a good idea to have, I think, a Discord with split focus. Because it kind of sucks if the options, like if the options traders are having a bad day and the futures trader is celebrating. It's kind of like, yeah, right? You're kind of like, there's like this weird feeling. And just the vibe was kind of like, so then I decided never again to have like an options or stock or anything focused that's different from futures. We're going to focus solely on futures in our group. And like, it was basically just that. And like, we support him. I still tell everybody, he's one of the best options teachers out there. Ashton crushes it, man. Ashton was very crucial in helping us mold the monthly maps into what they are now too. He did a lot of studies with me to help shape it. Yeah, and then you have two totally different trading styles. And I was like, that's cool because traders can learn more. But it's like, we thought people from futures would also want to learn from him. And he thought people from stocks would learn from me. And basically, people just follow who they like to learn from. And so you basically have two different parties in the same house. And it's like, you know, I'm sure he was very happy to have like, you know, his own identity with that wasn't like overshadowed by us and our bigger community. And then their new group is fantastic. They're growing really fast. And no, we're still buddies. We talk all the time. Ashton's good. He's really good. He's one of the best options teachers in the space. He's really good at teaching options. He knows everything about options. You would be grateful if I could type on the buy or sell page. I don't know what you mean, ABD. English is not your first language. What are you trying to ask me? Would be grateful you could type on the buy or sell page. Maybe try translating that again. Well, maybe you can't understand me if you don't understand English. What? The Fed talk is at 2 Eastern, 1 Central. Ashton Nolan, Ashton Kutcher. Yeah, we partnered up for about a year. And we combined our Discords. While at Microsoft, got to party at the Dyken Park. Lenny Kravitz played. Very good time. Oh, nice. Nice. I do a different way of trading. It's not good to partner with anyone. That's also part of it. Like, two people that partner up should teach a similar style of trading. That also is helpful. So time when they talk about goes live, Jick test, yeah. So at 2 o'clock Eastern, which is going to be in an hour and 40 minutes, Fed's going to be up. I should make the title of the stream FOMC. Bum, 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 bum. Come on in. What's up?
I spent all night making you green juice, and you did not drink my green juice.
Wait, I didn't know there was green juice.
There's 2 in there. And you choose matcha over my green juice? Are you kidding me?
I was confused. They were both green. No, I didn't even drink.
How can you not?
I didn't even drink this either.
Well, then now you have to drink.
Nah, this is horrible. I don't like this. Oh, that's the worst. Ugh. Oh my god. Where'd this come from? This is so good. I didn't see this in the fridge. I was in a hurry. I woke up late, remember?
It was right there.
Green juice from Alcas. All right, look, check this out. Let me see.
Green juice for a green day.
Hey, look at that.
I don't see it.
Look at that. Meatballs, baby.
I'm sorry, it didn't look so good. I didn't do the presentation right.
I'm gonna put some parsley on the top of that.
You want me to?
No, I was just kidding. Don't walk 3 flights of stairs for parsley. I was just kidding. Thank you. Look, I made monies today again. Fed day today. Let me ask you, my favorite student, iDoc. Tell me what you know about Fed day.
It's usually on a Wednesday.
How often?
Once a month.
Nice job.
Quarter.
Once a month. Yep.
Once a month. Okay.
Tell me what you know.
That they determine interest rate cuts.
Of what interest rate? Do you remember what it's called? You probably won't remember. Sound like I told you.
Wait, hold on. Wait. Can you give me a clue? What interest rate? What are they called?
Yeah, it starts with the word Fed, federal Fed, or the Fed. Sorry, Fed.
Federal something bank.
Oh no, not the name of the bank. The Fed funds rate.
Oh.
Tell us about that. Tell us about that rate. What does it do?
Basically, if they increase the interest rates, then that means that most banks won't loan out or won't make it easy for people to get loans because they'd rather take their money, give it to the Fed,
Deposit it in the Fed.
Yeah, the Fed, and then get a higher interest rate back. But if they lower interest rates, and if they lower the interest rates and then these personal banks do not get a higher return, then they will make the funds more available for the public to loan, and they will drop the rate so then it's competitive against other banks. Did I do a good job?
Damn, dude, that's not bad. That's exactly right. Yep. So the Fed has like a handle to stimulate and destimulate lending. It's a competitive rate. The banks can deposit money in the Fed to get a fixed rate return. 10 out of 10. I explain to her to Fed every once in a while. iDoc gets bored, so she's trying to learn all these new skills. She's learning Spanish right now. She's learning programming. Now I'm teaching her finance a little bit. So.
Well, he went on about it for like an hour, so something stuck. I just didn't know how to teach it because I've never had to explain it back to you.
I'm bad.
But I retained it. I was like, okay, I get the concept.
Yeah. So the Fed has 2 purposes. They changed and lowered that interest rate so that it basically, in a nutshell, stimulates or destimulates lending from participating banks to lend to either other banks or other borrowers, right?
Borrowers.
So the higher the Fed funds rate, banks are less likely to lend money out and more likely to deposit. Less Fed funds rate, banks are more likely to take the risk and loan rather than deposit. So it pushes credit out, it pulls credit in. It's like a credit vacuum. The Fed has another purpose. Do you remember what that is?
Sorry, I was watching. Oh, print money.
There you go. How does that money get circulated?
I just remember this is how
That was
inflation...
I taught you a whole lot in one day. Yeah.
I was like, this is how inflation.
It's not bad, right? I'm very impressed. That's actually super impressed. I put you on the spot and you nailed it. Good job. Yeah. So the Fed prints money and it circulates because what they do is they buy U.S. debt from the Treasury.
Right.
Yeah, they buy Treasury. They buy notes from the Treasury, and then so basically the Fed will print fake money and then buy debt with it and hold U.S. debt, and then the Treasury takes that money and then circulates it.
Okay, you might have to.
They basically print money out of thin air and then the government circulates it. It's a fucking weird system.
It becomes like a loan.
We
like
own
an IOU.
Yeah,
right. In dollars.
Right. The Fed enslaves the United States of America by buying our debt and charging interest on it. Yeah. For the most part. Well, not charging interest, but gaining a yield on those notes. So basically when you buy debt, You buy a bond, essentially, is you're holding somebody's debt for a fixed period of time,
Yeah.
and then after a certain amount of time, they give you a fixed return. Not like a not a CFD. What's those things that you?
A collections agency?
No,
Like,
like what are those things that you buy from a bank? You deposit your money, and then like 7 years later.
CD.
Yeah, so it's kind of like you buy someone's debt, and after a fixed amount of time, you get a fixed return.
Is that what a CD is?
No.
Oh.
But it behaves the same. It's the same kind of thing. You deposit your money, and then you get a fixed return at a certain point in time. Right?
Okay.
Not a CD, but just that's what you would understand, because you've done those before. So what the Fed is doing is the government basically owes the Fed more money than the Fed buys from them. So basically, the government owes the Fed a yield every year, which is more money than the Fed prints and gives them. Fed just makes up money and gets money in return. Kind of nice. I'm in the wrong business. I could be doing that for a living. People say Burke is the money printer. Good job. Very impressed that you remembered all of that.
I just remembered up until you
Why is
talked
he
about.
sticky? His hair's sticking together.
Might be plastic.
So, last question. Why is Fed Day important for traders? Why do we care? Why am I streaming until 2 o'clock today?
Because the market reacts to it.
Yeah, the market gives you like a big giant slap in the back of the head sometimes. So the Fed days are important because, people are looking at Jay Powell to cut interest rates because that stimulates Wall Street a little bit. Markets go up usually, but he doesn't want to do it because the reason to control interest rates is to lower inflation, right? So inflation, when prices go up, usually come from us buying a whole lot really fast, and then competition makes price go up. The more commerce, the higher prices go. And so giving out more credit, which is giving people more money than they have to spend, even more. Yeah, even higher. So cutting rates, which stimulates lending, which stimulates credit, stimulates extra purchasing, which inflates prices further. It causes inflation. Yeah, which also makes it harder to buy things, which makes it easier for them to default on their credit, and therefore markets can collapse if you cut rates too quick into inflation. You get it? So if shit becomes too expensive, we can't pay off our credit card and we all default, and then things start to crash, and you don't want that to happen. So Fed can't cut rates at the wrong time. If they raise rates, Wall Street hates that shit, markets sell off. This happens. Because the opposite is true. When they raise rates, credit dries up, and then we can't overspend. But then inflation, can naturally come down on its own, right? So with tariffs, it's like a blanket inflation that's affecting everybody. So we, as a trader, we look at it and we go, well, tariffs created this inflation problem. So Fed's likely not going to do anything. So we're like, okay, they're probably not going to do anything. But we still got to watch because the market still flips shit anyways.
Brian, on the mobile phone, when you add someone, it won't bold it for you. It will only bold it for people that's on the computer. Just FYI, because I tried it and I asked the same question. I was saying that, like, if tariffs are there to stay, my glove business is gonna blow up.
Yeah, she's got a glove idea. She's inventing a product right now. I'm not gonna spoil it for you guys. You can steal it from her.
I created the solution. Downstairs, you'll see a mess downstairs. So I'm about to leave, so you can clean up the mess.
Okay, she's creating a new kind of glove, a glove technology. It's kind of neat. No, iDoc is also a streamer on Twitch, so part of your responsibility as a streamer is you're allowed to get trolled or put on the spot or fucked with by other streamers. So she's used to it.
Yeah, I did do a chicken dance on someone else's stream once in the middle of critical mass.
Raj Patel is like, if I asked as many questions to my wife, I would get slapped. That's funny. So you're lucky to have a patient guy who teaches. So thank you. Thank you.
Patient with you guys.
Is Matt dating someone half his age? Is he pulling a Leonardo DiCaprio? It kind of
is.
No, you're not half my age, but
That'd be kind of sick.
Is he saying I look old?
No, it's like the whole. Sorry, I'm like PC. Oh.
You're like 9 years or 10 years younger, maybe.
I'm 10 years younger.
Yeah, not exactly a Leo. Half my age would be.
Wait, Leo dated someone that's half his age?
Do you not know Leonardo DiCaprio dates a younger girl every year?
So okay, so if an older woman dating a younger guy is a cougar, then what's a dude? An older dude dating a younger woman.
A Leo. I don't know.
Dude.
A
There's
dude,
not
yeah.
even like a pun there, because
Garrett said neat. Look, he's just like neat. Pickle knows about trading in the Fed, right? We could ask Pickle what he knows. He wasn't interested in our conversation earlier.
Do you remember you were back a couple months ago, you were streaming, somebody told you that there was like a hamster that trades?
Yeah. Yeah, there was a video that somebody made of a hamster that would run in its wheel, and the wheel was connected to the computer that would randomly buy and sell crypto based on what the hamster was doing, and the portfolio actually made money off of the hamster. There's been a bunch of people
Bizarre
make it.
stuff.
There was one that somebody did, which was a chicken. Like if the chicken would go peck at a certain area, they would buy, and then they'd peck at an area by a certain amount, and then yeah.
Oh my gosh. Pickle and his dispenser.
Yeah, he can basically trade, yeah.
Yeah.
He can call the market. Yeah. So anyways, guys, market's still just kind of chopping around. We're going to wait till Fed for something interesting to happen. Remember, at 2 o'clock, that's when the announcement comes out. They're likely not to change rates. The Fed Fund Futures, which prices in the probability, or prices in the, you can see on the Fed Watch, it'll tell you the probability is about a 97% chance that they don't do anything. It's going to stay at the 425, 450 target rate, and about 3% chance that it goes under. So they even have a product you can trade to gamble on the Fed. And,
Really?
and then from that, they derive these probabilities. Traders are betting on no change right now.
Is that legal?
Yeah, the CME Group makes products for everything. It's called the Fed Funds Futures.
What are these numbers? Like, what's the target rate? What's BPS?
Basis points. So 450 basis points is 4.5%.
450 points. Oh, how much it would go up or down?
That's the current rate. Right now, the target rate is somewhere in this range. So it usually works on a target rate. So they tell you the target rate range. So the rate is going to be somewhere between here, and that's where we are right now. We're 425 to 450 now. And so the question is the probability. Wall Street can price in any probability you want. 3% probability that we lower the range by 0.25%. So that's what you see at the bottom here.
Oh, I see. Okay.
So basically, Wall Street's betting on no move. And we
Why determining these ranges? Why can't this range be bigger or smaller?
because they usually only raise and lower rates in quarter point increments.
I knew that.
Yeah, so normally their step changes a quarter point. And here is basically like the target rate that they have fluctuates, but the range is pretty much there. So they give you like quarter point ranges. And so it looks like a little bit of Wall Street's thinking we'll get a rate cut, but we already justified today Fed's not going to do anything.
There's an online gambling thing. Poly market.
What does it do?
You can gamble literally on everything. Election.
I
bet
heard
on
of
the
that.
election,
I heard of
bet
that.
on this. And when you said something like this, I'm like, wait, is this the illegal thing? But I don't know. Have you guys heard of poly market?
Is it
I mentioned it to Matt like a
Kalshi?
couple months ago, and he's like, I don't know what that is.
Kalshi, is that one of them too? Yeah, you can bet on you can bet who Trump is going to win the election or not, kind of thing. Yeah, Kalshi. Yeah, it's pretty big. Yeah, you can bet on anything.
Kalshi is that's what it is.
That's the name of the company.
Poly market. You can bet on
Yeah,
it.
if Powell as 805 saying, Tao guys, if Powell lowers 25 basis points, even a small percent, which is not a lot, a quarter of a point's not a lot, Wall Street won't care. They will flip shit because it's good news, and market goes through the roof if there's any rate cut at all, because it's unexpected. So the rule of thumb when it comes to markets, it's like a lottery. The less probable something is to happen, the higher the output is when it happens, right? Like the less probable. So you have such low odds, the bigger amount of losers and the smaller amount of winners, then the losers are paying the winner. The win is always really big. Okay. Yeah, like a horse with terrible chance of winning has very high odds. Yeah, exactly. So if this is the chance of it not happening, and this is the chance of it happening is 3%, if it does happen, it's unexpected, and therefore the market's going to fly out the roof.
Okay, makes sense.
The unexpected thing. We have preliminary data that comes out. We look at that can guess what the inflation is going to be like with the tariffs. And, while we're currently like under 3%, whatever, with the tariffs, they're forecasting 1-year inflation to be 5% or higher. And the Fed tries to target 2%, which is a very, 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 very long way away from 5. So there'd be zero chance in hell that they would lower rates with a possible 5% inflation due to tariffs. So the trade war needs to absolutely go away and then some for the Fed to even consider lowering rates at all. And as a trader, our job is to think like that to try to get ahead of the market. Right now, dumb people out there are like, maybe Powell will cut rates, but you have to think like motivate yourself to kind of like, what's his motivation? And then you take a bet around it. Our bet is he's not going to do anything.
And that means the market will respond. You just won't do anything.
Right. And then you take it one step further. The market's probably not going to do anything. It's already priced in. But what's going to happen is people are going to wait for it to do something or not do something and then finally act. And so right now, people are, let's take it one step further.
So what would they act if that was the case?
There you go. So you layer the market. The motivation now is the Fed's not going to do anything. So take a step back. Let's get back to betting on the trade war then. Do we think Trump's going to fix things or not?
And then again.
That's probably it. We're just going to wait for some kind of resolve there. So you just take a step back. If the first thing is priced in, what's the next thing traders care about? Is the inflation rate. And if inflation's going up, markets can come down. If there's probable... Look, let me show you what the market did yesterday just on news that China and Trump are actually going to meet. Like, this is a whole day's worth of trading right here. Then
Show me again.
this is all of yesterday, okay? And then in the afternoon, they announced, yep, China and US are finally going to meet. And the market goes... The fact
What
that...
time was that?
Like right at 5 o'clock. When I texted you, I was like, I can't work out today because I need to watch this. The market just went straight up because the fact that they're going to meet shows some signs of progress. But just because they're going to meet doesn't mean anything's going to actually happen. So the market was like, yeah, that's dumb news. Why would we rally? And
Where's
then
everybody getting their news from?
we have like a bunch of news feeds and sources. I have a website that gives me all my news in one spot. So I watched this one right here. And then you see how the market basically came all the way back down to where it started because it's not really news, right? Nothing's changing just because they're meeting. Doesn't mean we're going to fix the trade war. So Wall Street like undid that good news. And today a lot of our traders were shorting because we thought that was bullshit news. And then they were right. So it returned back to where it started, which is kind of what we thought was going to happen. Some of our guys did, yeah. They shorted like right up here at the top. And I shorted today as well for a little bit. And everybody was freaking out like, Matt shorting today. Never short, yeah, never. No. All right, yeah, so thank you for lunch. Where are you going?
I'm gonna go return the job.
Are you going to lunch?
Maybe.
Okay. Don't you have a doctor thing today?
Yeah, but I kind of didn't confirm on purpose. Like,
You want a free day?
yeah, this depends.
Okay.
Somebody I know.
All right. Let's finish planning our pool party then.
Yeah, you have to send it to more people.
Okay.
Does everybody else want to come to our pool party?
Oh yeah. We're done like this huge Memorial Day
Matt
bash.
will be in a Donkini. Won't want to miss it.
Oh, you won't. Speaking of that, Matt needs to get a haircut. When's the party again? I need to get a haircut next week.
You also need. Or
Reggie? Okay. Dude, I'm impressed. I was literally in the car just talking about the Fed. Like, yeah, tomorrow's Fed day. It's important. She's like, why is it important? I told her all that stuff. She remembered most of it. Very impressive. Yo, what's up?
have this
What is that?
thermal compound.
Let me see.
Maybe it'll help the glove thing.
Hold on. You need to be metallic or non-metallic?
Metallic.
I think this is
Conductive.
I think this kind of ceramic. Hold on. This came with Arctic MX4. Let me see if it's... Hold on. It might be heat transmissive. It might not be. Typically, things that are thermally conductive are also electrically conductive. But let me double check this really quick.
Then I won't use this material.
What do you need?
My glove.
No, I mean, but what are you looking for? What kind of material?
I actually don't know.
So there's a higher thermal conductivity. Usually, things that are thermally conductive will conduct electricity, which is what you need.
I need copper.
Well, I mean, this might be a conductive material. I was just trying to maybe. Yeah, you can try it. There's a whole lot left. I'll take it. Some of your thermal paste are like a ceramic based and may not be the greatest.
It also doesn't dry, right? Last one I bought didn't dry.
It doesn't dry except for under like extreme heat load, under like a long period of time. You can degrade some of the compound and it'll start to crack a little bit, kind of like cement in a way. But it's there's like a ceramic base layer I think inside of that, and there's some kind of like medium that keeps it wet. Over time it can dry out, but that material doesn't dry on its own. It's a paste. Yeah. That was, she's inventing something, which is funny. Meatballs are getting cold. Yeah, I know. When they finally do announce a deal, do you think they'll be in time to get in on a pullback? If they announce a deal, the market's going to go straight up, go back to highs. We learned that in Europe. So in European markets, the Germany 30 went back to all-time highs once Trump paused the tariffs on Europe. So DAX went straight up, back to where it started. So we might have the same thing here. Announcement of a deal. That's what everybody's just kind of chilling their longs for, is waiting for a deal. There won't be any dip when there's a deal. The market has zero reason to sell off other than inflation. And that's still not a big deal because companies like Apple, Amazon, Microsoft, Meta had stellar earnings despite the tariffs and inflation. So your Magnificent 7 is looking pretty solid. Now the question is, what's Nvidia going to look like? Some of the bigger hitters. I think AMD's earnings came out pretty good. They beat earnings per share by like 2 pennies, I think. So, I mean, you know, companies aren't suffering right now and inflation's not too bad. So the market has no reason to be selling off other than the tariff stuff. So if they get rid of that, it's another 10% day. For sure. Matt in a bikini. Oh yeah, but you got to come to the party to see that. I won't give you guys a sneak peek, no matter how many times you ask. When am I retiring her? Sometime soon. Non-conductive paste. Oh yeah, let me see really quick. She wants something conductive though. Oh, that's a silicon sealant. Oh, that's kind of cool. She's looking for conductive materials. And so typically your thermal compound will likely be conductive. A lot of them have metal in them. You're a conductor, Tiggy. We'll just spread Victor all over it. Yeah, Garrett is saying we've already dipped. So this is the dip to buy. If you believe that the trade war is going to improve, this is the dip. We're still in the dip, right? The market just dipped on that. But when's the party? In 2 weekends? Memorial Day on the Saturday. Oh, dude, it's a huge event. We got this ginormous pool in our community. It's huge. We rent out the whole thing. We're inviting like 50 people. Dude, I'm cooking for like an army of people. We hire cops to come stand around to be serving liquor. It's a big event. They have a thermal paste that's conductive like it's a liquid aluminum that hardens after applied and uses a plastic border to prevent dripping and shorting out your processor. Fletcher, can you send me a link to that? Because she's looking for a conductive paste that dries after you apply it. It's got to be made of some kind of like cement or something, because you have to have like a volatile liquid inside of it that evaporates and then lets it dry. Kind of like a cement, right? That's what she's looking for. How many police? I think we're only hiring 1 cop. We have to have 1 cop for every 25 people though. So I guess if we have 50, then we should need 2. Tickets are too expensive from Germany, so maybe you're not coming. I mean, you can like FaceTime you from the poll. You can join remotely. We'll Zoom call for the party. Need an extra hand? You guys are in Houston, man. Y'all come out and party with us. Yeah, like a thermal paste that does dry. Graphite paste. Stu's gonna come. You'll come even though you weren't invited. Come on out. You guys y'all are all up in Dallas. Y'all come out. 116K Fed day. No, 116K total. Let me preempt this. So that's how much I'm on a Tradeify journey to 150. So I've made 116K plus whatever this is, plus another 8. So I've made 124. Send the details. Yeah, y'all send me a message in Discord. I'll bring a bunch of strangers over to my house. I don't care. Dallas. Sorry, Stu. I'm just kidding. Did I say Dallas? I'm going to say Austin. My bad. Why did I say Dallas? Hold on. Where am I going to? Oh, she messaged me. Stream starts at 8:30 Eastern every day. Y'all aren't strangers. Of course you're not strangers. Alaska to Texas be expensive? Yeah, it'd be worth it though. Have you ever had one of my smash burgers? Dude, award-winning. That's my favorite pastime. I like to build stuff. Like I build computers. I do that a lot. I like to garden. I have a garden where I grow vegetables and herbs and stuff. I like cars. I work out and I do yoga. I play guitar. I play video games. I do a lot of stuff. Are your trades done before you start the stream? No, I usually... Sometimes I might do an overnight trade, but usually all my trades are done on stream. All of these were done on stream today. I just did a couple of short trades. He slow walks by the beach. There he goes, thermal. She needs thermally... No. You don't want thermal conductive, iDoc. Thermal means heat conductive. You need electricity to conduct for what you're doing. You don't need something that heats up faster. So you want something that's electrically conductive, that's not thermally conductive, which is a special kind of material. Usually, as a rule of thumb, something that is thermally conductive is also high electrical conductivity as well in most applications. But there's special materials that they make that are conduct heat but don't conduct electricity. Do the bands work for FOMC? They do. Like, I look for the bands to be pivots off the FOMC. Now, guys, take note today. Your DD ratio is less than 1/2, so it's a very high probability that we tank and break DD band today, so be very careful. Bring Alaskan salmon? Dude, I'm telling you, you bring king crab to my party, I'll pay for your ticket. Because these days, the king crab is really small, and the restaurants aren't even serving it. You bring me like 10 pounds of fat king crab legs. I'll fly out. If I can shred guitar on stream, I could play for you guys one day. Chris says, I like long walks on the beach, poking dead things with a stick. Pretty much. Yeah, just to kind of a chill. Is it a weed garden? I've never grown weed because I don't smoke. But I would definitely partake in the gummy edible type of THC. So I never grew it. I just grow vegetables and herbs. Not that kind of herb though. I'm not a smoker. I hate smoking anything. I'm sure I could be I'm sure as meticulous and like good of a green thumb as I have, I'd be an excellent weed farmer. I have such a green thumb, dude. I will tell you, everything I grow grows so well. And I have an organic garden. Like complete pest control. Like I do it, everything perfect. I'm such a perfectionist at it. It took me many years to get good at like, growing stuff though. But I like because I like grow my own vegetables and herbs and stuff when I cook. I cook a lot, so. Chad, will you the next best idea? Yeah, maybe. They can help you out. She's trying to invent something. She's gonna make this like product. We're gonna go on Shark Tank. We're gonna talk to Mr. Wonderful. The only smoke things you like is salmon? Yeah, I like smoking salmon and I like smoking traders on Wall Street, crushing their dreams and taking their money. The weed macro and micros are very similar to tomatoes. Oh, okay. So they like really acidic soil and... Tomatoes grow very well in Texas. Which platform has the shortest time to pay out? Tradeify skips eval, so that's pretty fast. It's 10 days to pay out with Tradeify. Everyone else is roughly 10 days. It's like 5 days of eval and a couple days of payout. I think that Funded Next, you can pass your eval in 3 days, and I think it's 5 days payout after that. Tomatoes don't fit in a bong very easily, though. They can hold a lot of wire and don't worry about flooding them. Do I have to hit a profit target with Tradeify? So, James, the Tradeify, the rules on their site say that you can make $80,000 total payout. And once you make $80,000 total, they will move you to live. And so when they move you to live with whatever account moves to live, whatever is left, they put into a live account up to 15,000 max. So my goal is to get 80,000 in payouts and to have $75,000 still chilling there between the 5 accounts. That way they give me 5 live accounts to trade with, which would be cool. Dan says anyone can grow weed, but not everyone can grow great weed. There's a lot of factors, and it is a lot of hard work. Yeah. To grow for just seasonal income. Yep. Everyone I know that does it, they are very meticulous. Like I have a guy that I know that does it. He makes his own soil, and he actually started selling his own soil because he was like so good at getting the pH and everything just right. And the nitrogen percent, all that stuff. Like he was like super, and he had this whole method of building his soil, and he made a soil company. You also get the money back from Funded Next, so it's like a little payout. Yeah, after you make 10% of your account size, they'll give you a 15% bonus from your evals. Rips took a Tradeify payout on screen and received it in 3 minutes. Yeah, Tradeify approves my payouts in like 5 minutes. Is that great? It's all automated with them. So the best part with Tradeify is Brett's idea was to build an automated system that you don't even have to go through customer service. As long as you follow the rules, there are no subjective rules. That's the best part about Tradeify. You don't have to prove anything. You don't have to do anything. The payout is without question. I've gotten 8 payouts or 9 payouts from them so far. And each one of them is like approved within 5 minutes. I get paid the same day. Nice. So once you've traded for 10 days with Tradeify, you can start requesting payouts. Yeah. On the 10th day. Don Chan works on a crab boat? No way. What are y'all talking about? Deadliest catch? Oh, no way. That's kind of cool. All right, so look at what we got here. Pressing back up against monthly hedge pressure, pressing right up against half gap on QQQ, and the market is just sitting there chilling. This is resistance, but the resiliences are greater than 0, and the first time we pressed through them, they were slightly better. So the pivot is actually weaker a second time. So while it was breaking through the first time with strong resilience, we're hitting it a second time with weaker resilience. That usually means it's a good short pivot. Although I still don't short unless it's less than 0. The chances of it breaking through are less now than they were at the start of the day. So keep that in mind. And I don't want to have any risk on the table leading into Fed. I don't think the Fed's going to do anything. But SPY is making a second attempt, kind of the same boat, to try to break through MHP one more time. I certainly don't want to gamble on anything today until Fed comes down. I get my pivots and I'm good. So it is a weaker state, especially on NASDAQ right now. As you press through one more time. Now again, I don't short off of orange when the orange line is above 0. But I take advice from the first time it pressed. Fewer stocks are on that side of monthly hedge pressure. So the pivot is actually substantially weaker the second time we're touching it. Market's just sort of like retracing back to the middle area. Again, I could take a stab at it with some micros. I do need to make some money to pass my funded next. I need to make like 500 bucks. Maybe I'll risk getting short with my funded next. Hey, I know Pam, what's up, man? How would I recommend if I have a 2.6 buffer on a 4K? Are you trading NASDAQ or ES? That's a different question. Or it's our big question. For every NASDAQ moves in 40-point burps and S&P moves in 10-point burps. So every contract on the S&P, you're going to be moving up and down about 500 every burp. NASDAQ, for every contract, you move up and down about 800 every burp. So with NQ, if you have a 2.6K buffer, yeah, 5 micros to 1 mini is plenty on NASDAQ to make that buffer. I mean, to get 4K in like 5 days or less, you know, 5 NASDAQ scalps of one contract of $800 a piece will get you there. And NASDAQ moves up in about 40-point burps. Like right here is a 40-point burp for the most part. So 2 contracts is the highest you would ever go. 1 is adequate. Half a contract is perfect. 5 micros to 1 mini is kind of the sweet spot to get you there fast enough, but also give you, you know, 3 or 4 days of consecutive losses before you go bust. That's a good sweet spot. You're on the right page already, dude. So I'm doing 1 to 2 minis myself, but these accounts already each have $30,000 or $40,000 of buffer in them. Well, not all of them, but the total of these accounts right now is like 125,000 across the 5. So there's a couple of my accounts are like 30 to 40. The rest of them are like 10 to 20. So I've got plenty of buffer to afford to trade 1 to 2 minis for them for sure. Starting out, I probably traded like 1 mini, maybe 2 at max. And so I don't hit them any harder than that on NASDAQ. So the rule of thumb with NASDAQ versus S&P, since NASDAQ goes up 8 for every 5 the S&P goes up per contract or per run, the kind of rule of thumb is that you divide the 2. So 8 divided by 5 is 1.6. So for every NASDAQ you trade, you would trade 1.6 ES for every NASDAQ as a rule of thumb. And people just usually say 2 to 1 or 1.6 to 1. So essentially, if you're trading 1 to 2 NASDAQ, you're probably going to want to be trading 2 to 3 S&P for the same distance travel. S&P moves less dollars per tick, basically. So roughly 1 to 2 NASDAQ or 2 to 3 S&P is kind of like the normal I do for all my prop firms at maximum. Very rarely I'd go above them. How can you join the Discord? You can sign up for it here. Let me give you the link. We have about 10,000 active users of Rocket Scooter platform. So we have a pretty big Discord with about 8,000 people in it. You're totally welcome to join. That's the link on how to get access to the community, the paid community. Did I use footprint charts in the Robin's Cup? I didn't use any footprint charts. No, I just used Rocket Scooter stuff. So I trade off of high volume pivots and just my pivots, and that's basically it. All right, we got MHP QQQ on the docket here. That's roughly about 20 points higher from here. So about 15 is about where it's stabilizing at now. One more green pop and see where we land before Fed. I'm surprised to see it rally, to be honest. I was expecting the market to just kind of chill. I honestly feel that the market is going to pop really high and then sell really hard. I don't know why. I just feel like we've been pricing that in the last couple of days. People have been selling into Fed, so I don't trust any upward movement. White House press briefing incoming momentarily. Be aware. Really? Really? Ain't that something? Do I feel a trade soon? Do I want to scalp a short off of MHP at the top side? The indicator is worse, and I don't think we'll be rallying into Fed. I think the market will probably just be holding here into Fed. That's the problem. So what I might actually could probably do is this last consolidation point right here is to take like a tiny little scalp for maybe 20 points. I still don't even do anything. I don't know. What do y'all think? Like my hair's getting long. I need a haircut though. That's all I'm thinking right now. You get 20 points. Scout makes sense. Just a reject. The market's gonna tap it and pull. The S&P after the first time we touched it, actually Res was like, actually the S&P's in a better spot. So I don't know. Resilience is actually better on S&P, worse on NASDAQ. So with it improving, I'm going to kind of maybe avoid shorting it. I actually looked at it wrong. The S&P is actually looking better. So the orange line is basically gets viewed as like a probability that this orange line will break. The higher the orange line is, each time you tap it, the orange line is slightly higher. There's more stocks in that momentum. Yeah, as Patted Chan says, picking up pennies in front of a steamroller. That's my saying. I don't need to get a tiny little scalp. I've almost made like 9 grand today, so I'm chill. But I do need to make 500 in this. I need to make 500 in this fund and next to pass it. So basically I need to make 2,500 total. And I'm about 2,000 up. So 500 more dollars and I'm going to get my funded next account funded in the first 3 days. 3 back-to-back wins, baby. That's all I need. So maybe right at the tippy top there. Give me some more red. I mean, give me some more green. Come on. I'm not going to cheat it early. This is going about 3 points higher. 12 off of this. Oh, that actually balances to about there. Do I? Okay, I'm gonna do it. I'm just gonna tap like a tiny little scalp off of here. I need to make 500 bucks quick. I think before Fed, we'll have at least maybe one test. That's it, just one. Of this support here. So I'll do from here to maybe there. Maybe like... But that won't give me 500 bucks though. That'll give me like 300 bucks. Maybe I'll get lucky. It's not a great setup though, but I kind of want to pass this account today, so I can do the funded tomorrow. Is 3 contract? That's a big trade. 3 contracts. I'm looking for an excuse to trade. You guys are all yelling at me. I shouldn't be doing anything if I'm trying to convince myself to make a trade. You're right. That's over trading, y'all. I shouldn't be trying to rush it. Y'all are right. Although NASDAQ is that, I mean, I don't normally short if monthly res is greater than 0. So I shouldn't be doing anything. This is just eval account though. I'm not putting real money to this. We wouldn't rally in the Fed. Okay. It's a terrible idea. Okay, I'm gonna do it. Just one. I need to get, if I can get back to 890, 20 points on one is almost $400. So I can pass the account if we break to here. I need to listen to Matt, who wouldn't be doing anything. I know. All right, so I'll be right back, you guys. I'm gonna go to the restroom, but I'll be right back. Hold up. All right, we're back, y'all. I forgot to mute the mic, so if you heard some splashing around, my bad. My bad. Wow, you think any program people will be calling you chicken? I know, right? Yeah, honestly, I think it's a terrible idea to short. But I was thinking, like, into FOMC, it didn't make any sense for us to be selling off or rallying or anything. We should be kind of sitting stable. A little short covering at FOMC. I'd like to see us at least maybe test this little tiny range here. I need to make a quick $500, and I know that's like famous last words. I don't actually need to pass this thing today. I'm just being kind of adventurous. Just give me red to here. That's all I want to see. Monthly res is slightly improving. It's 12.6, and the first time we were here, it broke when it was 26. So it had a lot of, or actually when we broke up the first time through it, we broke up and failed when it was in the 20s, and now it's in the teens. There's fewer stocks moving, so I'm going to take that as evidence on maybe I should try something. It's less strong of a pivot. But I need to get out before that FOMC announcement happens. So just give me like a little teeny bit of red right to there. That's all I want to see. And again, Matt shorting is like, people are freaking out. Like, Matt never shorts. What's up? All I want to see is that right there. Bum, ba-dum, bum, bum. I'm just going to play the range, the noise. I'm not betting on any kind of breakout, any kind of run. If I get to like this little area right here, I'll be totally fine. But yeah. Did that with $50 to go on and spiral out. Yeah, I know. Terrible idea to like, let me inch to the finish line and then you just get me blessed the whole account. I've definitely been there before, especially in Apex. Why is the one on the left greater than the one on the right side? It shouldn't be. Oh, that's so weird. The right side is not updating. Hold on. It seems like the socket may be disconnecting. Is it behind? Hold on. 13.9? Hold on. Yeah, that is weird. Okay. What? Okay, let's see the actual numbers is 14.9. What the hell is going on here? It's like they must be out of sync. They're basically out of sync somehow, but I don't really know. I don't know. Hold on. Let me do an experiment. Yeah, that is not right. This is the real-time one right here. Let's double check this. You are correct. Okay, 58.8, 48. So now they're the same. So SPY is the same. Let's do QQQ. Now they're the same. I think the equities data feed is locking up and not updating. Let me see something really quick. It seems like one of the processes is out of sync. They're all coming from the same source. That's the thing. I'll put in a ticket to investigate this. Because they're all, it's only calculated one time. It's broadcast from the same spot. So something is out of sync. So I'm going to make a note of this. That and that. And that. Okay, so now they are in sync. 48.6. Okay, no, they are. So wait, let me double check. Make sure I'm looking at the right thing. 48.6, 48.6, 48.6, 48.6. If we go to futures, let's look at this one. They're different. It's a polling thing. Because they're two different source data feeds, the charts are updating the values at different times. That's probably what's happening. So essentially, the bottom is taking snapshots of the data feed. Like the resilience calculates in real time. The actual value of resilience is the number at the top. This is the real-time resilience. And then as the charts update, they take a snapshot of that real-time resilience and just publish it at the bottom. So what it looks like it's doing is they're taking snapshots at different times. The correct resilience is the one at the top here and the one in the chart. So this number is correct. 48.07, 48.07, and 48.07. Looks like the equities chart is slightly slower or off. It's good to know. Okay. So what might be happening is that the equities data feed is not pulling as at the same rate at which the futures data feed is. I'm make a note of that. That's exactly what's happening. Is off sync with futures. The resilience snapshots in the lower indicator vary depending on if you have futures left versus equities right open. Resilience calc is correct. This is just a polling thing. Make sure all tickers or all charts update. It's a trading view thing, by the way. The trading view takes the source data and then updates the chart, and it updates everything at once. And so the WebSocket that you guys connect to, which is like this part right here, these guys, you're connected. It updates every time it gets value, it updates. But TradingView internally doesn't asynchronously update this indicator, that indicator, this indicator, that indicator. It grabs data and updates everything every tick or every so often. I think with TradingView, it updates every second, I think, for equities, these equities data feeds. I think update once a second or once every 2 seconds. I should know this. It's been a while. So what's happening is it's updating. Futures is updating at this pace. Equities is updating like offbeat. So you're getting different snapshots. It's kind of what you're seeing. Yeah. Come on, short. Give me that. Give me a little bit of money. Can you explain how the candles are moving right now? Any plan to automate those conversions? At some point, we might just automate them after all. I have created a way to automate the conversion to put everything all on one chart. It should be nice. Ideally, it would be kind of nice to just be able to do everything on one chart. But the converted numbers will dance around a little bit. That is the one problem. And I created a way to make them not dance around us so much by how frequently they update. But we'll, what stock is this? I'm looking at NASDAQ futures. Point of control on NASDAQ? Yep. I just need like 15 more points. All right. You guys, I'm gonna let y'all vote. When we listen to Fed, do you guys want to listen to it through my computer or do you want to listen to it through your own? Because I'll probably play the FOMC here. You'll get it with like a 6 or 7 second delay. But we can all listen to it together. I'll play it for you guys. Guys, don't forget while we're just chilling here, if you guys are using any prop firms, use our code everywhere you go. We take the money that we get from those and turn around and do giveaways with them. We giving away over 100 accounts this month in May. And we give away Tradeify funded accounts. We give away everything. We do more giveaways here than any other streamer, but that's what I do is I take the affiliate money that I make and I buy you guys accounts to give back to y'all. And then of course, the rest of it goes to support building platforms. So if you guys ever want to use a code out there, we get better deals than anyone else. Everyone says we get the best deals, and we do get the best deals. We call tier 1 affiliate status. All these major folks, they give their best deals to their best customers. Oh, closing my trade. Come on, 500 bucks, get there. And exit. Boom. $527. Nailed it. All right, guys, I now passed my funded next eval. And we done. That was it. That's it. Cool. Now I'm gonna see what the fun. Now I'm gonna turn this into a funded account tomorrow, and I'll let you guys know how that experience goes. That was nice. Are you not entertained? That's it. Again, stupid trade. I shouldn't have done anything, but I was betting that the market's not gonna break out pre-Fed, that we're gonna reset. So again, the only reason I justified that is Nasdaq resilience was slightly worse. But again, our rules are don't take the short. I'm starting to really trust resilience these days on that bettering and worsening condition mentality, is that we broke through when it was higher, so we're certainly not going to break through when it's lower. That's what we teach in the boot camp, which is pretty good. My normal rules would be still sit out of that and not take the short, but I did need to make a quick $500 to pass that, so we good. Hiding the trades behind the affiliate advertisers. No, I told you guys I was taking the short. Goofball. You guys, I told you I was in it. I know you're just playing around. I didn't trade anything else though. I just popped one contract short on Nasdaq. My streaming schedule is 8th. I'm serious, guys. Look, I told you. Let me show the picture. Oh, it's so hard on me. Hold on. Let me show you guys this one. You know the picture. I don't even know this account number scheming that they got over here. The accounts don't start sequentially at 1. Their account numbering system is kind of odd, but this is apparently account 92,556. I don't know if those are random numbers or whatever, but guys, listen, I'm not going to lie to you. In the last 3 days, I've blown up Fund to Next 92,555 times. I've certainly been hiding that from you guys because I just didn't want y'all to know how bad I am at trading. So this is account number 92556, whatever that even means. So their account numbering system doesn't start at 1. So I don't know if that's just randomly generated or what. You knew it. I know, guys. I'm the fastest blow-up trader in the West. I blew up 92,554 times yesterday. Alone. I didn't think anybody could do worse than I did, but persistence pays off. That's crazy. No, this is my very first account with these guys. And it'd be nice for it to be account number 00001, but no clue. Rag is officially pulled. You guys knew it. That's it. It's over. Rock Scooter's closing shop. Y'all caught me. I'm the worst. I blow more account than any other traders put together. That was a short, tiny scalp, by the way. I'm out. I got in, got out. So I made my 52,000. It's 2,500 of the profit target, I believe. So that's the end. And I did maintain 40% consistency. So that's a pass. These are the 50K. I'm doing this one right here. Profit target 25, check. 40% check because I made 1,000 and then 1,000 and then 500. So I'm well under 40%. I think. At worst, I have to be one more day. I don't know my exact biggest trade. And that's it. Now, if I'm at 42% consistency, I gotta nail this another day, then whatever, but we'll see. I think that it'll keep hitting that resistance and drop again. I wouldn't bet on it. I was just betting on a quick retrace scalp, and that's it. On FOMC, that's gonna be the big mover in 30 minutes, so. No short again. No, I don't. No, it was a terrible short to begin with. I don't think it's going to reverse or sell off or do anything, but I just took a tiny scalp for like those 30 something points. Just retracing off the last consolidation. That was it. No, there was no reason other to do that than I'm just a reckless, stupid gambler. Trying to finish this eval account so I can do funded tomorrow. So that was $2,500 in 3 days with 40% consistency. And that was a pretty, I got lucky and nailed it. So pretty good. You think that's reckless? That actually was pretty controlled. It wasn't that reckless. But my rules are I shouldn't be shorting for bigger shorts off of MHP, but you can always commit the trade even if you choose to bend or break the rules a little bit. I commit the trade. I could have lost $800 if I was wrong to make $500 if I'm right. Certainly less than 1-to-1. I mean, the setup was just terrible. What are the pivots for FOMC? This is one of them. We're going to watch NASDAQ and S&P together. So the FOMC has pivots here, here, and here. So 9/11. So these are the 4 pivots. You can see them on the screen off to the right. There's pivoting action this way. There's pivoting action this way. There's action this way. And there's action this way. So could be we pop and drop and pop. So I'm waiting for all of them. I'm certainly not taking action here to take the coin flip because the market can move pretty substantially. 150 points this way, 150 points this way. I'm going to let this new consolidation try to move the market to something substantial. Now, I know the FOMC event is going to come out at no rate change. Now, if they cut rates and surprise the hell out of all of us, the market's going to go straight through the roof. So I'm not going to take a gamble that they do anything. And the market's response is completely random to me too. So I don't want to take a gamble on the market's response either. I'm going to wait and hit a pivot and try to reverse it back to the middle. My belief is that we pop and drop. So the market's looking for any reason to find momentum. Today might be the day that we create some higher highs for the market to sell from. There's people trying to get out and take profit. A lot of these really aggressive calls are really just kind of like bleeding money. But again, I'm just guessing. I'm gonna behave according to the indicators, but my speculation just is kind of like trying to get a feel for what I think is gonna happen. But who knows if that's ever right? We never guess this stuff right. What are you saying? How does it work with... I learned yesterday that it's illegal to own as many guns as you want in Texas, but more than 6 dildos is illegal. iDoc, are you hearing this? Oh boy. We're gonna SWAT team about to come in here. I don't know what someone was arrested for. Is that really true? What on earth? What even law? Who even would make a law like that except for like the freaking Puritans in the 1500s? Like, let's limit each household to 6 dildos. You know why? Because 5 is too many. The obscene devices law, is that what it is? For real? Made in 1973. What the heck? What did we have? Like, they got off of the boat at fucking Plymouth Rock and they started to lay out laws of like too many sex toys is against the law. Welcome back. Hey guys, welcome to the 1500s. Let's are they semi-auto or full auto dildos? Yeah, was the front grip on the bottom or on the side? Like, are we talking felony law here or just misdemeanor? What are we doing? Is there a vertical grip on these things? You can't hold that dildo with 2 hands. It's a felony. Not if it's an automatic. Mr. Wiener, oh my god. When you get home, how do I check on Apex once you pass the $2,500 mark? You passed with 220 if I earlier blew the other ones. Sam, if you passed your Apex, then they should send you an email probably within a day, probably tonight, that tells you the steps on how to activate. That is so crazy. 6 is too many. Well, I guess, yeah. Let's let everybody have 5, though. So I guess you're not allowed to have a... But what happens if you have a shop that sells sex toys? I mean, they're everywhere. Is that a... You have to get a permit to sell more than 6? Marvin, you got your Funded X account going? Yeah, let me know how you guys like it. You know, the Funded X rules are too good to be true right now. And so, like, I got to tell you guys, we got to milk it while we can. That uncapped payout is very, very, very nice. So I'm going to take this first account to pay out, and they pay out and everything looks and feels good. I'll go buy 4 more or 5 more and get my 6 total. You can use an 18-inch dildo like nunchucks. Dude, we went to this thing the other day called Drunk Shakespeare. If you guys have in your city, you got to go do it. It was Drunk Romeo and Juliet. You sit in a theater, and the actors come out, and one of them gets nominated to get drunk. They do 4 shots right there in front of everybody, and they get completely like hammered throughout the show. There's 2 members of the audience, and they can ring a bell, and if you ring a bell, everyone has to take a shot. So the actors get absolutely plastered. It's so funny. And they basically do a comical modern version of a Shakespeare play. I saw the Hamlet one they did. And then I did, was it Hamlet or Macbeth? I can't remember. Hamlet. And then I saw Romeo and Juliet, and they came out, and freaking, what's his face? Like Romeo and Tybalt, I think it was Tybalt, were like sword fighting, but they were hitting each other with dildos. Like it was like raunchy sex comedy kind of thing. And they were all like twerking. It was kind of like obscenely awesome and hilarious. But like he goes, unsheath your sword, and he like reaches in and pulls out this giant floppy black dildo. He's like, they're waving at each other. It was very funny if you have that in your city. It's like a touring thing, and they kind of play in different cities. Drunk Shakespeare, it's a riot. I loved it. Sounds like yeah. Open dildo carries aren't permitted. It was pretty. It was actually really funny, and they basically break the 4th wall, and they talk to the audience, and like they put like references in it. They were just basically like they were talking about the Astrodome, you know, like making like topical references to your city, and it was actually pretty funny. Then they were dancing to the APT song by what's her face, the Blackpink chick. Yes, it's kind of fun. It's good for a date night. It's certainly like a hilarious event, and you can buy drinks there and get drunk with them. They bring audience members up to chug a beer with them, and it's just crazy. Apex better to buy lifetime or monthly after passing the eval. The lifetime. It's only like a little bit more, but if it takes you longer than a month, you don't have to pay again. So if you're gonna babysit those accounts and continue to make profit on them, you don't want to have to pay monthly. And use the Rocket Scooter code. Basically, if you guys are going everywhere you go, you know, use that code. It'll get you the best discount. Of course, we put that money to good use because we make some affiliate bucks, but we turn around and try to get you guys giveaway accounts. I negotiate with all these firms, and like a lot of them are like, hey, you know, we'll offer you a salary, blah blah blah, to promote our brand. I'm like, how about you just give me a bunch of accounts to give away instead? I don't need salary. Or they're like, we'll give you 30% commission, we give everyone else 20. I'm like, just give me 15 to 20 accounts to give away. And the firms are like, okay, well, give me the accounts. If you want less money, that's fine. How long does it take to pass the challenge? With the 40%, you basically, how long does it take to pass a challenge is you do the following. You do 100. Actually, not 100. So You do 1 divided by your consistency. Okay? Is equal to the number of days. That's the rule. 1 divided by your consistency is the minimum number of days to pass an account. If they don't have minimum account days, like you need to trade at least 5 days or whatever, the minimum you have to have at least to mathematically pass them is 1 divided by your consistency. So a 30% consistency is going to be 3.3 days or 4 days total. A 40% consistency is 2.5 or 3 days total. 10% consistency takes 10 days to get there. 20% takes 5 days. If you do that rule, it tells you about how, and you take your grand total of what you need to make divided by the number of days. So 2,500 divided by 3, rounded up to the next day, is roughly 8.33K. Or sorry, 8.3300. So $833 per day, which maintains consistency at the max amount of position. And so one of my trades was 800. One of them was or 900. The other one was like 1,000. This one was like maybe 500. I don't know, something like that. So I might be just at consistency, which is good. So ETF says there's a max payout of 50K for the 50K account. Does that mean that if I make 50K in total, they close the account? Usually so. Yeah. I believe that's the case. And typically with most prop firms, there's a maximum you can make. With Tradeify, it's 80K. And once you cap out, they usually ban you, and then they give you a live account to trade with instead. Wait, normally you don't kink shame, but in this case, what are we kinking about today? What's the firm you mentioned that has rules that are too good to be true right now? Funded Next, Zach. It's a launch firm that's coming in with hyper awesome rules. Let me tell you all the rules, just so you know. There is no monthly fee. There is a no activation fee. There is uncapped payout, which means you get paid as much as you make uncapped. There is no profit split, which means when you get paid, they don't take 10% out of it. It's end of the day drawdown, which is my favorite kind of drawdown. And it's cheap on top of that. And you can DCA in the account. Like everything you want to do as a trader, that you can do it here. And as a bonus, they give you 15% of your eval once you get a payout. So, for example, in a 50K account, once I get paid $5,000, they give me a $375 bonus. 100K, once I get paid 10K, they give me a $900 bonus. So they even give you a bonus. And if they don't pay you within 24 hours, they give you a $1,000 bonus as an I'm sorry we were late. So they're a big Forex firm. My first question was, are they legit? And they're a big Forex firm with lots of money because they're got big celebrities endorsing them now. And then, so they seem to be okay. I read reviews and they're not bad, and there's not a lot of complaints. Every once in a while, every firm has a couple people that are like, they deny payouts or whatever. But these are usually people, they get salty because they did break the rules and they got punished for it. You can never really side with the customer or the prop firm because you never really know the full story. I know CEOs of prop firms that talk all day long about how people try to cheat the system, and then they ban the cheater, and then the cheater goes out there and says they denied my payout to try to ruin their reputation. So these guys have a lot of people saying great things and not a lot of people saying bad things. So on average, it looks good to me on the surface, but that's why I'm trading them right now. And if you guys are ever skeptical about the process, just watch me do it, and then I'll let you know my experience. So I just got my eval passed today, so I'm gonna see how long it takes to get funded and how long until they fund me. But so far, those rules are way too good to be true. I can fuck with unlimited payouts. I mean, uncapped payouts is great on an end of the day account for $250 with no monthly fee and no activation fee. No profit split, 40% consistency. Tradeify is 35 for their growth. They even beat Tradeify's awesome consistency. It's not 50% like Top Step is on the eval side. So Top Step you can pass in 2 days. These guys you pass in 3. But uncapped payouts is great. Top Step, they throttle your payouts. So I got the 50K account is the one that you want, Wave Scalper. It's the best value. And the way that you do a value, and again, my opinion again, but this is how I do value. What you do is you take the cost of the account, you do cost, you put all the accounts side by side. So don't compare like a static to end of the day drawdown. These are all the same kind of drawdown. End of the day, all of them are the same. So they just have different tiers. So what you do when you have different tiers of the same account type, you do the cost divided by your drawdown. And that gives you a cost per drawdown. You want to get the highest ratio so that the amount that you pay gives you the most drawdown to play with, gives you the most wiggle room in the account. These numbers are always fake. Don't ever look at the size of the account because that's not the real size of the account. The drawdown is the actual size of the account. When you look at a funded account or a prop firm, these are the actual account sizes. This is how much you have to lose to blow up the account. So this is a $3,000 account. This is a $2,500 account. This is a $1,250 account. So when you do the math on both of these, you can see that $1,250, 129 divided by 1250 is roughly a little bit less than 10. This is 10, and this is 6, right? 6 and some change. So when you divide, or 0.6, right? So you want the highest ratio you can get that for the, actually, I did that backwards, sorry. Drawdown to cost. Right. You want the highest drawdown you get for dollar you spend. So this is roughly 9. This is roughly not almost 10. This is 10 and a penny. And then this is like 6. So to pay like $200 extra dollars for $500 extra dollars in the account doesn't make sense. When here, $100 got you $1,250, $200 gets you 500 more. That's not a good scale, right? So the highest value is the one in the middle. And everything else is pretty kosher. And you can get up to 6 of those. You can get 300Ks or 650Ks. So I'm about to do 6 of the 50Ks. The performance reward is they give you 15% of your eval profit target as a bonus. So they actually pay you for eval work once you make a real payout. So an example is a 100K account. Once you make 10K worth of payout, 10% of your account balance is payout. They give you a $900 bonus on top of your payout, just to incentivize you further as a bonus. So that your eval trading is not actually wasted time. If you make it to payout, they'll give you a little bit more. They don't do live yet. Oh, probably. I haven't seen anything about live. But hell, if they have uncapped sim-funded payouts, I'll milk that as long as I can. That'd be kind of nice. Did we talk about the GTA 6 trailer 2 from yesterday? We did not. But I heard from Twitter, I think it was Brett Simba, said that we get GTA 6 and a new Avengers movie all in the same month. This is going to be the best month of my life. Oh my God. No, there's uncapped payout, so there's no rules that they close the account, cheater. So currently, as of today, the funded next is uncapped. So before all the major influencers pick up on it, I'm going to milk it as much as I can until they start changing the rules. There's a minimum you need to make for most funded, so they just pay whatever based on a performance cycle. So I think it's like, let me get this wrong here. I actually need to study this because now I'm about to go funded. Let's go to FAQ. So I'm about to be in this funded account. Let's see what they say. How can I withdraw? Okay. Meet the consistency rule. Okay. Complete the minimum benchmark days, which is a total of 5 benchmark days. A benchmark day requires you to trade with at least $100 or $200 of profit. So you can't, this is basically a no flipping rule. So you can't go out there and flip the account to advance the days. You need to make at least $100 or $200, which is fine. So you have to make real trading days. Not hard to do. Okay. So you need to trade for 5 days, and then that's basically it. You must have accumulated at least $500 in the trading cycle before requesting withdrawal of half. So for the first 30 days, you can take half of your profit as payout. After 30 benchmark days, you can take 100% of the account. If you take, or up to 100. If you take all 100% and start back at scratch, then they close the account as a hard breach. So you have to leave at least something in there to keep going. So never take everything out. But that's the rule. I don't think they have live yet, Lee. That's a good question. I didn't see anything about it. Let's see the performance reward. They call payouts performance rewards. So let's look at this. So yeah, you can take up to 50% of your profits until you reach 30 benchmark trading days. And a benchmark day, again, qualifies as a day if the trader reaches a minimum gain of $100. So a loss doesn't count as a benchmark day. Okay. So you have to have 30, or you have to have 5 winning days of at least 200 to request half of your payout. And then that's it. There's no window. Then you can do 100% of your payout after your 30 winning days. So if you last for 30 days, you keep building an account, building an account, building an account, then request a payout and take it all out. They'll close it down. But yeah, this is for the funded account side. Taking 100% of your gain results in a hard breach, which makes sense because a hard breach is if you fall back to the starting balance anyways. Requesting the first reward will reset the loss limit to the starting balance regardless of its prior position. Oh, that's kind of cool. So that's it. It seems pretty straightforward. So you just have to win 5 days and then you get a payout. So I can get a payout 5 days from now. That's pretty straightforward. Rocket is the coupon code. You have to type it in coupon. It's like don't in the slider that says coupon, not in referral code. I'm gonna let them know that. Coupon referral. Like I said, I've always, like, since the prop firm thing has all been, I've always wanted to get on the ground floor with somebody while they had awesome rules before they changed it. So we can write it as long as it can. Maybe in a couple months they're gonna change their rules and not be as cool, but until then, hey, I'm gonna milk it. One more thing. Yeah, I'm letting them know that you guys complained so much about it that you weren't going to use their service, so maybe they'll change that and make it easier. Think prop is better than normal live account, Zach? No, it's not. It's good as a new trader when you're trying to limit your risk or you don't have a bankroll. The taxes are the penalty for that. The taxes are worse, but a real account is always better if you have the funding and discipline. So essentially, prop firms are great for people that have been trading, 5 to 10 years or less and want to take low risk. Pretty good. Pay a little bit more taxes. Pros are probably going to avoid prop accounts at all times. And why do I trade a prop account is because you guys do. And I got to kind of like, you know, I do both. But I got to do what keeps me relevant in the space also. So if I wasn't a streamer, I wouldn't be trading prop accounts because I have a lot of money to trade with and I don't need to do prop account. But if you're kind of like starting out and you don't have the income, you don't have the extra money to trade with, props are amazing. They just come with a higher tax penalty. That's it. And harder rules, I guess. How many days to pass an eval? 3 days with Funded Next. I think it only takes 3. T minus 10 minutes, 9 minutes. Time to go. Yeah, but props are great if you're beginning and futures are just getting started. They're amazing. But you'll be in class on Monday, Zach. Awesome, dude. Awesome, awesome. Do I have other accounts I plan to trade after FOMC? I would love to watch the market do something of FOMC. This action, right? We're sitting here pretty clean. I'm going to watch. Nasdaq is the one that has pivots nearby that are worth looking at. SPY is kind of like, we've got like a liquidity pocket and that's it. Honestly, don't know what to think. Even if we fall to here, I don't know if I want to take it. Like, my brain is just telling me this market's going to move fast. I don't know. Like, every bone in my body is telling me that the market is going to move and trick us today. It doesn't feel... Yesterday's move up and today's move down, it doesn't feel like a natural, easy to see market. Normally, I'd be excited. What the fuck is all this movement from? Who's moving right now? Why is the market even moving? Hold up. Trump ain't saying anything. Oh, Trump's talking. No potential for pulling back tariffs on China. Not open to pulling back to 140. Trump is talking? 8 minutes for the Fed? What the fuck? What, you picked like the best time in the world to start saying anything at all. His time, like, does he have like zero market awareness or what? Oh my God. Well, here go my puts. My puts are gonna be making some money today. I'm excited about that. Yo, Papa, you might not say anything. Press conference starts in 30 minutes plus 7, so 37 minutes. We'll cover the press conference. We'll watch it live on the stream. No potential for pulling back tariffs on China. So that's actually pretty big. That's actually pretty big for the downside. Yeah, guys, I'm not going to buy this dip today. Fuck this market. I ain't going to do anything. Sayonara, market. I knew it was going down. I could feel it. I could feel it in my bones today. For news, financial juice, dude. Financial juice is the way to go. Is by far one of the best news aggregates I've ever seen. Very inexpensive service. I paid lifetime when they had a special when they launched, which was only made at $500. I think it's maybe $1,000 now, but basically it's a news aggregate that you can choose any one of these news sources and then follow them all in one spot, which is amazing. And then they have an algorithm that parses all the data as it comes through, and then it highlights important news data as red. So the important stuff is going to be like highlighted for you. Trump must be talking. No potential for pulling back tariffs on China. Not open to pulling back 145 tariffs. Ooh, they're going to be stubborn, guys. This is exactly what I said yesterday. They're going to meet. They're going to be stubborn. They're going to argue and fight. They're going to leave the meeting pissed off at each other. They're going to go on social media. And Trump's going to talk shit, and they're going to talk shit in the news, and they won't come to resolve anytime soon. If 145% tariffs stay, we have a recession in 3 months. I don't disagree. Maybe within a year, but we will start a decline within 3 months. Yeah, we would be in a full-blown recession within a couple quarters. Yeah, you're actually probably even right, because the GDP hit was immediate. Right? The GDP hit we just had was immediate. The tariffs persist, it'll be bad. Yeah. Trump is trying to squeeze Powell into a small, huge, awesome box. The most beautiful box, though. Right. So the question is, does Powell even care about the stock market? If they did, they wouldn't be... Their policy wouldn't be to tighten. The quantitative tightening is certainly their exit from the stock market. So does Powell care to rescue the stock market? To save, basically it'd be to save employment. If we go into a recession, people are going to get unemployed. And you can't have unemployed people with high inflation. We call that stagflation, and you don't recover from that. Stagflation causes depressions. So Powell probably will have to act to save equities market, to save people's jobs, so that we don't have stagflation. Because you know who has to rescue us during a Great Depression and stagflation? The Fed. They got to bail us out. Maybe Trump is playing politics to push Powell's hand into cutting rates and playing chicken with the market. Taking long with the lower band? Nope, not on this news. Nope, 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 nope. The stubbornness and the negotiations on the tariffs is 0% bullish, guys. Zero. I'm sitting here watching my puts go up in value. I couldn't be happier. I've got no long trades on the table, and I bought some puts to hedge. And Trump drops a fucking recession bomb on us in the middle of this. I don't give a shit what Jay Powell says at all. The market's not going up today. World War III is a bailout too. Yeah. On Trump's amazing announcement, 5 minutes. 8 minutes. 8 minutes before the press conference. Jesus Christ, he's got like... Is this deliberate or what? This is not okay. So who knows what's gonna happen right now? I'm actually scared to touch this alongside at all. But the idea that we're gonna not have a strong chance in the negotiation table with the stubbornness of Trump revealing this hand, especially the Fed's not gonna cut rates anytime soon. We're kind of stuck, right? So my guess is with no rate cut, the market's probably going to do nothing. And during the press conference, when Powell kind of hints that, yeah, the tariffs are probably bad, and I don't think that we're going to have rate cuts at all this year unless tariffs come off the table, Trump and Powell are now playing chicken with each other. The market will probably pop and drop. I fear sell-off today. Trump has the most horrible timing whatsoever. Good Lord, that's crazy. What on earth is this guy doing? So anyways, I bought puts to hedge 2 days ago, or actually yesterday, at the pop. And I'm kind of sitting here waiting to see. I don't know if I want to continue to press long in the market, knowing that the sentiment is really, really stubbornness. And I don't think Trump wants to negotiate anything less than 145. There's no way that's going to survive. He has to pull back. He's just beating his chest. I don't think the 140... Little Blue, you're right, dude. I don't think 145 is going to last at all, because if it does, we'll be in a recession within 3 to 6 months. So I think it's all just bluffing right now. So we're going to have no rate cut. Unless there is a surprise rate cut today, we should have nothing. All right, 0 hour in 1 minute. I'm in no active positions right now. I've already made like $9,000 today, so I'm pretty cool. I already passed my Fund Next eval, which is pretty cool. I'm literally just chilling. I had some puts yesterday that I bought at the pop so that I can just hedge in case the market did crash on some bad news or Fed or whatever. But there's just a hedge so I can continue longing the market. I think I got a pretty good play on that because I bought them like right up in here. And then we had this nonsense. We've already kind of traded all of that out today. Okay, here we go. There's the pop. Pop and drop I feel today. Rate decision came out at 4.5, which is the expected move. I don't know if we're going to get anything from this. We'll see. Indicators, stocks are fairly shifting a little bit. Monthly hedge pressure dipped a little, but everything's pretty okay. We could have like a little pop on this until the press conference, but no change in rates. Fed committee judges risk of higher unemployment and higher inflation have risen. They're obviously acknowledging the fact we have higher inflation from the tariffs. China also says that the U.S. asked to meet in Switzerland. So they're going to have their meeting. I don't think anything's going to happen from here. It'd be interesting to see if we do see any kind of movement. But I think we're pretty much chilling on this. Exactly what we knew. You think we could squeeze from a sell-off here? We're going to have to wait for the press conference, which I think Powell's going to come through and not really say anything substantial. And I do feel with the bomb that Trump just dropped that the market's going to sell off from this. Economic activity has continued to expand at a solid pace despite swings in net exports affecting the data. Unemployment rate has stabilized at a low level. Labor market conditions remain solid. So the rest of the economy looks great, but the tariffs are the problem that are going to cause inflation. The Fed's not going to cut rates at all this year. And the question is the dot plot suggested we'll have 2 rate cuts this year, but when Powell gets up on the stand to talk, he's going to talk about that expectation. And if he hints at all that we're not getting any rate cuts unless the tariffs come off the table, the market can sell pretty hard. Because the market already sold hard when they switched their mentality last November, December from 4 rate cuts this year to 2. And then whenever the tariffs were announced, the futures were only forecasting a rate cut that was in the summer, now moved to December. And now the anticipation is that there's likely no rate cuts if the tariffs remain, because there can't be. So because of that, we ain't doing nothing. The question is there a short off of MHP or not? And I don't know if I want to touch this or do this. This is I told you it's going to be a weird market today. When is Powell talking? In 30 minutes. Yeah, 30 minutes. Which puts did I take? I bought some short-term 472 puts. So essentially what that's supposed to do is just cover me on a retracement trade in case we dipped really hard on Fed. The goal was not to bet on a market crash. The goal was to hedge as I'm continuing to long the market every day. I wanted to be, I think our swim has been like so slow the last 2 days. Come on. That's just to retrace this. So that was to hedge while I'm continuing to long the market in case we got a bombshell from Trump or the Fed that just retraced to red line. So we guys know we have an impact red line, which starts at about 471. Yeah, that area right here. So the idea is that we retrace some of this. I got, in case there was a big sell-off day today or Friday. And that's basically it. There's an open gap since April 21. Yeah. Ooh, welcome to the stream, guys. Don't forget to hit that like button. And don't forget, if you guys are using prop firms, we're giving away 100 prop accounts this month. We give away, 2 to 3 every single day. We do more giveaways here every single day. If you guys are prop traders, futures traders, use code RocketSkewer. The more you use, we get the best deals out there, the more accounts that we get to give away. I'm meeting new prop firms every week, and so many of them are just throwing us codes to give out. So pretty exciting. Tomorrow's Thursday. I'll be on My Funded Futures TV tomorrow morning, just like I was last Thursday. I think that's they want me on as a regular guest now, so I should be on about an hour or so there. I'll see you guys then. No dot plot, not today. It's every 3 months, yeah. Traders are still pricing in 3 Fed rate cuts this year. We're gonna get 0. I'm betting on it. We will get 0 rate cuts this year. We will only get 3 if the trade war resolves, which also I'm betting on as well. So maybe we'll get 3 if the trade war resolves and inflation comes down. But with Trump stating how stubborn he's going to be, this market's going to probably sell off today, despite anything else. Pop and drop. I think, how many rate cuts do you guys think we get this year? It includes your perception of the trade war. Is the trade war going to resolve this year? And if so, how many rate cuts? And if the trade war is not going to resolve, how many rate cuts? 0 to 1. MHP short, it's possible, yeah. My indicators don't suggest shorting, but this is the short to take. -1. There you go. About 1. 0 to 1, right? I don't understand this. Traders are pricing in 3 rate cuts this year. Clearly on the dot plot, half of the FOMC committee on the last dot plot was saying 2. I don't know where they get 3 from. Well, I guess they're averaging 3 and 4. So the dot plot was basically half the FOMC committee wanted 100 basis points. The other half wanted 50 basis points. So half of them want 2 cuts of 25. The other half want 4 cuts of 25. So I guess they're still averaging that as a 3. That's probably where the 3 comes from. That's kind of silly to do it that way. Traders continue to see Fed rate cuts by July. Look, watch Powell come out and say we're not going to do anything until the trade war resolves. He's playing chicken with Donald Trump right now. Trump comes out 8 minutes before the Fed announcement to say, I'm not pulling China off the table. You know what I mean? My calls are up 40% right now. Keep falling, baby. My 472 QQQ call. I mean, puts. Sorry, QQQ puts. 472. Pay me out, baby. I was hoping we get a bombshell in the Fed. No longs today. I was right today. Didn't I say pop and drop today? Damn. Up 60%. Bring it home, baby. Oh my God. Let's go. Keep falling. 70%. What? Ooh. Ooh, lower MHP right here at the bottom. Pop and drop. Yeah, I did. I told you guys that. Trump dropped the bomb that they're not going to do anything. 100% not going to do anything. Oh, yeah, baby. 80%. Let's go. I just invested 10 grand, so that's not bad. Die, market, die. Meanwhile, she's looking forward to cooperating with Putin. Oh, yeah. So if there is a long pivot, it's here. If there is any long pivot, it's there. That's the long pivot if there is one. Watch the market just rally from there. Stupid day. It's going to be really hard to gauge this, but the idea that they're going to meet, right? When they said we're going to meet like this, and then Trump's like, yeah, but I'm not going to pull anything off the table. That was a really bad knowledge. And I speculated this all morning today. So we're going to pop and drop, which is exactly what I thought was going to happen. Yay. Yay. Yo, let's go. I just made 10 grand on these puts. Keep falling though. I'll take more. 472. Let's get it. You made 25 on funded next. Marvin, there's a 40% consistency rule. You have to make that over 3 days. You can't make it all in one gulp. So you got to trade 3 more days, 2 more days at that exact amount. Consistency rules are weird. Am I taking it? No. I'm not buying this bad news. Are you kidding? This news is absolutely atrocious. This news is ridiculous. No, I went along. No, not longing this at all. Trump is saying how stubborn he's going to be. He's not pulling tariffs off the table. The market's going to crash on this today. It's going to sell off extremely hard. There's no buying this. No. I'm 0% chance I'm touching this. There's no technical trade to be made off of this. If it rallies, I'll miss out. I don't want to have long exposure on the idea that there's going to be no negotiation this month. Market was going to hate that news. 100% hate that news. No, not buying any dip. You just made $300% on puts in 20 minutes. Just made. James, let's go, baby. Yeah, I grabbed puts at yesterday's high. Mine are up 100%. But like I said, I got out of the money so I can get some big fat market crash sell off. In case it happened, I needed to be hedged so I can keep buying the dip. But no, there is a technical long off of here. I'm not going to take it. Not against this kind of bad news. And press conference is going to come out. You know, they're going to have to do something, but I think this is going to tip the market over today. Okay, so let me crush through that. Lower DD band is possible. And nothing yet. What am I hedging? Well, because the market has been extremely long and I've been longing in all of my prop accounts. Like I've been buying the dip, buying the dip, buying the dip. So I have puts just in case FOMC turned out to be a bomb or the trade war fell apart. So I basically just gamble puts in case the market crashed. I just invested 10K and just if the market crashes, I can make 50. And I continue to make 10K a day in my prop account, my funded accounts. So basically, I'm hedging my own gains on my prop account by just buying some puts in an area where the market was consolidating and losing momentum, just in case there was a bomb where we sold off. So, how about shorting? No. Nope. No shorting this either. This market is it could fly all the way back up to the top today. This is a terrible, terrible, terrible time to short. Let's gonna watch this one play out today. Press conference in a little bit, so we'll watch that live here. But yeah, so losing a key level 5610 would be really bad for the market. So keep an eye on this one today. It could very well just rally up from here. So I have no desire to long this. Normally I would long in my strong pivot there, but the stocks have absolutely plunged. So our resilience numbers have all dropped below 0. Monthly resilience is not going to hold this support. The last effort we have is this bottom green band on DD band where I can actually see the market maybe bouncing off of it. So today we're going to hit that 55, 54 level in S&P futures. There is no liquidity down here. If we fail this is possible. So market's going to collapse today off of this terrible news. But do I short it? Hell no. You guys know me. Risk off. I don't bet on market crashes. Even if it's going to fall, I'm going to sit out. I'm going to let it fall and then gauge what happens at the bottom. From here, there's no long entry from here. Even if it rallies, I'll miss out on it. It's fine. So far, I've made, if you guys want to see, by the way, on my Tradeify, just to show you guys where I am on my profit target here. My goal, 150K profit. Oh, this didn't refresh with today's gains yet. What? Let's see how much I'm up today. It still didn't update everything. Okay, so I am up. It hasn't updated my full account yet, but I'm up. So if you guys are just tuning in, what is this, $9,000 today? So it's about 9,000 bucks. This is the history of my Tradeify straight to funded over the last 3 months. So it looks like it only has 4,000 of the 9. So add 5 to that, that's 117. And then add the 12,000 from busted payout. So I'm at $129,000 of gain with Tradeify. I had a 77% win rate, even in this bear market. Fantastic. So I'm on a really solid path with these guys to go to live, and I'm going to be their #1 live trader. I'm going to get the highest. I'm with the leaderboard. I'm going to do it all. Am I done for the day? No. Press conference is going to create a lot more activity. You think this was brutal? Press conference could be even double brutal. I'm not shorting because the press conference could kick the market up north. If Powell kicks any kind of hope into the market whatsoever that they may cut rates, then we fly back up to the top in an absurd, stupid manner yet again. Trump and Powell playing chicken. Trump is saying, I'm not budging. So he's saying, I'm going to plunge the United States into a recession. Powell, you better cut rates. And Powell's like, I'm not going to cut rates. So they're playing chicken with each other today. And you can bet your lucky stars in the press conference, they're going to say something about it. What do you think about Trump's pressuring you to cut rates? And Powell's going to probably say what he did last term was, we don't work under political pressure. We do our job as intended. Press conference consider news. It's the best news that you'll get because the press conference is the only thing that's forward looking. The rate cut, you get the announcement. We can predict that from a mile away. Futures can predict that. Everything can predict that, right? We knew that there was going to be no rate cut. But Powell talking will imply what's going to happen in the future. So no, I'm not longing before the press conference. The rule of thumb is whenever you're going into the press conference, let Powell talking about the future create the movement that you act on. So the announcement and selling right now has everything to do with what Trump said, not what Powell said. We already expected a rate cut. So right now, Powell's going to talk about the future. Traders are pricing in 3 rate cuts this year and a rate cut in July. If Powell even hints that there's no rate cut in July, or even hints there's no more rate cuts, the market's going to collapse today. How many points down is lower DD band on NASDAQ? 631, so that's about 2 points lower, so that would take me closer to... I'm just curious if my calls are any close to being in the money. Might not be in the money today. I got 472s. I mean, my puts. We'd have to really lose DD band for me to get something on those guys. So that's roughly 2 strikes lower. I might get the 475. Rocket Scooter website is not working. Go to rocket.place. Wait a minute. Hold on. So go to rocket.place/Matt. So that's where we All right, so we're going to chill and wait for that press conference to start. Take Profit has a rewards program that lets you get funded accounts. Wait, funded accounts? How does that work? Can you send me something on that? I didn't know. Yeah, if press conference takes it down to lower DD band on NASDAQ. Could I go long? Yeah, I could go long at lower band. That's what I'm looking for. Possibly. But it wouldn't even be to reverse the market. It would be just to scalp this. Like, right now, the market is seriously trying not to crash going to the press conference. So you can see that the dealers are popping it right back up after that overshoot. No, we already said that they're off because they're updating at different frequencies. Don't use the resilience on the platform itself, like at the top. What the heck? Hold on one second, guys. Let me reset my stuff. Hold on, I gotta refresh. Second. Use the numbers at the top of the page. They're only, one of them updates slightly faster than the other. The resilience number is actually here, where I'm circling at the top left. This is real time. This is real time. This updates with the chart. Now, just to teach you guys kind of how it works, resilience is a calculation that updates every 2 seconds. A chart with a 1 minute candle updates every 2 seconds as well. It takes a snapshot of this, but if the chart isn't updating every 2 seconds, like our data feed isn't updating every 2 seconds, then we're only taking snapshots at the frequency which the chart updates. It's a trading view problem. So use resilience number in real time on your futures chart as being the, or this one right here, which is the real time update. This number are identical. This number on a futures chart is all identical. If you have an equities chart, the reference chart may not update as fast. Yep. Yeah, they have a points system at Take Profit, but I didn't think they give away funded accounts. They give away the eval accounts for sure. Yeah, I've maxed out with those guys on that. I didn't know they had a funded program. That'd be actually kind of dope, though. Guys, thank you for tuning into the stream. Don't forget to sub to the channel. My name is Matt, YouTube's #1 trader, according to my mom and my girlfriend. I got the best stats at Tradeify, though. That's kind of nice. 77% win rate now. Very nice. Wait, you don't think I'm the best trader on YouTube? Even my girlfriend doesn't believe it anymore. I'm personally not wanting to buy the dip on the fact that Trump is being stubborn about the 145% tariff. That's not good. That means they're not going to have a resolution. And so I think that the market is shrugging that off by any kind of support here. Press conference in 7 minutes, guys. I'll load it up on here. You can watch it here so you don't have to... We'll watch it together. Let's predict what Powell's going to say. Powell's basically going to come through and say the standard stuff we all think he's going to say. They're watching the labor market, which is good. They're watching the GDP, which is not good. The tariffs are going to have all their decision power is going to basically be locked into if we lock in the tariffs or not. If Powell even hints that there's no rate cut in July, the market will crash. That's it. Traders are pricing in 3 rate cuts this year and 1 in July. I think we get 0 this year. Even without tariffs, without trade war, I think we get 1 or 2 max. That's it. The Michigan numbers priced in expected 5% inflation target for the first year. The short-term inflation was expected to go through the roof. Powell's not going to change anything at all as long as tariffs are on the table. And Trump's comments before the announcement of, I'm not bringing the 145, it's non-negotiable. That's it. That seals Powell's hands. Powell will have to cut rates into high inflation, which he will not do. So his press conference is going to be all about saying Trump either pulls tariffs off the table or I'm not doing anything. And the market's going to fucking hate hearing that. Okay, so you guys remember, I'm teaching you how to speculate. Think ahead. I will say I'm the best trader you've seen, not because you're super precise in entry, but because you trade defensive and generate bias that you stick with in your trading strategy. Thank you, Christian. That means a whole lot. I know what I do, and I stick to the plan, and I am very formulaic without any like off the cuff sort of like gamble mentality. I'm never like drawn by emotions. I'm very much a seasoned trader. I follow the strats. I follow the logic. A lot of people that are trying to trade, especially a lot of people with cameras on themselves, are just gambling for an audience. So I don't do any of that. I keep my wits. Okay. There's nothing Powell can say that drops gold, though. Yeah, that's exactly right. Yeah, gold's probably going to do okay. I thought Trump said he has good news, though. Yeah, but he said he has good news, and he says it has nothing to do with the trade war. He even told us that. They were like, is it about the trade war? Is it about the tariffs? And he said, stop asking about the trade war. It has nothing to do with the trade war. So I don't know what that good news is. He says probably the best news of all. Okay. Probably as big as it gets. Like, what does that even mean? Trump exaggerates on a lot of things. As big as it gets means he's abolishing the IRS. Okay, that's as big as it gets. What is he talking about? Probably something stupid with crypto. Who knows, man? He's talking to some audience. It's as big as it gets for somebody. To me, defining as big as it gets means for every American citizen. So tax breaks or something cool, tax cuts, something big like that. But if he's like as big as it gets and he's strictly talking to like crypto people or something, then I'll be very pissed off. Yeah, good news for who? And if we know Trump, it's just good news for him, you know? It's probably news that's good to him. So who knows? Ukraine. Yeah, maybe we have a ceasefire. We have a deal with Russia to stop everything in Ukraine. Something. It could be something like that, but I don't know if it's as big as it gets for the stock market. Because if I'm narrowing down from what he said so far. Tariffs are still on the table with China. And they want to meet in Switzerland and talk. I don't think they're going to come up with a conclusion anytime soon. I might long up a lower DD band if we get there, but as of right now, Wall Street is not going to like the idea of them not having a quick negotiation. The fact is that the fact that it's going to stall is going to cause a lot of people probably to panic, but that's why I'm not touching it right now. Yeah, we're abolishing the IRS. The External Revenue Service will now handle all your taxes. There you go. When is he announcing that? Well, he said yesterday at the end of the day that he has news that is coming out Monday morning. I've got the biggest, it's like as big as it can get kind of thing. He's like, it doesn't get any bigger than this sort of mentality. So sometime over the weekend or Monday morning, we're going to be getting some news bombshell. Probably a Melania gold meme coin. Yeah, like seriously. Hashtag Baron coin. Everybody buy. Re-ending Energy Star program. Yeah, something. Who knows what big to who, right? Press conference starting in a couple of minutes, so let's get ready to go. Let me hit start on this. Let's pause our music. All right, JP, what you got for us today, baby? Let's put this at the top here. Why not in queue? Oh, I'm just looking at both of them together. I trade both. I'm just watching both of them right now. What is this 533? Oh, that must be... Hold on. Oh, that's yesterday's. Where they downloaded this like generic PowerPoint music from some like stock website for their opening music here. It's like inspirational music for a company PowerPoint at like, you know, your Christmas party or something. Free beef and cheddars for all. Yeah, there you go. New sale on Tesla. The market would already be calculating this false talk from Trump. Well, yeah, the market's been trading out his news, right? So like his false talk was here. We have the biggest news ever coming out Monday. The market went up to 20,037, and then we sold out, and then the China thing pushed us up. We're definitely below 20,037. So we already pricing out his big talk. You can see right now. Tax deductible soap. Half price curly fries. I can be into that. We've renamed the national bird from bald eagle to glorious eagle. Show how glorious the United States is. Bald makes us sound weak. Wait, I'm late? Go ahead, where? Go ahead, what? What are you talking about?
Appear to have risen.
Oh, there we go. My bad.
We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments.
This seems like the world's most boring room. Like each one of these people in this room would be like somebody I would never invite to a party.
GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement.
Let me write on the screen.
Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment.
That's good.
The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022.
Which is different from 2020 when the labor market was a source of inflation.
To our 2% longer run goal. Total PCE prices rose
2.3%
over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey.
All they care about is how many cuts we're getting this year. That's all you want to listen for today.
Respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
That's good. That's good for the upside.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine.
I'm in no trade, by the way, guys. I'm not trading through this.
Based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift.
Short-lived? Oh, he's reading his script.
It is also possible that the inflationary effects could instead be more
Is he
persistent.
nervous? Why would he say short-lived instead of short-lived?
On the size of the tariff effects,
He's
on
gulping
how
a
long
lot.
it takes for them to pass through fully into prices, and ultimately on keeping
He must have.
longer-term inflation
Is there like a red
expectations
dot on his
well
forehead
anchored.
or something? It's like somebody pressuring him to say all this. He looks nervous.
Inflation expectations well anchored.
He seems very nervous, like when he turned around earlier.
Level from becoming an ongoing
AI confirmed. Yeah, AI confirmed.
As we have to meet that obligation, we'll balance our maximum
Calls a robot.
and price stability.
You know, there's that
mandates,
commercial I get all the time
keeping in
that's
mind
like,
that without price stability,
I
we
stream
cannot
all of
achieve
my
the long
trades
periods of
live
strong
on
labor market
YouTube
conditions
and
that
Twitch.
benefit
You hear
all
that?
Americans.
They say live instead of live.
We may
Get that
find
commercial.
ourselves in the challenging scenario in which our dual mandate goals are in tension.
He's
If
probably
that were
mad
to
at
occur,
Trump.
we
Trumpito.
would
Yeah,
consider how far
He's an
the
algo.
economy is from
Powell
each goal
confirmed his AI.
and the
You knew it.
potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week.
These sound like very boring parties.
Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our
It's interesting to see the
goal,
stock market's
and keeping
responding
longer-term inflation
positively.
expectations well anchored.
I guess
Our
it's kind of a
success in
neutral
delivering on these
move.
goals matters
We're
to
back to
all
where we started
Americans.
before the announcement.
We
So
understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
we basically walked back to where we started.
Steve Leisman, CNBC.
This
Thank
is
you,
all
Mr.
that
Chair, for
matters
taking my
today, guys.
question. A lot has happened since
on, boy,
the last
Leisman, let's
meeting.
go,
There's been
dude.
Tariffs put
Let's
on,
hear it.
tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well,
That's a good way to answer
as
that
we noted
question.
in
Ask that
our,
question.
in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what
Higher
we can say.
unemployment, not higher
I don't think we
employment.
can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the
You appreciate how I
implications
break
for
down the news
economy,
related to
for
charts?
growth,
Yeah,
and
man.
For employment. I think it's too early to
All you
know
care
that.
to see is
So,
if we get the July rate cut, which is what futures are pricing in a July rate cut.
To stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee
Timing,
would be comfortable to
July,
act on
long term.
what the
Leisman
data
knows how
says.
to ask the question the right
I don't
way.
think we know. I think
Timing.
if you look where we are today. We have an economy that, if you look through,
Man, Leisman's wording it right to
the
get
sort
a
of
good answer out of
distortions
Powell. I
in-
like
in
that. That's a
Q1
good
GDP,
question.
You've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what
He's
should
not
be the
going
monetary
to answer the
policy response.
question.
Nick.
Somebody say July. Just say July, guys.
Nick Timmerose of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks. But there are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago.
Why does this guy keep
Labor
looking
demand
down
appears
at the mic like it's a hot dog?
wage growth running below 4%.
Oh, he must be reading something.
What do you see right now that could nourish
He's gone,
higher inflation beyond a rise in goods prices this year?
He's just reading his script.
I think the underlying inflation
The Fed
picture
whisperer.
is good. It's what you
He said
see,
data instead
which
of
is
data. How
inflation
dare
now
he?
running
How
a
dare he
bit
say
above
that?
2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is, but there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are
So right now
are-
the
are
market is
fairly low,
pricing
we
in
think.
rate cuts, right? We're not
so
going
that's what we're doing.
to, stocks
And,
aren't going to
we'll
collapse if there's a
see,
rate cut in 2025. That's enough to at least give us a flat market through the tariff negotiations.
Over tariffs, we'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that?
Oh, they made his mic sound better. His
could the
mic was
outlook
sounding
change in
awful, like it
such
was
a way
picking up
that
the
a change in your stance could
background
be
audio,
warranted
like a,
as soon as your next meeting?
yeah, his mic turned off.
As I said, we are
It's all posits and
comfortable
all.
with our
Yep.
policy stance. We think we're in the right place to wait and see.
He's just
how
answering
things
by not
evolve.
answering, and he's
We
got a
don't
habit
feel
of
like we
doing
need
that.
to
He's
be in
not
a
going to
hurry.
say
We
anything
feel
because he
like
knows it's going to
appropriate
affect the
be
market.
patient. And when things develop,
Somebody just needs to come out and
first,
say,
we
what's
have
the
a record
probability of a
of-
July
we
rate
can
cut,
move
and Powell
quickly
needs
when
to
that's
balk on that
appropriate.
question and just
But
piss
we
off
think
Wall
right
Street.
now, the appropriate thing
We
to
gotta
do
wait to
is
see
wait and see
what
how
happens with
things
the
evolve.
tariffs.
There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just.
But yeah, no
is just
shorting this, not
waiting to
even
see
longing
how
this year. That was a
developments play out,
hedge treasury was a
and
pivot to
then we'll
long
be
from, but
able
still,
to
I
make
don't
a
believe it
better
was what Trump
assessment
said that
of
it's
what the
worth
appropriate path
buying a dip and
monetary
rallying
policy
from.
is.
I wouldn't be
So we're not in that
surprised
place, and,
if we
as
drop
that
for the rest of the day.
develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So to go through 2024 up to the day, we've had unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now.
This is the compliment sandwich. Where's the bad side?
What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our
Past July?
thinking, we would never
Past
we would
July?
never do anything.
How
to keep
long?
achieving
How long
those
of a
goals,
delay?
But we would, at least for the next.
How far out?
Let's say year, we would not
Year?
be making progress toward those goals. Again, if that is
What
if
date?
that's the
Give-
way the
give me-
tariffs
give me
shake
time.
out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think
Just
you
pick
can
it.
look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019,
just say July.
we did cut
Say
3
July.
times, but the situation was you had a weakening economy and you had inflation at 1.6%.
Oh, he knows. They ain't cutting shit.
So
He
that's the
knows. He's ain't
situation
saying
where
it.
You can move preemptively. Now we have.
You know, my boy Powell
inflation
knows. He
running
knows what
above
he's doing.
target. It has been above target for 4 years. It's not so far above target now, and we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you
Traders
look
have
at what
priced in a rate
forecasters
cut in
are, they're all
July. That's what
forecasting
the market's
an
priced
increase
in.
inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the
Tariffs.
data will be until we
Tariffs.
see more data.
Tariffs and Trump. Tariffs and Trump.
Sophie Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain
that's not gonna change the
number
rates.
of negative monthly job
That's fine.
reports? I mean, how are you making that assessment?
Inflation only, that's all.
First of all, we don't see that yet, right?
Of
We
the
have
four
4.2%
things, yeah, you're not going to see inflation,
participation,
unemployment at all
wages
yet.
behaving very well.
That comes at the end of the
Participation, I
recession.
mentioned, at a good level. So, with the labor market, we would look at the totality
Of the four things,
data.
just
We'd
straight
look
up
at the
inflation, that's it.
Level of the unemployment
Says-
rate, we look at the speed with which it's changing.
Where's my
We would look at the whole
financial juice?
huge array of labor market data to
Traders
to
are
get
still
a sense of
pricing.
whether
Oh, wait, hold on.
conditions are really deteriorating or not.
Oh,
And,
this is just.
and at the same time, we'd be
This
looking
is
at
just
the other
the
side of
normal.
the mandate. We could be in a position of having to balance those two things.
They
which
won't make
is,
any
of course, a
progress if
very-
tariffs stay. Yeah,
a
we get
difficult
that.
balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy
I think
is
the
from
market's coming
each
down
goal
today.
and the time it would take to kind of get
Wall
back
Street's
to
gonna
that
not
point.
like that
But
Powell's
what does that mean
balking
in
and acting
practice?
nervous.
I mean,
He's
how much of
nervous
that
as shit.
assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals.
It's all about inflation. Nothing else is going to happen. You won't have unemployment until after recession is hit. Companies are laying off. So that's not, of all the four tenets, they say it's all inflation. It's all tariffs, 100%, nothing else.
We haven't faced that question in a very long time.
GDP is directly related to tariffs. Unemployment is directly related to tariffs. Everything else in the economy is stellar with the exception of tariffs.
We face today, and we may never face it, but we have to be keeping it in our thinking now.
July? Come on, bro. Just say it. What about July?
Thank
Traders
you.
are still pricing in
Edward
3 rate
Lawrence
cuts
with, Fox Business.
this year, once in July.
So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under.
Come on, Eddie.
So
You hit the
given
question
this,
right.
Should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize
Daddy's
this
puts
is-
want to
this
hear the
is
right
why we
answer.
are where we are is, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't.
That's
And
bad.
we just don't know until we
We're not
know
going
more
to,
about
market is not going to like hearing
how
that there are
this is going
cases where they
to
won't cut
settle out.
rates. We've
And
already
what
priced
the
in rate
economic
cuts.
implications are for employment, for
Yeah, we're not in that situation yet. There we go. That's it. That's the news.
I couldn't confidently say that I know what the appropriate path will be.
So following on that, just, so then how does...
It was an honor
President
playing
Trump
with you
calling on
boys.
personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're
And
going
scene.
to use our tools to foster maximum employment and price stability for the benefit of the American
Come on, y'all,
people.
I'll
We're always
Titanic.
going to consider only the economic data, the outlook,
Am I really that buff?
balance of
My
risks,
thumbnail?
and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Hi, Howard Schneider with Reuters, and thanks for the time.
Maybe.
I mean, given the
bit.
complexity about the first quarter GDP.
I'll work
and
out
what lies
sometimes.
ahead, I'm just wondering what your intuition tells you
Wait,
about the
have you guys seen my
underlying
diploma
direction of
over
the
here?
economy right now. Many of your colleagues have said they feel growth is
I hurt
slowing. If so, do you have any sense of by how
Smart and
much,
buff.
to what degree
No,
the
stop.
slowdown may be? What does
Ow,
your gut tell
dude.
you about how things are
I
evolving?
hurt my
out
arm
there?
doing that. Yeah, Wall Street's not going to like
gut
that.
tells me that
Powell's balking, and
uncertainty about the path
the
of
fact
the
that there are
economy is
cases where there will be no
extremely
rate cuts this year, that's the bad news.
And that the downside risks
So.
have increased. The risk.
You guys
is-
want y'all want to know a
in our
trick?
Statement, the risks of.
All my dudes out there, my dudes and dudettes who like to work out, you want a trick? You want, if you want good-looking arms, the trick is good-looking triceps. That's the way to do it. Shoulders and biceps, yeah, but triceps are really what give you that cool-looking look. You want like a good tricep? That's where your shirt pops out on the side. That's really what people see. People don't see this part here. They see that.
And the right
Want
thing
good
to do
triceps?
is
Do
await
some
further
yoga.
clarity. And there's
Yoga will get
Usually
you
things clarify
triceps for days, man.
and the appropriate direction becomes clear. That's what usually
That's the
happens.
trick.
Right now,
I go like twice
it's
a
very
week.
hard to say what that would be. In the meantime, the economy is doing
Because you do
fine.
those, you do like
Our policy
the
isn't,
tricep
it's
push-ups
not
all the time.
Highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was
Upper dog
in,
ski.
last summer.
No,
So
no
we think
shorts.
it's
No,
a-
no,
we think
no.
it's a
I'm
good
not.
place, and
Again,
we
this
think
is
the
not really that
appropriate thing is
tradable.
just for
He's
us
not
to
really
wait and see
dumping
that
bad news, but
we get more
basically traders aren't going to like
clarity
that he's not
about
giving
the
anything
direction of
good.
the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely.
That like looks
the
like
last
John
time
Lithgow.
around, there was a lot of, negative stuff, negative sentiment that was in there.
Third
And
rock
I
from the
know
sun.
that everybody's looking at soft data right now. You mentioned it yourself that the
Could be like a
sentiment's
distant cousin of
sour.
his.
But the Beige Book was talking
True
about
classic
the
t-shirts
billions of layoffs
accentuate
in
the
some
arms very well.
industries,
I
prices
didn't know that.
rising in some places.
The
And
trick is
a
to
lot
switch
of
hands, ask
investment
Victor. He knows.
decisions
Oh, it's so
being-
funny.
being pushed to the sideline. Doesn't
Try as
that
more working out, but
point
when you
to
work out, you also do
slowdown?
the same time, 2 for 1.
It may well. It just hasn't shown up yet. And
Yeah, dude. Like I've been doing yoga for like 12 years now. I work out. I usually do fitness training like 2 or 3 times a week, and I do yoga like twice a week.
Better feel, and businesses
You'll get
and
shoulders,
households
you'll get
very
tries,
broadly
and you'll get
are-
core.
Are concerned
And your quads, dude. Yoga is a big quad workout because you're doing like that. You're just standing still, like with your, like in a pose, and you're just like your legs are shaking. It's pretty good. My best buddy's a yoga teacher. He has the hardest class in town, and it's hard as shit. And I go every Wednesday, so I'm going today.
And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will.
My dude is like
that will change
circus
that
level
narrative.
yoga
Maybe they
performer.
haven't
He can do like
happened yet,
one-handed
but it's possible
handstands
to
and
imagine
stuff.
things that- but
It's
in
incredible.
the
I'm like,
meantime,
maybe
yes,
one day
we're
I can.
watching it extremely carefully, like everyone
One day I can
is,
get that good, but
don't see really much
walk on
evidence
his
of it
hands
in
kind of thing.
actual
My dude is like
economic
really
data
strong.
yet. And by the way, consumers keep spending, credit card spending.
Him and his wife are
It's,
both yoga teachers.
it's still a healthy economy.
Ryan, your wife does a bar studio? Oh yeah, dude, I heard that bar studio is nuts. It's like the ballet inspired
and businesses.
fitness thing. Smallest shirts is a life hack? I've never heard of it.
Michael McKee from Bloomberg Radio and Television.
You're not homophobic, kind of
The Fed's
sus.
been
Yeah,
criticized recently by a former governor for what he calls
We
you take on more problems, use more tools.
I got into it a long time
building
ago
tools to deal
because
with the
a girl I was
fallout of
dating
those
dragged me
tools,
into it.
which then makes it
And I
a
thought it
given
sounded
that you will
stupid, and I
act
thot it
more
sounded like it was for
aggressively in the
girls
future. Is that a
at the
fair
time.
critique, and is
And I was
that
like,
something you
nah, I
would
don't
be
want to do it.
looking
But then I
at,
went and I did it,
in
and like
your
5
framework
minutes in, I
review?
was about
Sorry,
to
say
throw
the
up because I
critique
couldn't.
again?
I thought I was strong, and I thought I was in shape. That's the one thing I did that reminded me I wasn't like at all in shape. So I decided to stick with it to like beat it as a personal goal. I'm like, all right, I'm going to finish the class. And then as I started working, I started realizing it was like really shaping me out. And I was like, damn, this is good to add to it. And I found out that like essentially I became like I can run faster.
Went beyond the narrow
I can run a mile a whole lot faster ever since I'm doing yoga because I'm more limber and more strong at the same time.
Look, I would say
Less body weight, less body mass.
Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different.
We should do a rocket trip, book one meeting, write all for taxes. Hell yeah. We all want to go.
We did think we were
Where
explaining
you guys want to go?
in real time. I completely accept the
Shit, I
thought
forgot
that
to
we
eat my
could have
lunch.
explained it better.
My meatballs.
There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT. And, we're down a couple of trillion, but I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right.
Who cares about these questions? Get to what we want to know.
It's we knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing. And
So I think the idea that we're not getting any handouts from Powell is going to really lean us back on the probability that Trump is not going to solve the China tariff issue anytime soon.
And trying to ensure that certain groups are
He's scared of him. You think so?
by your,
South Beach
economic
Pose down the
policies
works.
in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done
Climate?
very
What?
little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy.
Climate? Like climate change?
We have very, very narrow things. We
talking about
one thing,
economic
one
climate,
guidance,
political climate. What's he talking about?
for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it.
Why would you
And
waste your
dropped
question on
the-
something so
the
stupid?
network of green, the financial system.
Bro, you could have done so much, like
we
asking
didn't-
about
we didn't
July's
do
rate
much on-
cuts.
on climate, but I do think, and I've said
Oh
this
my God.
publicly several times.
Got Leonardo
I think
DiCaprio's
it's a real
fat older
danger
brother
for us
here
to
talking about
try to
climate
take
change.
on a
Jesus
mandate
Christ,
like
come
that,
on.
Which is very narrow application to our
Wasting our
work.
time,
And,
bro.
You know, the risk is if you go for things that are really not on your mandate, you know, then why are you
The
independent?
climate,
And I think
the
that's a
climate
very
comment
fair
gave us the
question. I
biggest
do
bump
think
we've had,
we've
though.
done
So
a
maybe
whole lot
maybe
less
that's
on
what Wall Street
climate
is
than
like.
Some people seem to think
Okay
we
with
did.
that.
Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. You know, what we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant
This
by
is
that
what
was
happens
we're
when you
gonna
get to ask your
consider the
question last. You
totality
get
of-
like the dumb
of
questions.
the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, you know, wanted to hear it that way, but that's not at all what we meant. So that's just not a correct reading of our. But
This is why I don't usually trade unless I get something solid. Stocks are still doing okay today, which is good. I've executed no futures trades since
Hi,
I've been
Chair
sitting
Powell.
here.
Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here.
You think he
and
goes
there's
to
no
the bar
wait
after
and
this?
see.
Yeah, probably.
For Main Street, what is the
I would think
breaking
Powell's got a
point? What
bottle
would
of
have to
whiskey in his
happen
desk to have this
to
kind of job.
prompt a rate cut specifically?
Well, you know, so we really don't see in the data yet big economic effects. We see,
I'm surprised
we
that we're
see
actually
their
rallying off of
sentiment,
this.
their concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the you know, a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so you know, we're going to be looking at the not just the sentiment data, but also the real economic data.
That was
as
rough
we
right here. That's
assess
interesting
what
to
it
see.
is we
I think
should
the
do.
market's
And
just
remember,
noisy at
there'll
this
be
point. I don't
two
think we're going to
effects.
get any
One of
move.
them would be weakening economy, weakening economic activity.
Shut off the
which
upper band?
translates
No.
into higher unemployment.
Not yet.
And the other would be potentially higher inflation.
So I tell you why I'm waiting. I'm just
Say
going
it
to wait.
again,
Nothing looks good yet.
The timing, the scope, the scale.
All
and
the
persistence
indicators
of
have
those
slipped
effects are
positive. Everything
very,
looks
very
moved up pretty
uncertain.
quick. I
So
think the market's
it's
just going to be
not
noisy.
at all clear what the appropriate response for monetary policy is at this
I would be
time.
so
And
shocked
we're-
if we
you know,
rallied.
And by the way, our policy's in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is
An
we should
AMHP
do.
bounce is very
So,
silly, yeah.
People are feeling stress and concern, but unemployment hasn't gone up.
I wouldn't
Job
try to-
creation is fine. Wages are in good shape. You know, people are not getting laid off at high levels. You know, initial claims for unemployment are not increasing, you know, in any kind of impressive way. So the economy itself is still, you know, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Ooh.
Hi, thank you. Chris Rugaber.
Boy,
Associated
oh
Press.
boy. Dude, he
well, I
is
just wanted to follow up.
terrified
Earlier,
of
it sounded
Trump.
like
Oh my
you,
God. Look at just the
said
mention of the
it was
name.
unclear how the Fed, you know, what kind of
Yikes.
interest rate decisions you will make later this year. So does that, you know, in March, there was guidance that 2 cuts might happen. You know, 2 cuts were penciled
That
in
was
for
the
this year.
world's
Is
most
that
awkward
now,
silence.
That guidance from the last press conference, has that been overtaken?
Trump is a
by events
gangster, yeah.
At this point?
You know, we don't do a summary of economic projections at every meeting, as you know.
I
We do it every other
honestly,
meeting,
knowing
so
this
was
market,
the
not
meeting
really
when we didn't
responding any
do it.
amount to it. Watch we get like a
And
big ass green candle.
You know, we
that
don't
just,
also
bumps
kind of
out there.
hold
I wouldn't be
people.
trying
So
to short
I really,
this
I really
period
wouldn't want to
up
try
from
to
here.
make a specific
Wall Street's not
projection
responding
for where we are
anything other than
relative to
pivoting
that.
inside
We
of the
will-
ranges.
In 6
So
weeks, we had the June meeting, and you'll
all your
have
stock
another
data just went
S&P. I'm not
positive.
gonna
So everything's looking
hazard
clean
a-
here.
a,
DD's good. Data's
a guess
good.
here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think
You
it
scared
leaves
of
us
Trump making his
well-positioned
job
to
harder?
respond in
Yeah,
a
maybe
timely
so.
way to potential developments. That's where we are. And that, depending on the way things play out.
After all
that
this
could
stress he
include
goes
rate
through, I'm
hikes-
impressed
sorry,
that Powell still
rate
got a
cuts.
pretty solid looking hairline, though.
You know, we could include us, could include.
I don't know if I
us
had that
holding
job,
where
I'd be
we are.
bald in a month.
We just are going to need to see, you know, how things play out before we make those decisions.
Great, and just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle
They're
those
asynchronous,
challenges?
dude.
You
They
just
don't.
captured this is the issue with
They don't-
the two goals being intentional.
They're not
It's
going
a
to be
very
like directly
challenging
affecting each other. There's a
question. Now,
delay
there
between
can be a
rate cuts
case in
and
which
and
one goal
employment.
is very far. One variable is very far from its goal, much farther than the other. And if so, you concentrate on that one.
Just
And
listen
frankly, that was
more.
the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022,
Rate
it was
cuts
very
has a
clear
trickle-down
that we
effect
needed
that
to
would
focus on
very
inflation. The labor market
suddenly
was also
affect employment
super
suddenly.
tight, so it wasn't.
It'd take a long time to curb employment around.
You know, if I think you know what our
I mean,
framework
I don't even
document
have a
says. It
degree in
says we'll
economics,
look
and I
at
can
how
know this.
far
Why do people
each
ask
goal-
these weird
each
questions?
variable is from its goal, and also we'll factor in.
Kind
the
of jealous of the
time it will
hairline.
take
Yeah,
to
I know,
get there.
right?
So, you know,
He's kept it
that's
good.
going to be potentially a very difficult judgment, but the data could break in a way that it's not. You know, I just don't think we know that. The data could easily favor one or the other, and right now there's
What do I
no
wanna do right now?
no need to make a choice, and no real basis for doing so.
Victoria.
Everything still tells me down, and I don't know
Hi,
why.
Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
You know, we don't give Congress fiscal advice. They're going to do. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path. And it's on Congress to figure out how
Shots fired.
How to get us back on a sustainable path, and it's not up to us.
This
to give
tie is
advice.
purple. Oh shit! What does purple tie mean? Was that up?
Take macroeconomic
Wait, wait.
conditions into account. as
Well,
they
blue.
look
Wait,
at
what
this.
was it? Purple tie up or purple tie down? Which one is it?
My advice and our advice on how to do fiscal policy any more than we need their advice. on
Purple
monetary.
has 2 syllables. 2 is greater than 1. 2 means up.
Andrew.
Purple tie means up. Oh yeah, that's right.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risk to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less.
We're not going to get any
you're at 4.2%
information about rate cuts or
unemployment.
nothing. I don't
I think we were in a very different situation.
He's going to be like
Now
he
we have a
always is, just
situation
quiet.
where, you know, the
avoid the
risks to
topic.
higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I mean, I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say
But I think it's
we
like,
have to now be
you
looking
know,
at both variables and which of them is
Unemployment's going to not go up
demanding
quicker
one of
than
them
the
is
Fed's going to
demanding
act.
our
Like the
focus
Fed is
more
going to
than
act
the other,
before any of that.
That would tell us what to do with policy.
Unemployment
If
usually
they're more or
comes after
less,
people get laid off after companies have been
equally
suffering for a while.
distant and equally, or not distant, then we don't have to make that assessment.
Honestly, guys, I feel
You know,
like
the assessment is you wait. So
I feel like while the
I'm not
market's
gonna
picked
try
up
to
a
be
bit
really
here,
specific
I
about what we
still
need to see in
feel
terms of a number, but if we did see
that Wall Street's not going to like the fact that Trump is
deterioration in
not.
the labor market, of course, that's one of our two variables, and we would look to be able to support that. You'd hope
And
that it
take
wasn't
off the
also
tariffs
coming
off
at
the
a time
table.
when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, we had coming out of the
He
March
talks
meeting,
once a month, Joseph. Once a month, there's a press
where
conference
tariffs were
and
going in. April 2
an interest rate
happened, and it
decision they
was
come out
really
with. It's all on the same day. It's a
substantially
Wednesday.
larger
So
than
4 Wednesdays from now.
anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data.
Volume
We
is
see the
just
shipping
absolutely
data, we
dying
see
in the
all that,
market.
but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again.
I don't think we're going to get any movement.
Beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Bad about mothers, right? Yeah, tariffs are causing too much uncertainty for Powell to say anything with confidence.
The volume of imported
He's already given he's got a meter all day today, pretty much, yeah.
In the first quarter.
Standoffish, no action,
this
nothing.
Could cause a delay in the impact of tariff on inflation. And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decisions. So the volume of the imports, imported goods increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that the
I'm bored. Come on. Do something, Margaret.
There was a big spike in imports, right? Very big, historically.
Stock data stabilized after this one little bump here. There's no, we're basically back to where we started, slightly higher.
So that it's the difference.
I thought the market would have a little bit more
exports minus imports. So
hatred towards Trump's comments more than Powell's.
So that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of the first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher.
It's going to drop,
yeah,
probably after the
those
press
data
conference.
Revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to, I don't think it's going to affect our decisions. I will just say, though, that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal.
Top Step is launching a brokerage.
Confusing, but I think we understand what's going on. It's not really going to change things for us.
We already knew that was happening.
Courtney Brown from Axios. I guess,
we
talked about some of the
back in the day.
indications of potential layoffs, price hikes.
The Top Step is starting a brokerage. We all knew that's going to happen. What a better way for a prop firm to exist and also make commissions off of their customers, you know what I mean?
Translate into hard data to
he's not going to say anything. We know he's not going to say anything.
Monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economy. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is, we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where
there's still no volatility on this, so it's interesting to see that the market just isn't going anywhere.
The hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and
Top Step can't make money trading, so the commissions will help.
It's not been a strong link.
They got to replenish the house account.
On the other hand, we haven't
shots
had
fired.
a move
Shots
of
fired.
This, speed and size.
I remember
So
their statement was, "We're
it wouldn't
okay
be
that the
case
house
that
account's
we're
losing
looking at
money.
this
We're all
and just
learning
completely
together,"
dismissing
something
it.
like that.
But it's another reason to wait and see. You're right, though, we had
Somebody
a couple of
posted the Top Step is hired. I saw something on Twitter where somebody wrote that there was a picture of somebody who was employed at Top Step as director of brokerage services.
This is an
It was on their LinkedIn.
change in sentiment, though, and so none of us is looking at this and saying that
Sage
we're
Sage
sure
tweeted
one
it.
way or the other. We're not.
Matt.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have,
Yeah, they
the
posted a
kind of
picture of
tools
somebody's
that are
LinkedIn.
good at dealing with supply chain problems. We don't have that at all. That's a job.
Who was
for the
director of brokerage
administration
services
and
at
for the private
Topstat.
sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else, and right now we see inflation kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night, and this is a challenging situation, and that's 100% of our focus right now.
Let's go to Jennifer for the last question. Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump.
Dang, he doesn't want to talk about himself at all.
Obama, Bush, and Clinton have all met
Stone-
with Fed chairs.
Stone
and you
Cold
met with Trump during his first term. Why
Steve
haven't you asked
Paulson.
for a meeting yet with the president?
You don't want to say
Never
anything
asked for a
about
meeting with any
anything
president, and I never
related
will.
to his
It's
employment
not-
to Trump
I
and nothing.
wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you
I'm
want
still
to
here,
meet
man.
with him if given the opportunity to get more information?
It's never.
You could listen to her talk all day. Yeah, I could too.
I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
I'm bored. I'm bored. What an inspirational sound. Thank you for joining. Today's FOMC press conference is brought to you by the number 12 in the color green. Thank you for tuning in. We'll see y'all tomorrow. I can't believe I've streamed this long. This is the longest stream I think I've had. Going straight through Fed. Oh well. What's the setup? Nah, man, nothing. I don't know. I do feel like this can sell off today. I think the market off of Powell's commentary, nothing. We're back to where we started before the announcement, but off of Trump's commentary, that we probably could experience a little bit of, like I said, I'm scared along this from here. On the thought that we're not going to get a quick resolve in Geneva when we talk with China. Trump's saying 145 is still on the table, and he's not going to reduce it. So that sounds like a stalemate in negotiations. It's very peculiar to see the market responding like that doesn't mean anything. Like the market is a lot less... like the movement was initial to the downside off of that, but the market seems to not create any momentum. There are people that are just like, fuck it, they're going to work it out. We'll stay long. So I don't think anything to come of it. I'm not betting on the short side. I'm not betting on the long side. I'm just kind of waiting. Oh, shoot, class today? All right, I kept you guys way too long. Let's take the afternoon off. Let's do boot camp tomorrow. We've been here all day. I'm kind of tired. I need to eat my meatballs. Trump is talking with China. You want some pho? That sounds actually pretty good right now. So low volume, not that much participation is not allowing the market to pick any significant swings. All indicators are to the upside, at least for now. It looks like all the stocks are doing okay. So the market has recovered any selling pressure from the Fed. Chopped around for a little bit, but I don't see anything else coming through the pipeline that's looking bad unless there's an end of the day movement or something. We've kind of just spanned through. We're in this no man's land on liquidity map, so I'm not doing any trades. I don't do any trading down inside of here for the most part. Looks like we're still pricing in, since we didn't crash on collapse today. People are still pricing in the potential for a quick resolve on the trade war, which is what this line was all about. Are we still going to get a couple of rate cuts? It looks like Wall Street is fairly certain, from Powell's lack of saying anything, that it's all depends on Trump. And if they're still betting on rate cuts, then they're really betting on Trump fixing things. So the question is Trump just going to buckle sometime this year? And will it be before the summer? And July's only 2 months away. I think they work it out in 2 months. If there's a resolve, it won't take more than 2 months to come across. It'll take a month of back and forth in maximum. Either we'll know within a month or not if they're going to work it out. Those tariffs would not be good for the economy. That would be really bad for everybody. No tariffs, rate cuts. Yes, tariffs, no rate cuts. You're optimistic. Last time it took how long? Well, yeah, it took a long time last time. But sorry, let me say this again. Not that they're going to solve it in a month. I said we'll know in a month if it's unsolvable or not. We'll know very rapidly if it's going to be drawn out for years or not. We're not, it's like the variable is that, are they going to be able to resolve it quickly or no? If they're going to be able to resolve it quickly, it's going to be done soon. But we'll know very soon if it's going to be drawn out for a year. That's what I meant to say. Why are the tariffs good for other countries, not for the U.S.? Because U.S. imports a lot of goods and exports a lot of labor. Like we basically have other people make stuff that we import in so that we can run our businesses on. And if our business owners here solely are, a lot of them are requiring cheap foreign goods to stay afloat, because that's how, all the businesses a lot of them are structured, And so tariffs are going to make it really hard for a lot of companies to turn a profit here. I don't know how that would affect the other countries as much, though. I don't know. I don't know about Canada. I'm not sure. How do you know the exact QQQ level? I'm just estimating, JJ. I don't know exact. I'm just guessing. I do a quick conversion about how far away it is. Like this one is about 1.7 points QQQ away. So 1.7 times 40 is 68. So I do 68 on top of this is roughly 111. And that's why it's there. The purpose of tariffs in your is the incentive to do production in your country. That's all. Right. To produce and hire people in your own country and produce in your own country and kind of create like an internal infrastructure. Time for a giveaway. Time for a nap. I don't know. What do you guys think? Are we crashing in the close? Are we going to rally the close? Are we going to hold the fort? The market is surprisingly resilient right here. So no effect. Powell and the rate decision had no effect on the market today. Now everything's riding back on Trump again. His big announcement for Monday. Which platform is 90% off? Today, none of them. None of them today. Up to 90% off, some of them. Sometimes Apex and ETF have 90% off sales. Right now, Tradeify has a good one. It's 40% off your first account. Your first time making an account with them. And then, what's wrong with Shovel and Coal? Nothing. Ain't nothing wrong. It reminds me of that. What's that song? You guys play Fallout? The company store song? You guys remember that song? It's that old song. Let's see the lyrics of that. You go 16 tons, and what do you get? Another day older and cheaper in debt. St. Peter, don't you call me, cause I can't go. I owe my soul to the company store. Did I watch the Fallout series? Oh god, it was so good. So good. It was good as like a standalone show, even if you weren't a fan of the games. And, you know, it did really good fan service to the game fans, but it, just as a standalone show, if you never even played the games, it's a pretty damn good show. Great old song. Oh yeah. I heard that song a million times. I played every Fallout game for like hundreds of hours, thousands of hours, I'm sure each. Christoph, we'll see you. Yeah, no, let me tell everybody, we'll take the day off today because we streamed all day, man. I'm so tired. Yeah, I'll take a day off. Oh, well, hello. Market pulling back again. Well, that's what we thought was going to happen. Let's see how this closes out, though. All right, resilience just now lost on NASDAQ. Tech stops plunging. Okay. Google just, man. What happened to Google today? Apple today as well, middle of the day. I wasn't even paying attention to a lot of them today. I didn't see the new GTA 6 trailer, not yet. All right, guys, I'm going to call it. Doing my lunch. Good luck today. We'll see you in the morning. Don't forget to sub to the channel Rocket Scooter. Love you guys. I'm going to go eat my meatballs.
Market spinning in chaotic haze. Rocket scooter blast through the maze. Volume prediction shows the way. Leave the doubt and the fray. Liquidity map paints the scene. Hidden nodes like ghosts unseen. Reverse engineered, see the light.
See y'all bright and early in the morning. Thanks for sticking with us all day. This was fun.